of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the dirty little secrets of credit. As long as the borrower is worth more than the loan, don't pay, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Or other authorities
could face bigger challenges next.
Fed was going to keep rating World Cup. This is a three.
As the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Well, suffice to say, traders are gearing up across the world to take on wild market swings on U.S. election night. That's the subject of today's Big Take, and Avril has more on this. It does seem like, it is brace, brace, vol.
Yeah, I think that is certainly what traders are gearing up for. I mean, what else can they do except to kind of embrace what could be a really wild night? I mean, we were having this conversation earlier on in the program about how the positioning in the markets now is really so-called Trump trade. So whether you're looking at stocks, bonds, dollar, gold, am I missing anything? Crypto, they're all bracing in that direction despite some of the unwinding that we're seeing today. So, it's really about how quickly traders are going to be able to either pile in on those bets further or unwind them as the night progresses, or maybe days or weeks go on. And we hear from the Big Take, right, that our Bloomberg Newsroom colleagues have been putting together today, showing us how the likes of JP Morgan, they are getting ready to increase staffing from Europe to Asia. It's really an all hands on deck kind of situation. Goldman Sachs, I think, is getting some of its sales and trading desk members on standby, ready to be deployed if needed. So this is what we're seeing.
Well, some say that it is mud wrestling blindfolded. Oh my God, really? But what are the scenarios they're actually preparing for?
Yeah, there are a number of permutations that I think the modeling has already shown, but the one that I think is the most concerning for markets is if we see an uncalled election. You remember how, given this time around, the Fed decision is coming 2 days after polls close. The longer this drags on, the more uncertain it is to perhaps decipher what exactly is moving the market. So that's going to be a key concern. And then, of course, you also have traders kind of bracing for the risk, however remote, that we see civic violence. So these are the concerns for market participants. And of course, if you think back to, say, 2016, as the results became clearer, we saw US futures crashing, then recovering. 2020, when the election was eventually called, we actually saw trading volume surging to 6-month highs. So against this backdrop, what we're really seeing is how stock markets have been pretty calm of late, but stock options volatility, that's been creeping higher. So it tells you what they're hedging for.
All right, Avril Hong, thank you. Before we go, here's a look at our guests for tomorrow. We'll get more market insights with JP Morgan's head of APAC Equity Research, James Sullivan. That is it. This is Bloomberg.
Where do you think the tech world is going? Is artificial intelligence going to eat up the rest of the tech world? And where do you think the future of technology is going in Silicon Valley and elsewhere over the next 5 or 10 years?
Well, I think that one thing we talk about when we talk about technology is we have this kind of monolithic idea of what it is, but actually technology is changing different industries at different paces in so many different ways. And if you think about the things, what was technology like 20 years ago, before the iPhone, for example, and where it is today, the ability to have, answers in your pocket. Gen AI is going to make it easier to access more information faster. How do we think about all those things, and where is that going to go beyond this? I actually am very bullish on technology because technology is an underpinning. It's not its own industry. It is a part of every industry, and it's actually going to increase productivity and actually make our lives better.
So do you think technology is still going to be centered in the United States, largely around the Silicon Valley area, or is it going to change?
I think that what's amazing about what technology has done over the last 20 years also is that, now you can start an app anywhere in the world. You can live anywhere. You can have, AWS, and you can set up and not have to have a system administrator or a server that you have to build. Now it's made it so much easier with these tools to actually look at a problem that you have and solve it anywhere. And so I actually think that distributes the ability for us to bring technology together any place.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Iran's supreme leader escalates his rhetoric on Israel, warning of a crushing response to his country's enemies, including the U.S. Oil advances after OPEC Plus agrees to push back its December production increase by 1 month. We are live at Abu Dhabi's ADIPEC later with the latest energy updates. A flurry of polls show Vice President Kamala Harris and former President Donald Trump in a close race, with Harris having a slight edge nationally and in some swing states. It has just gone 8 a.m. across the Emirates. I'm Joanna Versace, back in Dubai. Not for long. I will be heading over to Abu Dhabi shortly. But what a week. It is finally here. U.S. elections will be taking place tomorrow. It is very close. We will be talking more about that on the show, and also how markets have been reacting to the latest polls that have been released over the weekend. Not just U.S. elections. We also have the Fed meeting. It's on the Thursday this week to count for the U.S. elections results. So watch out for that as well. In addition to plenty of other decisions taking place this week, we have the Standing Committee of the NPC in China taking big decisions about what is going to happen to the country fiscally as well, and then the Bank of England meeting too to round things up later on this week. So lots to get through. As for markets, you can see behind me both S&P and Nasdaq are leaning towards the green, tilting towards a more positive start to the day. This despite the fact that the S&P witnessed its first pullback in 5 months for the month of October. Not a great month. And as we spoke about towards the end of the week last week, a lot of volatility towards the end of the week in those magnificent 7 stocks. By Friday, the market digested that quite shocking NFP print coming in much lower than expectations, looking through it due to some disruptions in weather, the strikes that are taking place. And we saw a bit of a rebound in Amazon and Intel, which gave some life back to these markets. But of course, we are heading into what could be quite a volatile week for U.S. equities. The USD is slipping this morning, down 0.2%. And namely, what some people are saying is that USD and yields, which are closed for trading now because it's a Japanese holiday, have been closely tracking the polls that have been putting Trump at a slight advantage. So the Trump trade, so to speak, has been stronger USD, higher yields. Given the latest polls of the weekend that show that now Harris has a slight advantage, what we are seeing is the dollar is slipping in trade early this morning. So that is in direct relation to what's been happening with those election polls. And then Brent also in focus today, up 1.6%. We are getting a bit of a boost. There are 2 things going on here. OPEC Plus have announced that they're pushing back their decision to put extra barrels back to the market by 1 month. So we'll no longer be starting beginning of December. The new plan is for them to start beginning of January. So that is a bit of a supply, a technical factor that is giving some boost to this market, in addition to geopolitical concerns once more, with Iran now threatening a reprisal to the Israel attack on Iran from last week. So we will talk more about that, but that's what's happening in oil today. Finally, I just want to draw your attention to our terminal chart today, talking about the Fed and what's priced in. The meeting is happening this Thursday, as I highlighted. 25 basis points priced in. There's about another sort of 20 basis points priced in for the December meeting as well. So just shy of 2 interest rate cuts priced in by the end of this year out of the Fed. But also, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, there's so much going on this week. But first, just give us an overview of how Asian markets are starting off this trading week.
Yeah, we're seeing stocks in the region mostly higher. It's not just about the Fed or the U.S. election. It's also, as you mentioned a short while ago, about China's NPC. And some see this week as a window for when Chinese authorities can announce stimulus in the fiscal sense, as well as market intervention. So stocks in China, CSI 300 running a bit higher, but it did close lower last week. We're seeing South Korea's Kospi, the outperformer, because not only are markets anticipating China's stimulus, there's also plan to drop capital gains tax on a day where Asia currencies are mostly clawing back declines from the US dollar. You see the yen is gaining ground as well. Part of this is because of the shift in tone from BOJ Governor Ueda last week, but also a bit of a rewinding or unwinding of the so-called Trump trade. Jumana.
Yep, that's exactly it, and what we're seeing in other markets as well. Avril Hong, thank you so much. Now, Iran's supreme leader escalates his rhetoric, warning of a crushing response to the country's enemies, including the U.S., following Israel's missile strike on the country a week ago. For more on this, Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, joins us now. So Iran now have actually started to warn of a reprisal to the Israeli attacks from a week ago. How seriously should we be taking this?
Yeah, quite. And I think it's what you read into it. So if you think about the 24 hours, 48 hours after that attack from Israel, they were quite circumspect and quite restrained, shall we say, particularly Khamenei. And Khamenei's got a long history of being very cautious here. But something has happened over the last week, and I think that speaks to divisions within Iran about just how they should respond, just as we see divisions within Israel about how hard they should have gone on that attack. So you've both sides seem to have different camps pushing it very much in the hawkish direction.
Yeah, it's super interesting. I do want to bring you some comments from the president, though, Pezeshkian, who's, I guess, considered to be one of the more moderate parts of leadership in Iran. But he said our response could change if there was a ceasefire in Gaza and Lebanon. And I thought it was interesting over the weekend, again, those revelations that some sensitive documents were supposedly released by Netanyahu's government that would actually foil attempts to get that ceasefire across the line. Again, how significant is that?
Yeah, again, I mean, I think it speaks to the divisions within the Israeli government and particularly the opposition. So obviously we don't know too much about it because a lot of it has a gag order on it. But of what we do know, I mean, it does seem to show, again, these sort of deep divisions within different officials within the government and what they want to do next. So I think going forward, yes, there is clearly one camp on both sides, that is Israel and Iran, that would like a peace deal. I think particularly from the Iranian point of view, it's so they can save face and not have to respond, because they are quite exposed at the moment, you know.
Does a Harris or a Trump win matter for the direction of the ceasefire?
Yeah, I mean, I think in the short term, probably not. In the long term, absolutely, because Trump is very much in that camp that we saw the last couple of administrations, where fundamentally they would like to get out of the Middle East. You know, they have bigger fish to fry elsewhere in the world, and they can't do both. But at least for the short term, I don't think it would change very much on the ground.
Yeah, it certainly appears to be the case. Stuart, thank you so much for the overview this morning. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Well, U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in opinion polls ahead of Election Day. A flurry of new surveys has them neck and neck nationally and across the battleground states that will decide the outcome. Let's bring in News Desk editor Jill Deeses. Jill, so what are the polls showing us about how close this race is right now?
Hey, Jumana. Well, as you said at the beginning of this program, markets are certainly sort of hedging their bets a little bit more on a Trump victory. That's because of some polling that came out of the weekend that was a little bit more favorable to Kamala Harris, the Democratic candidate here. But ultimately, I mean, these are still polls showing them really, really neck and neck. Harris got a bit of good news over the weekend in the form of some national polling showing her up, although, of course, this isn't really about the national polls. We know that in 2016, Hillary Clinton won the popular vote but lost in some critical battleground states that ultimately cost her the election. The favorability for Harris, though, does extend to some polling showing her a bit up in some of the key battleground states, but ultimately a lot of this is still within the margin of error, which was really just telling us that this is still ultimately a coin flip. We'll have to see what ultimately happens on Election Day. There's one other poll, though, that I want to point out to you, Jumana, that is getting a lot of attention from over the weekend. That's this really, really reliable poll coming out of Iowa that actually shows Kamala Harris up by 3 points. Not sure that she can actually take a state that is, voted for Trump twice, but it does kind of indicate that maybe, there's, a bit more of an advantage there than we're ultimately seeing in some other polling. But at the end of the day here, it still really is, it really feels like a 50-50 chance here. Either candidate could really take this race.
Yeah, I mean, back in 2020, Trump won Iowa by 9 points, I believe it was. So it is quite significant that she seems to be, according to the latest poll, gaining a bit of an advantage there. What are the final pushes that the candidates are making in a bid to appeal to perhaps the very small percentage of the population that remains undecided?
Yes, well, Jumana, as we were just talking about, I mean, again, this isn't really about the national vote here. This ultimately comes down to votes in just a handful of key battleground states that are going to decide this election. And both Kamala Harris and Donald Trump have been focusing their campaigns in those states. Kamala Harris just spent a day in Michigan, where she was ultimately trying to relay her economic message at several rallies here. She also was spending some time in Detroit at a historically black church, trying to appeal to black voters there. We've been seeing some black voters break more toward Trump recently, so she's trying to regain trust with those voters there. We saw Donald Trump in North Carolina, in Pennsylvania, in Georgia, all really important states here for this election right now. But yes, I mean, at this point, it does seem like the candidates are really, really, really focused on being in those states. We've got Kamala Harris in Pennsylvania tomorrow to ultimately kind of close out her campaign here. These candidates do recognize that no matter what's happening happening around the country. They need to focus their efforts within some states that can ultimately deliver them the election.
Yeah, it seems like all roads lead to Pennsylvania is my one key takeaway from this election going into tomorrow. It's going to be super tight. Jill, thank you so much for bringing us that report. That was Jill Desis, the news desk editor. Well, still ahead, hear why Tribeca Investment Partners thinks that election and tariff fears are overplayed as traders hedge their bets for either Harris or a Trump victory. This is Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, the dollar fell as investors walked back bets on Donald Trump winning the U.S. presidential election after the latest polling data indicated no clear advantage for him. So U.S. elections obviously in focus as the markets continue to piece together some of the data that's coming through over the course of the last few days. We have the Fed meeting coming up this Thursday, not Wednesday, Thursday this week due to the U.S. elections. And then, of course, we had that non-farm payroll print coming through on Friday. So to discuss all of this and more, let's bring in June Beilu, portfolio manager at Tribeca Investment Partners. June, let me just pick up on that rather surprising NFP print that came through on Friday, much lower than expectations. Clearly some weather disruptions at play due to the hurricane. You also had the Boeing effect with the walkout. But to what extent do you think are the Fed going to be willing to look through this piece of data?
Look, I think all the data are now very much supportive of further cuts, and I don't think one data point is going to change the way they think about where it's going. I think the market is very fair in terms of pricing another 2 cuts this year, and then more so next year. I think all in all together, it is certainly supportive of further easing, quite rapidly before the end of the year.
Do you see that this potentially moving the bar lower for a 50 basis point cut? Or again, as I just articulated, is it just deemed to be one of a one-off, one of those one-off situations due to those weather disruptions that I spoke about?
Yeah. Absolutely. Look, they will talk to the one-off nature of it. I think the cuts to come through, it will be 25 per cut in the future. But as an investor, it actually doesn't matter whether it's larger or smaller. All we know, they will consistently cut the rates to get to a point where the economy will respond, and that is positive for the economy and for the equity market.
Well, let's talk about the volatility going into this week. The VIX has been steadily creeping higher in anticipation of what could be really a toss-up result either way in U.S. elections. And there's been a so-called Trump trade that has done well over the course of the last few weeks. That's a stronger dollar, higher U.S. yields. Do you agree with that thesis? Is this the accurate representation of what the Trump trade should look like, do you think, for U.S. markets?
Look, I think based on what he has proposed, that it certainly seems like it will be quite inflationary. It will be, pro-business within America. It'll be tax cuts. So it's all positive, on the stimulus front. And, what that certainly means that perhaps inflation higher, the interest rate won't go low as previously expected, and hence why the U.S. dollar strength. So, I think that directionally, what the Trump trade, is taking place is correct. But I think the market needs to take a step back. Whether it's Trump, whether it's Kamala, it's it doesn't the historical example has shown the election outcome, unless there's policy impact, real economic policy impact, election has a small impact for the medium term. So we do expect the market to recover from whichever way it is, and we will look to the volatility as buying opportunity.
Yeah, well, to your point about the real economic impact, what if there is a mass imposition of tariffs, not just on products from China, but around the rest of the world as well, which is something that former President Donald Trump has touted. How would the reaction play out, do you think, on the ground? Are there any sectors that you're looking to avoid because of that scenario?
Sure. I think under that scenario, you absolutely will be very careful with the commodity-related businesses. Of course, this is more targeted towards China, but if around the world trade is going to be impacted, and that's negative for everyone. And with the big tariff, clearly it's bad for inflation as well, because goods prices are going to increase. It will be actually quite terrible for the consumer within US. Now, my view is that it's the whole tariff rhetoric is overplayed. Yes, he will pose threats, but I think looking at the previous example of where he talked about those tariffs, they have been rolled back significantly from where he first proposed. So, we do think while there might be more tariff, but the ultimate position will be much better, wind back from where we're thinking at the moment, which could be up to 50%.
Yeah. June, there's been a bit of a shakeout for the Magnificent Seven last week, and not so magnificent in the last couple of days of trading, down about 2% for the week, led by disappointing results out of Meta, Alphabet, Apple sales disappointing. We've spoken about this in the past, and you have signaled that you would look to buy and get involved on dips. Do you still have that view now, and how do you read the price action in Magnificent Seven in the last few days?
Yeah, absolutely. Look, I do like those businesses, particularly, we see this AI related growth is just at its infancy, not so much for the chip maker, but it's really filtering through the rest of the supply chain. We do think they look quite incredibly, interesting. I think for every portfolio, you need to have growth companies like one of those in the portfolio to ensure future-proof the growth profile of the entire portfolio. Near term, these names might be used as funding source to buy the cyclical names we talked about before, which will do better. But however, I would be looking at some of those businesses should they get sold off as a result of this rotation that will take place in the next 12 months.
And some people are talking about the prospects for small caps as well. If we are indeed in this no landing scenario for the U.S. economy, do you expect small caps to do well then?
Absolutely. I love this no landing scenario. Absolutely. Look, I think small cap businesses has been impacted enormously, and because of high interest rate, and now with the interest rate going lower, and economy not doing too badly, and with potentially this is a slight improvement in terms of sentiment. I think these company looks much cheaper than some of the larger or the Magnificent Seven that's being dominate the chart board.
Yeah. June, always a pleasure to talk to you. Thank you so much for coming on our show and giving us your views. June Beilu, Portfolio Manager at Tribeca Investment Partners. Thank you very much. Well, coming up, a seismic shift in Botswana. We discuss the significance of the opposition coalition winning the election next. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, let's turn to Botswana, where an opposition coalition has emerged as the surprise winner of the parliamentary elections. Duma Boko was sworn in as president after his coalition, the Umbrella for Democratic Change, secured an outright majority in the 61-seat legislature. It is the first time power has changed hands since independence almost, listen to this, 60 years ago. Wow. So for more, Bloomberg's Ondiro Ganga joins us from Kigali. Really surprising results here, Ondiro. And dare I say it, diamonds are not forever.
Absolutely, Jumana. They're not forever. And we have seen the new president, Duma Boko, take office. And unlike other places on the continent where for a victory this resounding, there had been pomp, color, red carpet rolled out, it was a very simple swearing-in ceremony in an office. And he gave quite an impassioned speech after he was sworn in. He acknowledged the current state of the country, saying he dare not fail and disappoint the people, saying he's going to do everything within his power to ensure that he delivers on the promises that his administration made while they were campaigning to get into office. He also put his human rights background into office, saying that he acknowledges that there are diverse views in the countries, which he welcomes, and says that he wants the citizenry to support and rage to keep the politicians alert. We also saw the outgoing president do a press conference immediately. It was clear that they were losing the election. And he said the evidence is overwhelming and they've massively lost the election. And in a very light moment, he said he wasn't expecting it. He hadn't even packed a shoe. But on a serious note, said that they're going to do everything to ensure that there's a peaceful transition and this government succeeds. We've also seen the former president, Iekama, say that this resounding defeat was because of policies that are not people-centered. So the opposition party, which is now the ruling party, centered on that, capitalized on bread and butter issues to address the current challenges and needs of the people. So the ball is now in their court to see if they live up to the expectations.
Yeah, I mean, the challenge is big ahead. And I said diamonds are not forever, namely because Botswana relies so much on the sale of diamonds. But it hasn't been a good couple of years because of weakness of demand coming out of China, oversupply issues, etc., lab-grown, the emergence of lab-grown diamonds as well. To what extent is that going to cast a shadow over the issues that the new governments are going to have to deal with? Because the economy is very reliant on diamonds. How can they sort of break the stronghold?
Jumana, that is the million-dollar question. In fact, in his outgoing speech, we heard former President Mokgweetsi Masisi say that the economy is going to be a challenge to the new administration. They are projected to grow by only 2%. And if you look at key indicators like unemployment, 28% amongst the youth, there's corruption, there's rising insecurity. And we saw the President, Duma Boko, say that they're going to work on diversifying the economy. Of course, diamonds are a great source of income, but they've not been living up to expectations. And you also have things like tourism, but it's time to inject some more vibrancy into that economy. And if we just stay with diamond, the former administration signed a $751 million deal with De Beers that they were not happy about, and they even threatened to walk away. We are likely to see President Duma Boko try to rebuild those relationships, patch things up, because it says we have to protect the goose that lays golden eggs while they pursue alternative ways of diversifying the economy.
Bloomberg's Andira Ganga, thank you so much for bringing us the report on the pretty surprising election result in Botswana. All right, a quick look at equity futures. We are shaping up for quite a busy week with the U.S. elections, the Fed, so much going on. Futures are leaning towards the green. S&P futures up 0.2%. NASDAQ also leaning towards the green after that pullback that we spoke about. Magnificent 7 stocks down 2% throughout the course of last week. And Euro Stoxx futures leaning flat, slightly towards the green as well. Coming up, oil prices rising after OPEC Plus delays a production increase by 1 month. So they've postponed it yet again and will be signaling that they're putting extra barrels back to the market as of January, no longer as of December. We're going to discuss that and more in just a few moments. We will be live at ADIPEC in Abu Dhabi. This is Bloomberg.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Horizon's Middle East and Africa, our top stories this morning. Iran's supreme leader escalates his rhetoric on Israel, warning of a crushing response to his country's enemies, including the United States. Oil advances after OPEC Plus agrees to push back its December production increase by 1 month. We are live at Abu Dhabi's ADIPEC with the latest energy updates. Global luxury brands hitting headwinds in China, with the opening of LVMH's flagship store in Beijing further delayed until as late as next year. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Big week coming up as we've been highlighting U.S. elections, the Fed, Bank of England, the Standing Committee of the NPC. All of that is going on this week. To give you an idea of how markets are faring, we are starting the week off in positive territory, both S&P and Nasdaq, leaning towards the green. This is after a marginally better close on Friday, after some gyrations came through in Magnificent Seven, the likes of Alphabet, Meta, even Apple pulling back towards the end of the week. Magnificent Seven down 2%. So a bit of a bumpy ride for tech stocks. But this week, the focus is very much on elections. And the reason I bring this up is take a look at what's happening to the USD today. We are down 0.6%. The USD and US yields have been closely tracking the polls. And what's interesting about this is over the course of the weekend, new polls came out suggesting that Harris has a marginal lead in some of the swing states, including the likes of Iowa, which Trump won by a decent margin back in 2020. And on the back of that, what we are seeing is those Trump trades, the higher U.S. yields, the stronger USD are pulling back. So that is the reason that the USD is coming under some selling pressure today. So in the red this morning. And then Brent also in focus. Take a look. We're almost back at $75 again, about 1.6% higher. Once again, the market is accounting for further geopolitical risk, with Iran warning of a potential reprisal now to the Israel attacks that took place a week ago. Plus, news out of OPEC Plus that they have decided to push back the timing of putting further oil barrels back to the market by yet another month. So we'll begin putting extra barrels back in the beginning of 2025. So the market took that quite well this morning. And this is just a quick look at the terminal chart and what is priced in as far as the Fed. This week on Thursday, 25 basis points, one cut is priced in, another cut pretty much fully priced in as well by the end of the year. So we're sitting about 46 basis points of rate cuts priced in by the end of 2024. But let's continue the conversation and check in on how markets in Asia are faring this morning. Avril is in our Singapore studio. Just give us an overview.
Yeah, Jumana, we're seeing Asia stocks mostly gaining ground, and in currencies amid the unwinding of the so-called Trump trade, the yen is benefiting. It is the outperformer among Asia FX today, also getting a bit of a tailwind from the BOJ governor last week's slight shift in tone, a bit more hawkish than some in the markets had been expecting. But as you can see there, offshore, onshore yuan are both gaining ground against the greenback. Flip the board, because I also wanted to give you some color behind this as we are bracing for this week. We're seeing how the 1 week options implied volatility has been surging to a record and actually exceeding what we're seeing since the 2015. You can see here, this is when China markets boomed and then crashed, and the 2020 presidential election as well. So it gives you a sense of how extreme the positioning and what markets are bracing for is at the moment. Jumana.
Excellent. Thank you so much for the overview, Avril Hong in Singapore. Now, some big news in energy this morning. OPEC Plus has agreed to push back its December production increase by 1 month. This marks the second delay to its plans to revive supply as prices continue to struggle amid a fragile economic outlook. For more, let's bring in Anthony De Paula, Bloomberg's energy reporter, who joins us from ADIPEC in Abu Dhabi, and I'll be heading down there shortly myself to join you, Anthony. But OPEC are giving us some news this morning. They've decided to push back the timing of putting those extra barrels back to the market. What is the justification?
Yeah, good morning, Jumana. Well, we'll look forward to seeing you down here. It's getting quite busy at ADIPEC. And we're going to hope to hear more about that decision from some of the OPEC ministers who are going to be here at the opening ceremony about 2 hours from now. The justification is simply that the market was too weak. When OPEC Plus went into this agreement in June, which, if you remember, it took a lot of explaining from the OPEC Plus members, particularly the leader, the Saudi energy minister, Prince Abdulaziz bin Salman, to explain what the plan was. It was a series of phased-out cuts. They were going to be taking off those voluntary reductions first, but they left it open that if the market was too weak, they could delay it. So we've already delayed it now. This is the second time it's been delayed, so the third month We were going to start earlier already. We were going to have some cuts on the table, but that's been delayed because of that market weakness. And a lot of the traders that we spoke to at Bloomberg were divided as to whether they thought the group would delay it or would go ahead with it. There's a lot of pressure within the group, countries that have been investing in oil production, that they want to get those barrels on the market rather than keep them idle. But simply the weakness in the market, particularly over the last week, just didn't seem to support the ability to increase. It's that kind of that weakness from China, uncertainty over politics. That is keeping things under pressure here in terms of the oil market. So that's why we're seeing this cut delayed again another month.
Yeah. Well, ADIPEC is always an opportunity to discuss not just the short-term drivers, which is some of the drivers that you're listing, but also some of the more medium-term, longer-term drivers. And I know in previous years, there's been lots of discussions about this so-called energy trilemma, right? And that they want to find a way to maximize all of these three constraints. There's a focus on sustainability, but also equity and affordability. What do you think the main theme is going to be this year for ADIPEC when you think about some of those medium-term drivers?
Yeah, well, maybe I throw a curveball in terms of that question. I mean, the theme that it seems like what they want to talk about here is AI, AI in the industry. So the ADNOC CEO, Dr. Sultan Al-Jaber, brought people together to talk about the energy industry and the influence of AI and using AI in there. Now, the energy industry has always been a technological industry, lots of drilling technology, horizontal drilling, different types of geological surveys. So there's always been an technology heavy in the energy industry. So we would expect some of those technologies to go in there. But really, as you said, that kind of trilemma about making energy affordable, about making the supply sufficient enough. But we've really got, in this region, the Gulf producers are interested in getting their oil out of the ground and getting as much of that on the market as possible. They want to do it in a sustainable way. I mean, the oil is easier to bring out of the ground here, so they can do that with less emissions than in some other more difficult regions of the world. So there is that going for them. But they have vast resources here that they want to use. They want to bring those on the market. They're looking at things like turning oil into chemicals and producing more of those things like plastics that we use in lightweight cars, mobile phones, computers. So they see that oil demand going on still for decades to come. Perhaps less so in transport fuels in the future and more so in going into chemicals. But, here we will be talking about sustainability. We'll be talking about affordability. We'll be talking about AI. But the bottom line is they want to produce and sell their oil, Jumana.
Yeah, and also they want the investments to help continue with those efforts. It's something that the president, Sultan Al-Jaber, has spoken about in the past. Anthony DePaula, Bloomberg's Middle East energy reporter, thank you so much. Now, back to U.S. politics now. U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in opinion polls ahead of Election Day. A flurry of new surveys has them neck and neck nationally and across the battleground states that will decide the outcomes. Millions of ballots have already been cast in person or by mail. Now, the economic consequences of the votes will be far-reaching and affect taxation, trade, immigration, and energy. Now, for more, we're joined by Anam Rami, the Associate Professor of Political Science at the New York University in Abu Dhabi. Great to have you with us on the show. So it feels like it's a bit of a coin toss at this point. The polls are neck and neck, depending on which day that you're looking at them. It seems as though over the course of the weekend, they've moved slightly in favor of Vice President Kamala Harris. What should we be watching out for on the day itself to determine which direction the vote is going?
So great to join you here this morning and to talk about this wild election. Yeah, so my tea leaves that I look for is not necessarily in places that are expected to be swing states, but places that are not expected to be swing states. For example, Virginia is a state that has been won by every Democratic presidential candidate going back to Barack Obama in 2008. But before that used to be a fairly safely Republican place. Back in 2016, when Donald Trump surprised the world and beat Hillary Clinton, the polls closed in Virginia at around 7 o'clock Eastern time in the United States. And 2 to 3 hours after that, Virginia was still too close to call. And I still think that's a pretty good benchmark. If states like Virginia that favor the Democrats are still too close to call within a couple of hours after the polls close, I think that's a signal that Trump might be on to surprise us yet again with a return to the White House. If, on the other hand, states are just being called left and right pretty quickly, I think that Harris has got it.
Yeah. What about turnout? I mean, people talk about turnout a lot, and I know there's still a good chunk of the population that are undecided. It's not huge, but it is enough to move the needle. How closely should we be watching out for actual turnout numbers?
This is an environment where turnout is king. I don't think that the people have made up their mind more or less whether or not they support Vice President Harris or former President Trump. The question is, are they going to actually show up to vote or not? And particularly in the 7 key swing states, turnout is going to make or break the election. And I think that particularly places like Michigan, which was a state that Trump surprisingly won in 2016, but then Biden won in 2020, with a very large Arab American population in the Metro Detroit area that's been upset with the Biden administration's handling of the war between Israel and Palestine, and now with Lebanon dragged into it as well. And that community has shown some either proclivity to stay home, or in some cases, some local political leaders in Dearborn, for example, have actually thrown their support behind former President Trump. And so the question is, will critical communities like that turn out in large numbers? Democrats really need a high voter turnout in urban and high educated areas throughout those swing states, in the Metro Detroit area, Milwaukee, Philadelphia, Pittsburgh. If their turnout numbers can't meet or exceed what they were doing in 2020, it's entirely possible that rural and exurban votes that Donald Trump was able to get 70, 80, and sometimes even 90% of in certain counties will ultimately carry him back to the White House.
Yeah. I read an interesting article in Axios over the weekend, and I'm just going to bring you a line from that report saying the Senate map favors Republicans, but the Senate money favors Democrats. And here they're alluding to the fact that for senators in the Democratic Party, it's been a much more successful fundraising campaign than it has been for Republicans. How is that likely to influence the election outcome?
This is such an interesting change, right? So if we look back to just 2012, we don't have to go that far in the past. The Republicans were always the ones that were outraising Democrats and outspending Democrats. And in the Trump transformed Republican Party, the tables have pretty much turned. And even Rick Scott, who's running for re-election for the Senate in Florida and will likely win fairly comfortably, he is being outspent by massive amounts, by tens of millions of dollars, by Debbie McCarcel-Powell. And will this money matter? Possibly. I think ultimately it's political headwinds that are going to drive who wins and who loses. I think if Trump is able to turn out his base based on his own magnetic personality in places with key Senate races like in Pennsylvania and Ohio and Michigan, then the Republican Senate candidates in those states, even though they might be being outspent by 2 or 3 to 1 by their Democratic counterparts, they might be able to catch some headwinds from Trump. Though in the polls in those states, it seems that the Republican Senate candidates are running behind Trump at this point. Nevertheless, the Republicans are looking pretty comfortable in a pretty comfortable position to hold all of their current seats and pick up at least Montana and West Virginia's Senate seats, which would give them the majority regardless of who wins the presidency.
Yeah. Adam, just a last final quick one for me. To what extent are these celebrity endorsements, the likes of Beyonce and J-Lo getting on stage with Kamala Harris, going to work to her advantage?
I think that celebrity endorsements probably don't matter too much in gross margins. But I think in an election environment this tight, literally anything to get people to show up to vote can matter. And I think particularly getting out young people, and especially young people of color and just non-white populations in major urban areas throughout the U.S., that's the Democrats' key to victory. And so getting whatever sort of celebrities that are capable of getting people off the couch and interested in politics to endorse your campaign, to hold rallies with you, I think is incredibly helpful. And traditionally, Republicans were not doing this sort of thing before Trump, but Trump himself has embraced sort of a quasi-pop star status among the likes of Hulk Hogan and Kid Rock and others.
Yeah, well, it keeps you in the public's conscious, which is half the battle, isn't it? Anna Ramey,
yeah.
Thank you so much for joining us on the show today. Really good to chat to you. Let's see what happens this week. Associate Professor of Political Science at the New York University in Abu Dhabi. Now, Berkshire Hathaway's cash pile reached more than $325 billion in the third quarter. This is a record for the conglomerate as Warren Buffett continues to refrain from major acquisitions while trimming some of his most significant equity stakes. The Omaha-based company says it has once again cut its holdings in Apple, and its stake in the iPhone maker was valued at $69.9 billion at the end of the quarter. That is down from $84.2 billion, indicating that Berkshire cut its stake by about 25%. Now, coming up, Chinese lawmakers are gathering to sign off on a fiscal package worth trillions of yuan to lift growth since the pandemic. Details next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rate World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. China's top legislative body will meet in Beijing this week as investors watch for any approval of fiscal stimulus to revive the economy. For more, let's bring in our China correspondent Min Min Lo in Hong Kong. So just give us a preview of what to expect out of this standing committee of the NPC. Min Min.
Yeah, so far today, markets have been quite resilient. I was just checking the CSI 300 and the Shanghai Comp both were up quite a bit just before the lunch break. And of course, a lot is riding on what the legislature will approve in terms of the fiscal package. I think market consensus right now for this year at least is a 2 trillion yuan in additional stimulus. But of course, multi-year, if you look at 3 to 5 years time frame, and markets are expecting between 6 to 10 trillion yuan in additional stimulus, additional bond issuance to tackle local government debt, as well as to buy back unsold homes and property on the market. But I think the wild card here that people are looking out for is whether there will be specific measures targeted at boosting consumption, perhaps some form of cash handout or subsidies that would go beyond the current equipment upgrading program. And of course, we had a rather lackluster start to the earnings season that has been weighing on sentiment. You have the US election going on. The tariff risk, according to Goldman Sachs, has already been priced into markets so far, and Goldman Sachs is still seeing a 20% upside to Chinese equities if the government delivers on fresh stimulus. So that's something to watch very closely by the end of this week. That's when we might get news lines from the outcome of that meeting.
Yeah, it's interesting because I believe it's 4 days long, and so something very major is happening in the United States during the course of that 4-day meeting. So we'll see how they respond to that. Bloomberg's China correspondent Min Lo, thank you so much for the overview. We'll circle back with you later this week as well. Well, coming up, LVMH's 5-story flagship store in Beijing remains fenced off months after it was expected to open. We get the latest on China's deepening luxury slump next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, global luxury brands have been hitting headwinds in China as consumer spending slows. One of them is LVMH, whose 5-story flagship store for Louis Vuitton in Beijing is facing delays. It was supposed to open in the first half of the year, but remains fenced off today, with sources telling Bloomberg it may not open until as late as next year. Let's get more with Bloomberg's Shirley Zhao in Hong Kong. Shirley, so just give us a sense for how bad China's luxury market slowdown is right now, and the fact that LVMH are really struggling to open up what would be their flagship store in Beijing.
So over the past decade, the luxury market growth in China has been double digits almost every year. But this year, it's estimated that China's luxury market will actually see a 15% drop in sales. So, and although, you know, big luxury brands don't really break out China for individual financial reporting, groups like LVMH and Kering have seen double-digit drop in sales in China in the region, including China. So we could see that, you know, there's a big shift from previous years, and we've seen like big brands facing sales pressure. For example, you know, brands like Burberry and Givenchy, and, you know, some brands under Kering like Balenciaga are all offering discounts of up to 50% on China's e-commerce platforms. And, you know, there, for example, the LVMH store in Beijing that still hasn't opened, even though it's expected to open in the first half of this year. And even Hermes, which is supposed to be one of the most resilient against economic downturns, is facing sales pressure. Sources told us that salespeople at Hermes are actually lowering the amount of money required to buy other non-core products to be able to access their most iconic, like Birkin and Kelly bags.
Yeah, and I've just got a minute here, Shirley, but let me just ask you, is this slowdown cyclical or more of a long-term shift as we talk about the efforts to boost the economy?
Well, many observers are saying this is actually more of a long-term shift. Of course, the most direct trigger is China's economic slowdown right now. A lot of people, a lot of young professionals have been struggling in looking for jobs, or they are losing their jobs. In fact, there is one of the people that we interviewed said that she used to make 3 million Hong Kong dollars a year, and she would spend 1/5 of her income buying luxury products. But now she's lost her job, and she's stopped buying luxury products. Xi Jinping, President Xi Jinping in China, is very focusing on economic equality, and that means showing off your wealth is not something that you would want to do in China. But at the same time, there's also a long-term
Shirley, I'm
shift
going to have to leave it there. I'm going to have to leave it there. We're running out of time. Thank you so much. But definitely something we're going to be watching out for. Bloomberg's Shirley Zhao. We're going to take a quick look at futures before we head out to the break. That is Horizons Middle East and Africa.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grew up, making your own clothes and making something that's very special and very unique. It's like timeless. And now you see that everybody is looking the same, wear sweatshirts and wear t-shirts. And for me, it's just when they wear something very special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally? Definitely. Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
This is Horizon's Middle East and Africa, our top stories this morning. Iran's supreme leader escalates his rhetoric on Israel, warning of a, quote, crushing response to his country's enemies, including the U.S. A flurry of polls show Vice President Kamala Harris and former President Donald Trump in a close race, with Harris having a slight edge nationally and in some swing states. And the tight race sees the dollar fall as investors walk back bets of a Donald Trump win. Meanwhile, oil rises after OPEC Plus delays an output hike. Good morning. It is just gone 9 a.m. across the Emirates. I'm Jennifer Zapasaja in Johannesburg, where it is just gone 7 a.m. Welcome to the second hour of Horizon's Middle East and Africa. As Jumana was just telling you, it is a busy week for markets, and I don't need to tell you that. But listen, there's a number of things that we're paying attention to. Of course, there is the U.S. election. There's a number of central bank decisions that we're paying attention to. Also, markets are focused on the China NNPC meeting. So let's just see where U.S. equity futures in particular are positioned ahead of the trading day. As you can see, tilting slightly to the green, but that is coming after we saw last week. We saw a gain in equities after we got those beats from some of the Mag 7, including Amazon. We also did see Intel doing quite well, helping offset some of the disappointing reports we got earlier in the week. Despite the upside, though, that we did see, there was quite a bit of lackluster performances for the indices, and the jobs report that we got on Friday perhaps tainting market sentiment. Also paying attention to the U.S. dollar and what it's doing here. Tilting to the downside now, down about 0.6%, also declining against major peers. We mentioned this at the top of the show. The move is coming as markets are now potentially pulling back on that so-called Trump trade, clearly having an effect on what we're seeing with the dollar right now. And we're also looking closely at oil. As you can see right now, oil up just about 1.5%, just over that right there. Brent crude at 74.24 as it was there. And that was coming after we saw those moves from OPEC. OPEC Plus, excuse me. I do want to bring you this terminal chart, though, because this is one of the many factors that we're paying close attention to this week. And in particular, I mentioned the U.S. election, the central bank decisions. The Fed is one of those that we're paying close attention to, the decision that's coming on Thursday. And of course, we've seen markets swinging back and forth over the past few months on whether or not we're going to actually see a cut later this week. And markets have pulled back on odds of a December cut, as this chart shows. Still, we're seeing a cut likely, but a number of data prints potentially impacting what the markets are thinking the Fed is going to do next. No less, we have to wait, though, for the U.S. election. Listen, let's pivot, though, to how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, amid the unwinding of that so-called Trump trade, Asia stocks and currencies are mostly gaining ground today. The yen is outperforming, but keep in mind these currency moves you're seeing might also be exacerbated because Japan is on a trading holiday. And as you mentioned a short while ago, this week is not about just the U.S. election or the Fed, also the China NPC. Just flip the board. I just wanted to show you real quickly as well. When you look at China margin debt, that has actually risen to levels we haven't seen in 2 years. And that speaks to, I think, the market's anticipation of potential stimulus. And that's prompting these traders to boost risky wagers. So on top of the moves we're seeing today, keep that in mind as well. Jen.
Avril Hong in Singapore. Avril, thanks so much. We will check back in with you. Let's turn to the Middle East, though. Iran's supreme leader escalates his rhetoric, warning of a crushing response to the country's enemies, including the U.S., following Israel's missile strike on the country a week ago. For more on this, let's bring in Paul Wallace, who leads our Middle East, North Africa economy and government coverage. He's joining us now. So, Paul, how concerning are these latest comments, considering where the conflict is right now?
Jennifer, I think it is significant because in the immediate aftermath of Israel's strikes on Iranian military targets the weekend before last, Iran's reaction was pretty muted, and Supreme Leader Ayatollah Ali Khamenei didn't sort of vow a retaliation. He didn't say there wouldn't be one, but he was saying that Israel's attack shouldn't be exaggerated. 5 people were killed in those strikes, four soldiers and 1 civilian. And something has happened over the last week to sort of harden Iran's stance. And now, in the last few days, it is very much upping the sort of bellicose rhetoric and saying that there will be a retaliation for what Israel did. So it's certainly important to note that this change in what Iran's saying its response will be. At the moment, it's still very unclear whether we're talking about another direct strike on Israel from Iran with the use of ballistic missiles or something else. Maybe it would be, there's been a lot of talk about Iran's proxy militias in Iraq firing a barrage of some sort on Israel. So there are many forms an attack on Israel could take. Not all of them would be as escalatory or as significant as what Iran did at the beginning of October when it fired about 200 ballistic missiles against Israel. So we just have to wait and see.
And Paul, I mean, we're also hearing about potential leaked documents that are suggesting that Israeli Prime Minister Benjamin Netanyahu actually manipulated public discourse about the war in Gaza. I mean, considering what you're saying about the bellicose rhetoric that we're hearing, I mean, this doesn't necessarily portend anything good for a resolution to the conflict.
Certainly, and I think this is potentially a big problem for Prime Minister Benjamin Netanyahu if he is personally linked to these alleged leaks, and if it's proven, or if prosecutors in Israel sort of say definitively that these were leaks that damaged Israeli national security. There's long been a sense among Netanyahu's critics within Israel that he tries to manipulate the media by leaking certain things and exaggerating the importance of certain pieces of intelligence gathered by Israel and all that. And a lot of this latest issue stems from the whether or not Israel would accept a ceasefire in Gaza and whether or not it would relinquish control of the so-called Philadelphia corridor, which is essentially the Gaza-Egypt border. That's an issue that kind of quite quickly reared its head around May, June time, with Netanyahu insisting that this corridor was of vital importance to Israel and troops could not be pulled out of that, which is what Hamas and Egypt and some others were demanding. So if it's, if this sticks and it's alleged that people close to Netanyahu leaked documents and exaggerated the importance of what they said about the corridor, then that's potentially a problem for Netanyahu.
Right. Paul Wallace, our MENA economy and government coverage leader. Paul, thanks so much for that update there. Let's pivot to the U.S. election. U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in opinion polls ahead of Election Day. A flurry of new surveys has them neck and neck nationally and across the battleground states that will decide the outcome. Let's bring in News Desk editor Jill Deesis. So, Jill, dig into these polls now because we've been seeing the polls swinging back and forth. I mean, how close is this race now, just a day out?
Hey, Jen. Yeah, this is really looking like a coin flip at this point. There were some pretty positive polls for Kamala Harris, at least over the weekend. We did see her leading in a new national poll. Of course, though, as we know, Jen, this isn't really about the national polls. Hillary Clinton won the popular vote in 2016, but famously lost the election because of the Electoral College. To Kamala Harris's credit, though, there was some other polling showing her up in some key battleground states, but really not enough to take over a margin of error that is leaving these two candidates, her and Donald Trump, in an incredibly close contest. This really does not, there's a lot of talk around the uncertainty over this election right now. This really does not seem like we're moving beyond that stage or that point. That all being said, Jen, I will say one thing that that some traders might be weighing into, since, we are seeing a little bit of hedging on, what has been in markets, at least, a really anticipated Trump victory, is that Kamala Harris very unusually was leading in a very well-regarded poll poll out of Iowa showing her up actually in that state. Now, that's, of course, a state that Trump won incredibly decisively in the last two presidential elections. What that actually means for maybe some vote shares that she's getting among maybe white Midwestern voters, that's something to be seen here. But really, the big takeaway at the end of the day here, it really kind of seems like it all comes down to maybe Pennsylvania. And this is really still incredibly 50-50. It's just so close.
And Jill, we were just looking at the split screen of the two candidates. I mean, their final arguments could not be any different. I mean, can you just talk us through what they did over the weekend and potentially who they were trying to reach out to?
Sure. So one thing that both of these campaigns do seem to recognize is, again, that it really is coming down to these key battleground states. So we saw Kamala Harris lead several rallies in Michigan on Sunday. She was appealing to black voters. She's certainly lost a bit of headway there. Some black voters are moving over to Donald Trump. So we saw her in Detroit campaigning with them. She really seems to be honing her economic message most of all. She did hold a rally on Sunday, notably, where she didn't talk about Trump whatsoever, at least didn't name Trump whatsoever. So it does seem like she's trying to trend a little bit more toward that idea of positivity. Trump seems to also, really understand the importance of these swing state votes. He's campaigned in Georgia, in North Carolina, in Pennsylvania, of course. But his message, obviously, is a bit more different. I mean, Donald Trump, of course, loves talking off the cuff. He did actually, during at least one rally, seem to really hone on the idea of, maybe of challenging the results after the election. It seems that Donald Trump, no matter what ultimately happens, is prepared to, fight the election results should they be contested. And of course, as we've been talking about, they're incredibly close. So we'll have to see if something like that ends up happening.
And Jill, I mean, many people are describing this as a campaign unlike any other, volatile for the markets, volatile for the public, for the global community. I mean, I wonder when you think about where we're at right now, what do you think potentially has been the most impactful event that really sort of shifted the direction of where this election was headed?
I mean, absolutely no question. It has to be that late June debate between Joe Biden, the sitting president of the United States, and Donald Trump. That's, of course, the debate during which Joe Biden performed disastrously, ended up having to, relinquish the nomination to Kamala Harris, and has really just thrust us into this incredibly historic era that we're experiencing now. She had, the shortest presidential campaign really in modern history here, trying to completely change things and really position herself in front of voters. I mean, were it not for that debate performance from Joe Biden, we would not be in the position that we're today. And it could actually very well be, because he was trailing Donald Trump at the time, that, maybe Donald Trump would have a more decisive way of locking this up now. Really difficult to tell, at least on that front. But yes, I mean, really that debate performance, I think, is really what's characterized here and really kicked off an incredibly volatile, incredibly wild last couple of months of this campaign.
In the home stretch here, Jill, appreciate you being through it with us all. News Desk Editor Jill Desis for us there. Great to have you on. Still ahead, hear why Arkham Capital says they are getting more conservative in their investment stance and reducing credit risk. That's next. This
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. earnings season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The dollar fell as investors walked back bets on Donald Trump winning the U.S. presidential election after the latest raft of polling data indicated no clear advantage for him. Treasury yields rose significantly over the course of October as economic data cast doubt on the path for further rate cuts by the Fed. Joining us now is Fedi Gendi, Senior Fixed Income Portfolio Manager at Arkham Capital. Fedi, great to get you on. So let's just start with what we're seeing with markets right now. October was volatile for treasuries, for the dollar, for currencies globally, and equities. I mean, what do you make of now a bit of unwinding that we're seeing in this Trump trade playing out in the dollar moves?
Yes, thank you, Jennifer, for having me on. October was a month characterized by very high levels of volatility. We saw that in the MOVE index, there was a spike in Treasury volatility. There's a lot of uncertainty about the U.S. election outcome, about the tail risk of a potential Republican sweep, about what kind of policies might be enacted if there is a Trump win with regards to tariffs and to tax cuts and the inflationary impact on that. And we've seen that reflected in a bear steepening of the U.S. yield curve. We've seen that in terms of taking back some of the Fed rate cuts that were aggressively priced in to the front end as well. And it makes sense in this highly volatile environment, at least from our perspective, having come into this with a slight underweight duration stance, to book profits and turn neutral from here and let the noise pass before taking a higher conviction view on the rates market.
But you were conservative, as you note in your notes, but you were conservative in your investment approach in October for reasons that ended up being beneficial, but not for the reasons that you expected. Can you just walk us through that?
Sure. So we entered October having reduced aggressively in our MENA strategies some of our key overweights in the high yield space within the GCC and MENA. So names like Egypt, some of the more dicey GCC high yield real estate names, as we felt that high yield spreads have significantly compressed on an absolute basis, and the pickup that you get from moving from investment grade to high yield is not as compelling as it used to be before. And when you put that within the context of what we're talking about now, which is this heightened rates volatility, headline risk, as well as an increase of geopolitical risk in the region and a regionalization of the conflict now, it made sense for us to cut some of these overweight high yield positions and reduce credit risk in the portfolios until a lot of this dust settles. And I think going forward, it makes sense within the context of the environment that we're in, basically to adopt this stance for the time being.
Is there an outcome, though, Fedi, with the U.S. election that could potentially change that stance that you have? We mentioned there's a number of central bank decisions, of course, the Federal Reserve on Thursday. I mean, could you potentially have to reassess that strategy there?
Yes, so what we're watching out for now, of course, is the election and the outcome from that. We think a big part of the Trump trade has already been priced in. We might even have a buy the rumor, sell the fact reaction, even in the event of a Trump win. And you do see a disconnect between what the betting odds are showing and polls, which are neck and neck. So if we do have a Harris win, definitely we expect to see yields to come down. Even if we do see a Trump win, we think that considering how far we've we've come and the aggressive move in rates that we've seen in October, it makes sense to adopt a buy on dips approach with the rates market and to look to enter into an outright long duration stance, let's say when the 10-year approaches 4.5 or the 30-year approaches 5%. This is in terms of duration. In terms of the credit risk, we would still want to be conservative, especially in light of the recent comments from Iran that this is not the end of the tit for tat between Israel and Iran, and there might be another retaliatory strike there.
Right. And Fedi, just quickly, I mean, is there anywhere else where you're looking outside of the U.S. or are all eyes focused on what happens with the U.S. election before you potentially change your investment approach in other parts of the markets, in other parts of the world?
So yeah, so the focus now is on the U.S. Of course, we're also tracking what's happening in oil prices. It's good news what has come through from the oil market that the OPEC plus output increase has been pushed out. So that's positive. We're still in a sweet spot with oil, and the key level that we watch there is $60 a barrel. I think if we breach that for Brent, this is where you would see cracks in the MENA space and a clear differentiation between the better credits that have lower break-evens and the weaker credits.
Fedi Gendi, great to get your analysis today. Senior Fixed Income Portfolio Manager at Arkham Capital, joining us there in our Dubai studio. Thanks so much, Fedi. Now, coming up, Chinese lawmakers are gathering to sign off on a fiscal package worth trillions of yuan to lift growth since the pandemic. Details on that next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. China's top legislative body is meeting in Beijing this week as investors watch for any approval of fiscal stimulus to revive the economy. For more, let's bring in our China correspondent, Minmin Lo, who's in Hong Kong for us. So, Minmin, there's a lot at stake here. Is the expectation that China will disappoint or potentially see some upside?
Yeah, well, there has been differing market expectations here, and the expectations have been really high, since months back when the PBOC first unveiled those monetary stimulus. We have been waiting for this day for the NPC Standing Committee to approve a new fiscal stimulus package, and the consensus now is that the government could unveil a 2 trillion yuan stimulus this year, but as for a multi-year package, it could be as high as between 6 to 10 trillion yuan for a 3 to 5 year package that would tackle local government debt and the unsold idle properties and land. But I think the big wild question here is whether there will be any measures to target consumption, especially something that goes beyond that equipment upgrading program that we have been seeing so far, whether there will be cash transfers or subsidies for the lower and middle income group, for example. And we have seen markets been quite resilient so far today. And it looks like, according to analysts we've been speaking to, any sort of Trump tariffs risk has already been priced into the markets. And so we have to see what happens on Friday. It's a week-long meeting. The fact that the government has pushed this meeting back to after the U.S. election suggests that they will be watching the outcome closely, and that could factor in to the announcement in terms of the size of the stimulus that they will eventually unveil.
Min, let's just stick on that. I mean, what could a potential Trump or Harris presidency then mean for China's economy?
Yeah, well, Harris' presidency will likely mean policy continuity from the Biden administration. And our Bloomberg economics team has crunched the numbers just based on some economic modeling. If we continue to see this tech restrictions and a sort of limited decoupling, that could weigh on China's growth by about 0.4 percentage points next year. But if it's a more serious decoupling, it could weigh on growth by as much as 1%. If we look at Trump, a Trump win scenario, that could lead to a very high likelihood of tariffs. If it is a 60% tariff across the board for Chinese goods, it could, by some analyst estimates, again, also weigh on growth by about 0.4 percentage points. But if there is a global retaliation to those tariffs, that impact could be mitigated. And of course, it could prompt China to double down on strengthening its supply chain resilience, diverting its trade to other more neutral countries, and also doubling down on its self-sufficiency push.
Great to get your reporting. Bloomberg's China correspondent Min Lo for us there. Thanks, Min. Now, coming up, oil prices rise after OPEC Plus delays an output hike and Iran ramps up its rhetoric. More on this next. This is Bloomberg.
Is the Vivian Tom clientele?
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
This is Horizon's Middle East and Africa, our top stories this morning. The dollar weakens as markets brace for election volatility. The latest U.S. polls showing no clear advantage for Kamala Harris or Donald Trump. Oil rises after OPEC Plus agrees to push back its December production hike by 1 month. Plus, change of power in Botswana. The opposition wins the parliamentary elections for the first time in almost 60 years. It is just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to the second hour of Horizon's Middle East and Africa. It is going to be a busy week. After last week was quite a busy week for earnings and data. This week, of course, we have the U.S. election, a number of central bank decisions, and also we were just talking to our reporter about that China NPC meeting. So let's just take a look at where markets are positioned ahead of the trading day later. If we start with U.S. equities, tilting towards a higher open for both S&P futures and NASDAQ 100 futures. The equities got a little bit of a boost later in the week after we did see some beats later from Amazon and Intel, that helping potentially to offset some of the more disappointing results that we got from the Mag 7 earlier in the week. But both of the indices closed the week with a bit of lackluster performances given what we've seen over the past few months. And the jobs report that we got on Friday also potentially tainting market sentiment. The U.S. dollar also is in focus, down nearly 0.6% here, also declining against major peers. The move is coming really, as we mentioned, as the markets are potentially unwinding that Trump trade and digesting some of the polls that we got over the weekend showing VP Harris with a slight edge over Trump. And finally, Brent crude slightly up here. Well, not slightly up. I mean, it's up 1.6% for Brent crude at 74.29, coming after OPEC Plus agreed to push back that December production increase by 1 month. I want to bring you this terminal chart, though, because as we are digesting a number of the events that are happening this week, the Fed, of course, is also in focus. Markets have sort of swung back and forth over the past few months about what the Fed is going to do. But as this chart shows, potentially markets saying the odds of a December Fed cut are slightly pulling back, potentially that coming after some of the data that we got last week, including the jobs report, and of course, waiting to see the outcome of that U.S. election, though a cut is still likely. Let's turn, though, to how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, we're seeing that unwinding of the so-called Trump trade. Asia's stocks, currencies mostly higher. The yen is outperforming. Caveat here, though, that the currency moves might be exaggerated because Japan is on a trading holiday. But I wanted to highlight to you what we're seeing on the Hang Seng. This chart, courtesy of MLive's Mark Cranfield, shows you how recently we've been seeing Hang Seng volatility really climbing. And then you look back to 2022, the 2 periods where we saw this actually foreshadowed extended declines in in Chinese stocks. So it gives you a sense of what's at stake out of China's NPC this week. And as some has also been highlighting, even if we do see a magic number of sorts in terms of trillions of yuan being announced for fiscal stimulus, it might still take a while before details on that is going to be announced. So it could make it quite tricky for China's stock to sustain gains. Maybe this time will be different though, Jen.
Avril Hong in Singapore. Avril, thanks so much for joining us and giving us that update. Let's stick on oil. Oil advanced after OPEC Plus agreed to push back its December production increase by 1 month, and tensions escalated again in the Middle East. For more, let's bring in Bloomberg Saudi Bureau Chief Christine Burke from Riyadh. So, Christine, just talk us through the reaction and what exactly drove this decision by the group.
Well, good morning, Jen. As you've been talking about over the course of the show, we are seeing that pop higher in Brent prices, with the global benchmark creeping back up toward that key $75 a barrel mark. And going into this OPEC Plus decision, oil traders were quite divided on whether or not OPEC Plus would actually be able to proceed with its planned supply output increase of 210,000 barrels a day in the month of December. So this decision to push that back by 1 month probably caught some traders off guard. RBC actually issued a note overnight saying, quote, OPEC Plus has once again provided its penchant for plot twists. But really, this so-called plot twist, if that's what you want to call it, shouldn't come as that much of a surprise, considering all of the uncertainty that we are seeing in global markets. I mean, we have the U.S. election this week. We have a key rate decision from Federal Reserve Chair Jerome Powell on Thursday. And of course, we have that potential escalation and conflict happening in the Middle East. On top of that, we are seeing weaker supply-demand fundamentals in the oil market itself. So we're seeing weaker demand in China, weaker demand in Europe. And also, we got big oil earnings from Exxon and Chevron on Friday that showed that those two companies are heavily increasing production in the United States. So taking all of that together, and this probably just is not a market that OPEC Plus wants to test in the form of bringing more supply back to the market.
And Christine, I mean, you mentioned some of the big events that we're watching for just globally. When we zero in, though, on the oil industry in particular, is there any other data points or focus areas for the week that we should be paying close attention to?
Yeah, definitely. There are two key things I want to highlight. The first is that we get official selling prices from Saudi Arabia, which tends to be a key indication of where the kingdom sees demand for its crude. A Bloomberg survey of traders indicates that Saudi Arabia will cut prices, which just underscores, again, the weakening demand picture that we are seeing across most of the energy space. On top of that, and perhaps the bigger thing, is that we get Aramco earnings tomorrow, with the key focus being on how much the company's balance sheet is deteriorating as it maintains that massive quarterly dividend payout of $31 billion. Bloomberg Intelligence notes that payouts continue to exceed cash flow, and it has actually said that we could see Aramco's net cash position turn negative during the third quarter. And really what that suggests, or what that means, is that we really need to ask the tough question of how long Aramco will be able to sustain the world's biggest dividend.
Yeah, that is the earnings report that we are focused on. Any surprises expected there, Christine?
I mean, I think a surprise would be if Aramco takes the decision not to actually go ahead with its $31 billion quarterly dividend payout. We are expected that it will maintain that for the current quarter. If there was a change there, that would come as quite a surprise. I think more so what the market will be looking for is, again, how that balance sheet looks and what that indicates about payouts for 2025 and beyond.
All right, Bloomberg's Riyadh Bureau Chief Christine Burke. Christine, thanks so much for joining us today. Thanks so much. Now, relations between the U.S. and China have faced multiple challenges in recent years, and both Republicans and Democrats are signaling a tough stance towards Beijing. Our chief North Asia correspondent, Stephen Engel, looks at how the U.S. election is being viewed in China's corridors of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate. Because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods, and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that the United States' influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Engel, Bloomberg News.
Stephen Engel there for us. Now, coming up, a seismic shift in Botswana. We discuss the significance of the opposition coalition winning the election next. This is Bloomberg.
Top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, or you support, it's often done in the name of good, have hurt the lower 20%. They're dying younger, their income didn't go up for 20 years. They're the ones who have more crime in neighborhoods, their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
let's focus in on European politics.
Makes you wonder how politics might play out.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Let's turn to Botswana, where an opposition coalition has emerged as the surprise winner of the parliamentary elections. Duma Boko was sworn in as president after his coalition, the Umbrella for Democratic Change, secured an outright majority in the 61-seat legislature. It's the first time power has changed hands since independence almost 60 years ago. For more, let's bring in Bloomberg's Ndiro Oganga, joining us from Kigali. Ndiro, so what exactly does this result mean for Botswana? This is a seismic shift.
Absolutely, Jen. It is a new shift in the political sphere of Botswana. 5 years ago, President Masisi represented the change, and now Duma Boko is the face of this change. And for a victory this resounding, there was no pomp, there was no color, there was no glamour, just a very small swearing-in ceremony where the president made quite an impassioned speech. He understands the current state of the country, and he said, "I dare not fail." He promised to do everything within his power to ensure that he lives up to the promises he made to the people. He also put his human rights background to work, inviting diverse opinions in government, actually encouraging the citizens to be enriched so they keep the politicians apart. We've also seen statesman-like behavior from the former president, Mokgweetsi Masisi, who immediately it was clear that he was losing office, did a press conference, conceded defeat, and actually said the evidence is overwhelming. We have lost massively. And on a lighter note, he said he didn't even park a shoe because he wasn't expecting to lose the election. But on a serious note, saying they're going to do everything to support this government so that it succeeds. And this defeat, if you look at it in entirety, is very crushing and loud. You had BDP coming a distant fourth, with the president's ruling party, UDC, winning a majority of the 61 legislative posts. Former President Iakama says this is because of lack of people-centered policy, and you had UDC centering their campaign around bread and butter issues, which propelled them to victory.
Yeah, and Ndiro, we've been seeing a lot of those changes shifting. I mean, look at South Africa in particular a few months ago, when a lot of the issues sort of come to light at the polls. When we talk about this new government and the issues that they're going to have to deal with, I mean, what do you see potentially as top of the list?
Jen, top of the list will be how they're going to raise revenue. If you look at diamond sales, which account for the bulk of the country's revenue, they've slumped by about 73% from years high. You have economic growth being projected at a dismal 2%, and this is on the modest side of things. This is also a government that will need to clamp down on expenditure, because if they don't, budget deficit is likely to grow, debt is also likely to grow, and at a time where windfalls for the government are really small because revenue from diamonds have shrunk. All this is happening in an economy where unemployment is at 28%, corruption is rampant, crime is rising, and that's why you saw the president promising 400,000 jobs in the next 5 years, also promising to cut tariffs on water and electricity to ease the burden of people. How exactly is he going to do this? One, he'll try and patch relations with the bears that are unhappy with how the previous administration treated them, but also diversify that economy, because if they don't, it's likely to get tougher and tougher.
Yeah, it's a fascinating story. Really appreciate you giving us the latest report there. Ndiro Oganga in Kigali for us, covering the Botswana elections that we got just a few days ago. Now, coming up, Berkshire Hathaway's cash pile reaches a new record. We'll get the latest on the conglomerate's earnings next. This is Bloomberg.
November 5th, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended Balance of Power leading into full team coverage at 7 live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg. Season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Global luxury brands, have been hitting headwinds in China as consumer spending slows. One of them is LVMH, whose 5-story flagship store for Louis Vuitton in Beijing is facing delays. It was supposed to open in the first half of the year, but remains fenced off today, with sources telling Bloomberg it may not open until as late as next year. Let's get more with Bloomberg's Shirley Zhao in Hong Kong for us. So, Shirley, how bad is China's luxury market slowdown? Give us a sense of where it's at right now.
So this year, China's luxury market sales is expected to drop 15%, which is like unprecedented. So over the past decade or so, China's luxury market growth has been on double digit almost every year, largely. And even though luxury companies like LVMH and Kering don't break out China for individual financial reporting, their sales for the region, Asia Pacific, including China, excluding Japan, has been falling double-digit this year so far. And, that we can see that this region is largely driven by China. And within China, luxury brands are facing a lot of sales pressure. For example, sources told us that Hermes, one of the most resilient brands against economic downturns, salespeople there are lowering the requirement for, purchasing an enough amount of money for other non-core products to be able to access some of their most iconic bags like Birkins and Kelly's. And in the past, customers in China just reached out to salespeople asking them for the availability of different products. But now salespeople are actively reaching out to some of their biggest customers, trying to tell them, okay, we've got these products available. Do you want to buy it? So this is a complete shift from what's been happening over the past few years.
Is there anything more that they could be doing, Shirley? And I mean the brands themselves.
So one obvious thing that a lot of brands are doing right now is cutting costs. For example, they are freezing capital budget, and they are maybe, downsizing their stores or downsizing their workforces, and they are, trying to negotiate rent with their landlords. But at the same time, they're also shifting to focus on more VIP customers, because those are the people who are less affected by China's economic slowdown and whose spending power remains strong. So we could see that luxury brands are organizing more VIP targeted events, for example, exclusive invitations to like the Paris Olympics or, store openings and other kind of exclusive events to give, to make the customers feel special and to encourage them to spend more.
Wow. It'll be interesting to see how that plays out. Bloomberg's Shirley Zhao in Hong Kong with us there, talking luxury. Now, Shirley was just talking there about strong spending power. Let's just pivot to Berkshire Hathaway's cash pile. It's reached a record $352 billion in the third quarter. The conglomerate also cut $325.2 billion in the third quarter. The conglomerate also cut its stake in Apple again, this time by about 25%. For more, let's bring in Bloomberg's Charlie Wells from London. So, Charlie, Warren Buffett still can't find anywhere to deploy his cash pile. What is going on here?
Yeah, that's a record amount. And look, the world's most famous value investor just isn't finding a lot of value right now at a time where the S&P 500 is up about 20% this year, and Berkshire Hathaway's own stocks are up about 25% this year. And so look, at a time when, when Buffett tends to struggle to find deals, one of the strategies is to buy back stock, but even that stock is too expensive. And look, this sounds like bad news, but Berkshire Hathaway and Warren Buffett in particular is a very patient investor, and he has said previously that he's happy to wait, sit on the sidelines until they can find investments that are low risk, but that can make them a lot of money.
Is there anything to be read, though, Charlie, into Berkshire Hathaway's continued stance on Apple shares?
Right, so significant share sales there in Apple this quarter and the previous quarter. And because this is Buffett, we kind of want to try to read the tea leaves here. And I think there's sort of two interpretations. One, that, Buffett's never really been a huge tech guy. Maybe he sees some issues with Apple. Of course, we've seen something of a slowdown in China. But the other read here is that this is a little bit more perfunctory of a sale. Their exposure there has gotten really big over time. And, Buffett still is a strong backer of Apple. He talked at the annual meeting in May about how great this company is, even better than a number of his other marquee investments. And so this looks like it's more just sort of a trim, and there could be some, tax benefits that they get, or at least heading off some tax hits that they could potentially take in the future.
And Charlie, just about a minute here. I mean, what other parts of the conglomerate are you paying close attention to?
So look, this is a sprawling American conglomerate. I think one of the issues that we really have to pay attention to here is the insurance business, and that is one of the big parts of this business. And they took some significant hits in the third quarter from Hurricane Helene, so that hit into some of their underwriting revenue. Looking across the business, I think, they saw some improvement in the energy space. Also in insurance, on a kind of flip to that narrative, they saw a boost to Geico, one of their larger insurance holdings. So, quite a spread here. But those operating earnings, which Buffett likes to pay attention to in the third quarter, took a hit.
All right, Bloomberg's Charlie Wells in London for us. Charlie, thanks so much for joining us. Let's take a quick look at where markets are right now. Futures position just ahead of the trading day. We mentioned it is a busy week. The U.S. elections are tomorrow. We also have the Fed decision coming later today after a raft of earnings that we got. So U.S. equity futures tilting to the upside there. And we'll wait to see really how the rest of the day plays out and how markets continue to digest a lot of the uncertainty that is playing out right now. All right, that does it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. That's next. This is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that you know most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The dollar weakens, Treasury yields and futures. Treasury yields down, futures rise as traders pare back the so-called Trump trade. Latest polls suggest a race to the wire between Kamala Harris and Donald Trump. The two presidential candidates rally last-minute support in the battleground states, with both emphasising their competing economic platforms. Plus, oil rises after OPEC Plus members agreed to delay a production hike, and as Iran is reported to be planning a strong and complex counterattack on Israel. To the earnings story right now, breaking lines crossing from the airline Ryanair. Second quarter revenue coming in below the estimates. 5.07 billion euros was the number for the second quarter. The estimates had been for just shy of 5.2 billion euros. And importantly, Ryanair is cutting its full year 2026 passenger goal to 210 million on those delays from Boeing. We know, of course, that members of the union in Boeing and at Boeing and the workers will be voting on the latest deal, the latest offer. We know, of course, that there has been significant delays in terms of deliveries as a result of some of that labour disruption and other supply chain issues, safety issues from Boeing to some of their customers. And Ryanair, of course, is a key customer and dependent on those deliveries from Boeing. So clearly the impact is being felt there from Ryanair as they project out in terms of passenger numbers. Third quarter deliveries as well expected to slip into the fourth quarter again on those Boeing strikes. And later this hour, 6:45 a.m. UK time, we'll be speaking to the Ryanair CFO, Neil Sorahan, so we'll be asking him about that projection in terms of softer passenger numbers and the impacts of Boeing on this airline. Let's get to the main markets, though. Check in on the markets. It is all about the dollar right now, the unwind of some of those Trump trades. You have a softer dollar falling to the lowest level since about August, and bond futures lower as well in terms of US Treasuries on expectations that this is a much closer race. Some of the polls suggesting that Kamala Harris has an edge in states, for example, Iowa. Just one poll, but of course, broadly across the picture, this looks like an incredible tight race as we head, of course, to the final day on Tuesday. European futures currently pointing to modest gains of 0.1%. The FTSE 100 currently off by 0.1%. S&P futures looking to add 0.3% after ending in the week lower. Of course, both US and European stocks were lower by the end of the week. Nasdaq futures looking to gain around 0.4%. We had some positive earnings from Intel and Amazon to play into these markets. Let's flip the board and look cross-asset then with that focus, of course, on what's happening happening in the dollar. The Bloomberg Dollar Index currently down 0.6%. The softness there, and that's impacting to the upside emerging market currencies. So they're gaining on the back of this unwind, at least around the edges to the Trump trade. Euro dollar at 109. The single currency up 0.6%. Brent $74.33 on reports that OPEC Plus and the decision there to push back some of its cuts and the threatening rhetoric coming out of the leadership in Tehran, Iran, of course. Gold at 2,740 per troy ounce, currently up 0.1%. Let's cross over right now to Singapore. Avril Hong standing by for a check on the Asian markets. Avril.
Yeah, Tom, Asia stocks currencies mostly higher amid the unwinding of the so-called Trump trade. It is a big week for markets in the region, U.S. elections, the Fed, but also China's NPC. And against that backdrop, we're seeing Chinese equities managing to clock some gains. The real underperformer are those in India. Japan, of course, is off for a trading holiday. And this that you're seeing on Indian equities is partly to do with earnings disappointment, but also the rotation towards Chinese stocks. Now, let's flip the board and take a closer look at what we're seeing in the FX space. As I mentioned earlier, most of them are gaining ground against the greenback today. The dollar is softer amid the unwinding of the so-called Trump trade, and the yen is really the one that is outperforming here. And this is not just a dollar story. Obviously, there is some boost from last week, the BOJ shift in tone as well. But keep in mind, because it is a Japan trading holiday, any move you're seeing in FX might be exaggerated as well. Flip the board. Let's take a closer look at this chart, courtesy of MLive's Mark Cranfield, which shows you the Hang Seng volatility. And this line in blue here shows you how it's really a surge of late. And you think back to 2022 and two periods where we also saw similar climbs actually foreshadowed extended declines in the Hang Seng, which gives you a reminder to what's at stake from the Chinese NPC this week. Already we're hearing that even if we do see a magic number, trillions of yuan of fiscal stimulus being announced, it's going to take a while for there to be any furnishing of those details, which might make any gains in the Chinese stock a bit difficult to sustain. So keep that in mind in a big week for markets. Tom.
Avril Hong in Singapore, thank you very much indeed. Yes, the details out of the NPC in China hotly awaited, and of course the impacts of the US election on China's economy in focus as well, and I'll unpack that story for you across this hour as well. Let's get to the polls then and the Trump trade. The polls giving no clear indication right now of who will win the US election tomorrow. Some investors are pairing the so-called Trump trade, as I mentioned. Let's bring in Bloomberg's Valerie Teitel with more details on how markets are repositioning. Val, what are we seeing?
Yeah, a bit of a repositioning over in the Asia session. It's following through to Europe this morning. We saw a boost to U.S. Treasury futures. They're unwinding a lot of the weakness we saw on Friday after the payroll report. The Bloomberg Dollar Index is also in the red. We're also seeing underperformance when it comes to U.S. small caps. So that is yet another unwind of a popular favored Trump trade. And lastly, Bitcoin is also in the red, down 0.4%, a bit of unwinding the recent positivity there. I want to flip the board and just talk a little bit more about the futures, the FX market that we're seeing. If you look especially, Tom, at the currencies that are exposed to these tariffs, I'm thinking dollar MEX, the Mexican peso, has strengthened 1% versus the dollar so far in the Asia trade. And then dollar CNH, the Chinese yuan, as Avril was talking about there, another tariff-exposed FX pair that we're watching, also strengthening versus the dollar. So there has been an unwind in the Asia session of this Trump trade. Let's flip on and just see how the betting markets have been faring, because over the weekend they did flip in favor for Trump, and it did, in favor for Harris, and a bit overshadowed the kind of moves that we could see in the Asia session on this flip. In the betting markets, they actually flipped on Friday, but Harris climbed a bit further as the weekend rolled on.
Okay, Bloomberg's Valerie Teitel, thank you very much indeed on the market reaction to some of the polls that we've had out of the US in the last 24 hours or so as we close down to that deadline, of course, and the vote on Tuesday. Valerie, thank you. We'll stay on this topic because US Vice President Kamala Harris and former President Donald Trump remain, of course, deadlocked in opinion polls ahead of Election Day. New surveys have them neck and neck nationally, and more importantly, arguably, across those battleground states that will decide the outcome of the US election. Let's get more with Bloomberg's opening trade anchor, Kriti Gupta. Kriti, what for you have been the key takeaways of the most recent polls that we've had?
So you say neck and neck, and that absolutely has been the result of NBC. But what's kind of shaking some of these markets here here's one poll in particular, and that's the one out of Iowa, the Des Moines Registrar. And the reason this one is so significant is even though it's not necessarily a swing state, Iowa has in the past been a swing state, it will not be this time, according to the most recent population kind of counts as well. What you need to keep in mind is this is a poll that has been right 4 out of 5 times in history. So it's seen as a very, very strong gauge. And last time around, during the Trump election, or the Trump win during his first presidency, accurately predicted his win and then accurately predicted his demise as well. That being said, this poll is now suggesting a Harris lead from about 47% to 44% in Iowa. So again, showing that the other polls that you're seeing are not actually wrong when it comes to those Harris leads, specifically in those battleground states. But this morning, it's the Des Moines poll that is taking all the headlines.
Yeah, indeed. So both candidates, meanwhile, throwing everything at it as they get to that final stage of this lengthy election process in the US. What are both candidates doing? What are you watching for in the next 24 hours or so?
Well, digging into the strategies that they've been kind of pursuing so far anyway, a lot of this from the Harris perspective has been vote for me, not just because of my policies, but also because I am not Donald Trump. She's really been leaning into some of the criticisms from his former cabinet members, likes of Mike Pence, John Kelly, among others who have pulled back and said, actually, we've worked for him and he's not the right fit. Trump, on the other hand, really leaning into the idea that Harris actually hasn't done a whole lot during her time as vice president for the Biden administration for some of those key issues like the economy and, of course, like the border. And I think in the last 24 hours, her comments and her track record on immigration has really, of course, been front and center. Remember, the top voting kind of topics or voting issues for this election are the economy, it's immigration, then things like abortion and gun control, all of which are, of course, being talked about on the campaign trail.
Kriti Gupta, thank you very much indeed for the latest in terms of how these polls are shaping up and what both candidates are doing in that last final stretch of this election. Later this hour, we're going to be speaking to Elise Kylene from Stillmark on the impact of the US election on the crypto trade. That's a business that invests heavily in the infrastructure, particularly around crypto and Bitcoin. So we'll get that perspective as Bitcoin softens about 0.3% in the session. Trump expected, of course, to favour that sector should he win that US election. Here's what else to be thinking about then this week. Tuesday, it is, of course, the US presidential election. We will have full coverage of that for you, of course, with all of the market impact throughout Tuesday and Wednesday, continuing into the week, of course. On Wednesday, on the earnings front, we get Novo Nordisk. Those earnings crossing with a touch, of course, on the demand for those weight loss drugs. That will be central, of course, to the earnings story when it comes to Novo. And on Thursday, the rate decisions coming through from the Federal Reserve, expected to cut by 25 basis points. The Bank of England as well in focus, particularly interesting on the back of that budget from Rachel Reeves here in the UK. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Coming up, Chinese lawmakers gather in the shadow of that US election to sign off on a fiscal package that could run into the trillions of yuan. We are live in Hong Kong for what to expect on that and how China is positioning for either Kamala Harris or another President Trump. Stay with us. This is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Tuesday, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7 live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Happy Monday, everyone. Let's return to the US election and the ramifications for China, because the next person, of course, to enter the White House could impact any further stimulus in the world's second biggest economy. It comes as the country's top legislative body meets in Beijing this week to discuss those potential measures. Let's bring in then Bloomberg's Minmin Lo, China correspondent, joining us out of Hong Kong. Minmin, give us a sense of how the US election is being viewed in China. To what extent policymakers and lawmakers in the hallowed halls of Zhongnanhai in Beijing are positioning, thinking about and putting in place measures to ensure that that economy can still be sustained. What impact they expect to feel from this US election?
Yeah, I think the fact that the NPC meeting is being delayed by a few weeks from the usual early October to early November suggests that the policymakers are watching the election very closely. The election outcome would likely factor into their considerations in terms of the final economic stimulus that they plan to announce perhaps at the end of this week. And at this moment, based on what we have been speaking, what analysts have been telling us, any sort of Trump tariff risk is likely already priced into equity markets, and it is going to be those stimulus that will impact the Chinese economy more. And our Bloomberg economics team have done a bit of number crunching to look at what a Trump versus tariff win could do for the economy. So a Harris win could likely mean more policy continuity, and if we do see that continuation of this limited decoupling, our Bloomberg economics team believes it could weigh on China's growth by about 0.4 percentage points next year, and a more serious decoupling could weigh on growth by about 1%. But if Trump wins, that will raise the likelihood of tariffs. A 60% tariff by some analyst estimates could also weigh on growth by about 0.4% next year. But if we do see this global retaliation, that could mitigate the impact on trade as China looks to other more neutral countries to diversify their trade to, and also double down on their self-sufficiency push when it comes to high technology.
OK, so either way, it seems you get a growth hit to the downside for China,
yes.
Whoever's in the White House. Minmin, what are investors looking for? What are analysts focused on when it comes to this National People's Congress, this key decision-making set of meetings over this week? Where is the focus and the expectation?
Yeah, I think market consensus right now is that we could see this 2 trillion yuan in additional stimulus this year, but market expectations are ranging between 6 to 10 trillion yuan if you look at a multi-year time period, perhaps a 3 to 5 year time frame, and these would be bond issuance to support the property sector and also to tackle local government debt. But what is key to watch is really the source, who is funding this bond issuance. If it's going to be local governments issuing new bonds to refinance their own shadow, then that essentially isn't really a form of fiscal expansion. It isn't really the same as injecting new money into the economy. But if it's the central government rather than local governments that are issuing these bonds, then I think that will be welcomed by markets because it would signal that the central government is taking more debt burden away from the local governments. But the wild card is really the consumption measures, whether there will be detailed measures to lift consumption directly, perhaps in the form of subsidies or cash handouts, something beyond that equipment upgrading program that we have seen so far.
OK, Bloomberg's Min Min Lo in Hong Kong on what to watch for from that National People's Congress taking place right now in Beijing. We appreciate it with the details. Sticking with relations between the US and China, of course, both nations, and that tension has been there, facing multiple challenges, of course, in terms of recent years, in terms of how things have unfolded. Both Republicans and Democrats are signalling a tough stance towards Beijing. Our chief North Asia correspondent, Stephen Engel, looks at how the US election is being viewed in China's corridors of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate, because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods, and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that the United States' influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Engel, Bloomberg News.
OK, coming up, Berkshire Hathaway's cash pile reaches a new record. That's as Warren Buffett continued to refrain from major acquisitions while trimming his Apple stake. Once again, we get the latest on the world's most famous investor. That is next. This is Bloomberg.
loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer, only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back to Bloomberg Daybreak Europe. Now, Berkshire Hathaway's cash pile reached a record $325 billion in the third quarter. The conglomerate also cut its stake in Apple once again, this time by about a quarter, so not unsubstantial. For more, let's bring in Bloomberg's Charlie Wells with the details on this. Charlie, so Warren Buffett, $325 billion of cash. There's no acquisitions out there for him. He's not seeing anything that whets his appetite. He wants to pull the trigger on. What's going on? What should we read into this?
I mean, Tom, talk about the definition of a good problem, right? So Warren Buffett likes to buy low and sell high. He's kind of been selling high but not buying low. And, you know, look, the S&P 500 is up about 20% this year. Warren Buffett's own company, Berkshire Hathaway, their share price is up over 25%. And one of the moves that Buffett tends to make when he can't really find a lot of good deals is to buy his own stock. But this is the first time since 2018 when even that stock is looking like it's too expensive for him to buy. But look, you know, Buffett's a patient investor, and he himself has said that he's happy to sit on the sidelines until they can find investments that are very low risk, but could also make them a lot of money.
What do we read into the cut to the Apple stake? There's a lot of hand-wringing, maybe someone said, oh, well, he's seen something in Apple that concerns him. Is that how we should be thinking about it, or is this just a reshaping of the portfolio, reweighting of the portfolio?
Yeah, I think that Apple share sale is probably the flashiest thing to come out of this earnings report. And I think you could kind of read into this in two ways. One is that he's got some questions about Apple, and, you know, they've had some softness, of course, in China. And Buffett himself has never been a huge tech guy, right? He invested in Apple, and that's gone really well for the company. There was a time when he invested in IBM. But on the flip side of this, Warren Buffett himself, at their annual meeting in May, talked about how great of an investment Apple has been, and it truly has bared out in their portfolio. This is probably more of a trim. This is probably more just limiting some of that exposure that they have. This is one of their top holdings, and probably trying to head off some tax hits in the future.
Okay, so tax and a trim rather than a big warning sign on Apple's prospects, maybe. How did the rest of Buffett's conglomerate fare this quarter?
So Berkshire Hathaway, I think you could call it, you know, the last great American conglomerate. And we really have to talk about hurricanes here, because insurance is a really big part of this American conglomerate. And Hurricane Helene, you know, took a really big hit on some of their insurance underwriting. And when you look at that segment of the business, earnings from insurance underwriting were down 70%, so significant there. The company was also saying that in the fourth quarter, so a projection, Hurricane Milton could also hurt there. So that is, you know, one of the more negative readings to come out of this report. Positive upside here in a totally different space is energy. They saw a bit of a rebound there.
Did we get any signals about the future of this business under Buffett as we look into 2025?
So look, I think he's 94 years old. Yeah. He's already tapped Greg Abel to be the next CEO. I think strikingly, one of the issues whenever Abel takes over is going to be that cash pile, right? That is going to be an inheritance of a good problem. What does he do going forward? I think that's what everyone's going to be focusing on.
And incredible, isn't it? 94 and still performing at the highest levels. Charlie Wells, thank you very much indeed for the latest in terms of Berkshire Hathaway, how they're thinking about deploying that cash pile that they have yet to pull the trigger on, and that cut, of course, to the Apple holdings. Coming up, Bitcoin rally, the falter in that rally, of course, linked to what we're seeing in terms of the run up for the White House. We're going to take a look at the impact on the crypto space, the result of US politics. That's coming up. This is Bloomberg.
Politics to the world of business. Joe Matthew and Keely Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The dollar weakens, Treasury futures rise as traders pare back the so-called Trump trade. Latest polls suggest a race to the wire between Kamala Harris and Donald Trump. The 2 presidential candidates rally a last-minute support in the battleground states, with both emphasizing their competing economic platforms. Plus, oil rises after OPEC Plus members agree to delay a production hike, and as Iran is reported to be planning, quote, a strong and complex counterattack on Israel. Let's check these markets then. The earnings story is part of the mix, but certainly the run-up to that vote then out of the US on Tuesday, and expectations, of course, that this is going to be a very close race indeed, as the polls have consistently suggested. But there's a few details out over the weekend in terms of the polling numbers, particularly one poll out of Iowa that has led to an unwind, at least around the edges of that Trump trade. As a result of that, you are seeing softer dollar right now to the benefit of emerging market currencies. European futures pointed to gains of 0.1%. FTSE 100 here in the UK pointing lower by 7 points, down just 0.1%. Nasdaq futures also pointing to the upside, 0.4% gain coming through for Nasdaq 100 futures. S&P futures looking to add 17 points at this stage. Let's flip the board and look cross-asset then, with the focus firmly on the US dollar. Softer then in the session by 0.6%. Euro dollar getting a bid up at 1.08, up 0.6%, largely, of course, down to softer dollar. Brent getting a lift as well. So there's the geopolitics, there's the rhetoric hardening out of Iran, but also the decision for OPEC Plus to push back some of its cuts to supply. That is lifting oil in the session today. 74.42 up 1.8%. Gold trading up just 1 point, currently at 2,737 per troy ounce on the yellow metal. From gold to Bitcoin now, because the cryptocurrency's push towards a record high is faltering, at least in the session today, as investors dial back some of those bets on a win for Republican nominee Donald Trump, widely seen as pro-crypto. I'm joined now by Elise Kalin, managing partner at Stillmark, someone, of course, with deep understanding, deep knowledge of the crypto space and a long-term investor in some of these crypto assets. Elise, talk to us about the movements that we're seeing in Bitcoin today, the linkages between the modest softness we're getting in Bitcoin and what has transpired in terms of that US election. Are markets right to be pairing some of their bets on Bitcoin?
Well, Bitcoin is up 60% year to date. It's almost doubled. It's doubled in price over the past 12 months, and we're only a couple $1,000s off the all-time high. So Bitcoin's performance for the year has done quite well. People may be hesitant around the results of the upcoming election, but we are optimistic, regardless of the outcome of the election, that this will be a positive result for Bitcoin, as both candidates have advanced positive crypto policy agendas.
So whoever's in the White House, good news for crypto. Talk to us about some of the differences, though, Elise, in terms of the potential policy agenda of whoever is sitting in the White House. Do you have clarity on where that difference lies?
So, as I said, both candidates have advanced a pro-crypto agenda. While the agendas have been relatively broad, of course, what's important is how they're enacted, which once we have the election's successful candidate in office. So what we've heard from Harris is that she's looking to advance policy that will allow protection for investors and holders of Bitcoin. And while she hasn't provided a detail of the policies that she would enact, we can assume that this will include actions around protecting self-custody or encouraging custodians to enable self-custody off-ramps that are easy and frictionless for their users. And we would also hope this would include encouragement around the adoption of proof of reserve for crypto banks and exchanges. Now, Trump has said that he would be looking to step back from the crypto crackdown that's perceived to have happened in DC. He's also explicitly stated that he would protect the ability to mine, the ability to maintain self-custody of crypto assets and Bitcoin, as well as to transact without government surveillance. But what I said before is most prominent in our minds, which is that it's the enaction of policy rather than the statement of a campaign agenda that will be important to the industry.
What do you think that means then for both sides, for the future of Gary Gensler and the SEC, who are seen to have been taken a slightly more robust approach, more a combative approach to this ecosystem? Does that mean the wings have been clipped or will be clipped for the SEC?
We expect, or perhaps I should say the industry is hopeful, that either administration would reconsider those in charge at the SEC. We would be looking to find someone that would provide a clear and transparent policy framework that allows entrepreneurs to operate with respect of the law and to know that they're doing so. And for that policy, those regulations to be applied uniformly across the industry. We're also hoping that the new administration will work in partnership with the industry. And what I mean by that is that as policies are developed, that the leaders of the industry are transparently brought in, that the industry's behavior towards self-regulation or what the industry can proactively offer is regarded, and that whatever regulation is advanced, of course, protects innovation and allows for the value of the invention of Bitcoin to be preserved and for end users to continue to access the full breadth of value that is inherent in Bitcoin.
Where do you see, at least where is the catch-up in terms of the US ecosystem versus maybe some other competitors globally? Are there parts of this story where, whether it's Singapore, what's happening in the UAE, that there is an advantage there, a gap that needs to be closed that you can identify?
That's exactly right. So in addition to looking for a clear policy framework that entrepreneurs can count on, build against, and then rely on, and for industry partnership, we're also hopeful that the new administration will look to position America competitively against other nations that have taken a progressive approach to regulating the crypto and Bitcoin spheres. Right now, America is in a position of leadership and innovation. For example, builders of Bitcoin's payment protocol, the Lightning Network, are all based in the US, or excuse me, the leaders, category leaders in the field are all based in the US. So from protocol development to the development of node infrastructure, which is akin to the AWS of the internet, that those companies building that sort of infrastructure are also based in the US, as is the leading compliance software provider for enterprise. And to maintain that sort of advantage and edge, we will need to have progressive regulation that's respectful of the utility that Bitcoin can provide, that's crafted from a studied approach of what the technology offers, done in respect of entrepreneurship and of the value that Bitcoin can bring to end users.
Is generative AI a tailwind or a headwind for crypto, given both the funding demands and the energy demands of both sectors?
Generative AI is certainly a tailwind. And so we also suspect that it's one of the reasons why both candidates have felt the need to advance crypto agendas within their campaign. And so I say this because it's quite unusual. And of course, this is the first presidential election in which candidates have both advanced Bitcoin agendas. This reflects the sort of demand of the constituency, the voting population, or the importance of Bitcoin to the voting population. And that includes the importance of Bitcoin to other nationally relevant and globally important industries like generative AI and the shift to renewable energy, which of course is also relevant to generative AI. Now, what's important to note in terms of Bitcoin and generative AI is that for artificial intelligence and the capabilities that we've seen be introduced in the past 18 months, for that to really flourish and to gain global adoption, that will need to be matched with a payments infrastructure that can handle micro payments at scale. And this is exactly what Bitcoin's Lightning Network, its payment network, is designed to do.
Okay.
And Bitcoin's payment network is the only network in all of crypto that can scale to the transaction capacity that can meet the demands of generative AI.
Okay, Stillmark Managing Partner Elise Kylene, thank you very much indeed on what to expect from either candidate when it comes to this US election and the impact on crypto and some of the other catalysts to watch for in 2025 as well for that space. We appreciate the insights. Now some breaking news across the terminal just in the last couple of minutes. Schneider Electric appointing Olivia Bloom as the CEO, effective immediately. This is according to an emailed statement from the company. It says the board is removing Peter Herweck as the CEO due to, quote, divergences in the execution of the company roadmap at a time of significant opportunities. Olivia Bloom has been at the business since 2001 and is currently the Executive Vice President for Energy Management. The stock, by the way, is up 34% year to date. Now to the energy story. Oil advanced after OPEC Plus agreed to push back its December production increase by 1 month, and tensions escalated once again in the Middle East. Let's get more from Bloomberg's Asia and Energy and Commodities editing team leader, Andrew Janes. Andrew, talk us through the reaction then and what's been driving the decision behind OPEC Plus pushing back by 1 month.
Hi, Tom. Well, this is the second time OPEC Plus has pushed back, delayed this. The plan dates from June when they said they were going to gradually restore about 2.2 million barrels a day of oil that have been sidelined over the past couple of years. It was originally supposed to start happening in October, then December, and now it's been pushed back by another month. They were going to start with just 180,000 barrels a day. The backdrop to this, of course, is the falling oil prices. We're down about almost 20% now from a high point in early April. we've got sort of a faltering demand situation in China, but perhaps more significantly, we've got big increases in production from outside OPEC Plus, particularly the US. Interesting fact that the US is actually currently pumping 50% more oil than Saudi Arabia at the moment, but also from places like Canada, Brazil and Guyana. So I mean, OPEC Plus, I think, have just come to the realisation that it was just a bad time to be restoring production.
That is a remarkable statistic. The US is pumping 50% more oil. 50% more oil than Saudi Arabia. Talk about what else you and the team are watching for when it comes to the oil space this week, particularly with, of course, what we've been hearing from some of the leadership in Iran.
Yeah, hi, Tom. Well, of course, that's the other factor that's pushing up oil today. We had that speech over the weekend from Iran's supreme leader. Really interesting shift in tone there. He was quite measured after the Israeli strike just over a week ago, but in this new speech, he was promising a pretty robust response. We also had a Wall Street Journal report suggesting that they would use more powerful warheads in this attack. So, I mean, that's also been pushing oil up today. You know, ironically, one of the few things that could sort of meaningfully push oil up at the moment would be a significant escalation in the Middle East that sort of started to affect oil infrastructure or transport. And I mean, we've got a few other things happening. Obviously, the US election, we have a Fed decision, we have a big policy meeting in China this week, so, and the Saudi Aramco result. So there's a lot of moving parts here.
Yeah, just a few factors, Andrew. Sounds like you and the team will be very busy indeed. Thanks for the update on the sector. Bloomberg's Asia Energy and Commodities editing team leader Andrew Janes on what is moving these oil markets, with Brent currently at 74.46, up 1.9%. We appreciate it. Now, some other stories making news this Monday. The office of Israel's Prime Minister is being accused of leaking classified documents to foil a ceasefire in Gaza. A judge says 4 people, including a Netanyahu spokesperson, have been arrested and accused of removing sensitive IDF intelligence. Opposition leaders say it's the latest example of Netanyahu manipulating public discourse around the conflict. Netanyahu rejected the probe as a, quote, deep state witch hunt to discredit him. The UK Chancellor of the Exchequer, Rachel Reeves, has said she was wrong to tell British voters before the election that her Labour Party would not announce new tax increases. Last week, she unveiled a £40 billion package of revenue raises, including changes to payroll levies and inheritance tax. And Spain's King Felipe has been pelted with mud and insults during a visit to the flood-hit Valencia region. The Prime Minister, Pedro Sanchez, was rushed away by security, but the King stayed to speak to a group of protesters. Anger is growing over the government's handling of the flash floods, which have killed at least 211 people. Spain's government is deploying 10,000 military and security personnel to the region. And Moldova's president has declared victory in yesterday's runoff election, bolstering her bid to steer the country into the European Union. Maia Sandu won 54% of the vote against a challenger who favoured closer ties with Russia. Sandu has accused Moscow of meddling in the country's democratic process. Coming up, as Ryanair cuts its growth passenger target for next year, CFO Neil Sorahan will join us to discuss the airline's latest earnings. That is next. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but you can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I think we're ready.
Ready? Go.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome back. Now, Ryanair has cut its passenger growth target for next year due to delivery delays from Boeing. The Irish low-cost carrier now expects 210 million passengers in fiscal 2026, down from a previous goal of 215 million. Very pleased to say we can bring in right now Neil Sorahan, CFO of Ryanair. Neil, thanks for coming to the studio. On the back of this, how confident are you can get to 210 million then, given the challenges around Boeing?
I'm hopeful. There's a big vote taking place in Seattle tonight. Labour Union hopefully going to accept the latest deal on the table from management, and we would like to then start seeing our aircraft coming in. This is our best guess on what might happen. We were due to get 11 aircraft in the quarter between September and December. We've received 2 of those. I don't think we'll see any more aircraft this side of January or February. We look like we could be left short 10 aircraft, possibly more, into peak summer of 2025. We're now planning on the basis, as you said, of 210 million passengers instead of 215. We had the situation this summer and last summer where we were overcrewed, we were overscheduled, and we just don't want to be there again. So even if we do get some more aircraft, we'll use those as operational spares. So I'm hopeful rather than confident that I'll see those aircraft coming in. And as I said, we're now planning on the lower growth.
So you're planning, to be clear, you're planning on 10 fewer aircraft than you'd expected for that peak summer season next year. What does it mean for fares and pricing? Because fares have come down, 7% in the most recent quarter. Yeah, do you see further softness in fares to bring customers in?
In fairness, I think the declines are moderating. Bookings are strong into Q3. We think fares will be still modestly down. We're still more cautious on Q3, but I think it's in a better place than it was. We had the impact in Q1 of the absence of Easter. The consumers have been dealing with higher interest rates for longer. They're starting to unwind in Europe now at this point in time. Consumers seems to be a bit more confident. Capacity is definitely constrained. We just talked about Boeing. Their Airbus are having problems getting aircraft out the door as well with the Pratt & Whitney engine issue. We're seeing consolidation playing out with ITA and Lufthansa, and TAP is going to go up for sale. So I think capacity is going to be constrained for some time, which would indicate that potentially more risk to the upside than the downside on pricing. But it's too early to...
More risk to the upside than the downside on pricing.
Yeah.
What's the outlook for the winter season?
Well, we aren't guiding for the full year. We have said in Q3, booking strong, further declines moderating, so a modest decrease. Q4, we won't have an Easter in there. We've got less than 10% of our bookings in the bag, so it's just too early to call where that might actually go for the Q4 period.
Are you going to be cutting flights next year?
Well, as I said, we're planning on the base of 210 million passengers, which is below where we were. So we've got plenty of time out. We hope we won't be. But, it all depends on whether we get the aircraft from Boeing or not.
Where would you look to cut? Is there an obvious place?
Well, I think if you look at the likes of the UK, for example, where we're now looking at another €2 APD coming through. We've a situation where the Swedish, for example, are cutting their APD. We've got the Hungarians cutting back. We've got the Italians in parts of the regions cutting back on their municipal taxes. And at the same time, we're seeing increased increases coming in here. So I think that can't be good for the regional UK. Germany cost base is too high at the moment, so we've pulled capacity out of Germany. The reality is, if we've got less capacity, we've got more airports than we have capacity to fill that. So we're going to go with the best opportunities.
And to be clear to audience, you're talking about, of course, the budget and the increase in passenger duty here in the UK. And you and the team have been quite vocal on that.
Which was a negative step for obviously the UK.
So to be clear, you are considering cutting some routes, or at least cutting some flights in the UK as a result of that, to mitigate that?
There's a high chance we will.
Where would you be looking?
Well, I think the regions are going to suffer more than London. So you'd see possibly parts of Scotland, parts of middle UK, but it's all up for play. I think it was a backward step for a government that said they were trying to stimulate growth and trying to stimulate tourism to do that in the budget last week. But, that's just one of a number of regions which are not stimulating growth. We've got lots of countries which are stimulating growth, and we're very happy to grow there.
Neil, before we let you go, what's happening in terms of, getting back to the Boeing question, the certification of the MAX 10? What is your best guess in terms of the timing for that?
Yeah, it hasn't changed, Tom. So the MAX 10 won't be certified until the MAX 7 is certified. At this stage, I think the 7 will be certified somewhere in the first half of 2025. That would leave the 10 to be certified in the back half of 2025, and then we'll still receive our first MAX 10 in H1 2027. So no changes there. If anything,
are you confident that happens, that time frame?
Look, you can never be fully confident, but I think the one thing about the strike is that there's been more time for the FAA and for Boeing to concentrate on the certification process, so that may have actually accelerated that.
Okay, Neil Sorahan, always appreciate your time. Thank you very much.
Thank you.
CFO, of course, of Ryanair, on the back of those earnings. There's plenty more coming up. Stay with us. This is Bloomberg.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg. The top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, we support, it's often done in the name of good, have hurt the lower 20%. They're dying younger, their income didn't go up for 20 years. They're the ones who have more crime in their neighborhoods, their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. It is very much edge of the seat stuff when it comes to this US election. The predicted markets then, so the betting in terms of the financial markets on who is expected to be in the White House, just tightening once again, with Kamala Harris just about edging a very, very modest lead. The focus over the weekend was on this Iowa poll. The person behind that poll, well respected, but of course it is just one poll, and it showed that surprise lead in Iowa for Kamala Harris. Again, just a single poll when many others suggest essentially a dead heat ahead of of that final election, final vote, of course, on Tuesday. Let's flip the board and have a look at what to expect from the Fed, because they come through with their decision on Thursday. Expectations that you do get a quarter-point cut, but of course, looking into 2025, you're now not expected to be below 4% until about June of next year as markets readjust. Who's in the White House will play in, of course, that longer-term view. The opening trade is up next. This is Bloomberg.
Yeah, I think that it would be irresponsible for us to ignore the AI revolution. I think that as much as there is a lot of short-term hype, I think long-term it has the potential to be transformative. And so we are spending a lot of time thinking about what elements of it are structurally have barriers to entry. And so there is a winner-take-all element to that and which don't. And it seems to me that things like chips, things like infrastructure and systems has a little bit of that, because NVIDIA is so far ahead, it's expensive to catch up. There's, the technology that it requires to build these chips are sort of based in Taiwan. What we're seeing is that some of the apps and some of the applications, there are no barriers to entry, right? Like, it's fairly easy to come up with, and I don't mean to belittle the complexity of it, but there are not moats around those things like they used to. So I think that there is less of a winner-take-all in that space. You're going to have to earn that spot, whereas it'll be fun to watch what happens. And I think there's going to be a lot of money burned in the process because somebody will develop something and a fast follower will come along and make it better and cheaper, because data gets cheaper and more pervasive, and it's going to be easy for new players to come in and do interesting things. So I think we wait and we see.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. We're 1 day away from the US presidential election, with polls indicating a tight finish between Donald Trump and Kamala Harris. The dollar slips while US stock futures rise. Oil rises after OPEC Plus members agreed to delay a production hike amid concerns about fragile demand. Meanwhile, Iran threatens action against Israel. Plus, Ryanair cuts its 2026 passenger goals due to delays from Boeing, its only aircraft supplier.
In the meantime, a quick check on these markets here. When you look at the futures picture, seeing slight outperformance on Eurostoxx 50 futures, higher by 0.2%. The FTSE 100 is the underperformer, but of course we are counting down to the U.S. election. All of that showing up in the currency market. Dollar weakness across the board, spurring some of the bets into things like the Chinese currency. Of course, offshore yuan getting a little bit of a bid this morning. Brent crude also catching a bid off the developments in the Middle East. We're going to dive into that 74 handle on Brent crude. The countdown to the opening trade starts right now.
Good morning. Monday, the 4th, election eve. We are waiting for the United States. The world is holding its breath. In just over 24 hours' time, Americans will start in-person voting. When we will get the results remains an open question. It's going to be an interesting week, Critty.
It really is, and I think this is going to be such not only tight finish as Anna was talking about, but it is also going to be this idea that it paves a little bit of a volatile period for about 6 weeks after that, regardless of who wins. That feels like the scary aspect. In the last 24 hours, this poll out of Iowa making a lot of headlines. For a global audience, I think this is really important here. This is a poll. We've gotten plenty of polls, but this is a poll that's been right 4 out of 5 times in what has been a major swing state. You're seeing that showing up in some of the betting, sorry, not the betting odds, but the way that the markets are betting on this in terms of the dollar, in terms of Treasury yields. The chart on your screen right now showing that really in the last year or so, according to the Goldman Sachs policy indexes, you are actually seeing the Republican policy basket still outperforming.
Right, yeah, it's really interesting. So the dollar down, the yuan up, the VIX has been increasing. You're right, the Des Moines, Iowa poll certainly getting a lot of attention over the weekend. But uncertainty and reducing exposure and reducing risk in portfolios seems to be something coming through from a lot of the copy that colleagues have been writing or the guest notes we've had ahead of shows this week. I was drawn to some comments from Calvin Yo, Blue Edge Advisors, who said November the 5th is going to be a blindfolded mud wrestle in a minefield, which I think sets us up for something that is just impossible to call right now, and many investors fully aware of their limitations in that.
So investors being the operative word there. If you want to invest in this, it's very hard. If you want to bet on it, great, you can go and do that. But it is a coin toss, it seems, at the moment, and really hard to call. Volatility seems like the only kind of trade that people are willing to put on at the moment. It's interesting to see Bitcoin fading a little bit as well. That seems to have been something of an indicator of Trump's ability to win this election. But it's impossible to get a kind of sense of what is going to happen here. And we may not get that sense for days still to come.
We should make the point as well that on the Bitcoin front, Kamala Harris has done quite a bit to try to kind of seduce that crowd, and it has not paid off at all. So Bitcoin's going to be a really fascinating one to watch.
Absolutely. So we'll wait to see what the result is. And crucially, as you point out, both of you, when we get that result, that's going to be such a huge uncertainty hanging over markets, how quickly or not that result materialises. Oil in focus this morning. We're up by 1.8% on the Brent price, 74.42. And there's a couple of factors in play here. OPEC Plus delaying the return of some of their output. They've been scheduled to do that for December, and it looks as if they're not going to do it for another month. Had intended to increase by 180,000 barrels per day. But there are other things we're watching here. Middle East tensions, of course, and we heard from the supreme leader in Iran what he is threatening against Israel. Crushing response is the language he used, followed up with the Wall Street Journal story that's trying to add some timings to what that might look like. So we're certainly watching that. But oil volatility is near a one-year high, and it's not just those two factors we watch. We watch the US election. We watch what China is doing. We watch all the developments on the Chinese political front.
It's interesting. It does seem to have been a very fundamental story, though, oil, weirdly. The geopolitics has moved oil around a little bit, but the fundamentals have always come back and asserted themselves. OPEC was meant to be raising capacity in October. Then it was pushed to December. Now it's being pushed into next year. This is a fundamental story about what the supply and demand balance looks like. They can't deliver what they'd hoped to deliver.
I think it's fascinating, though, is that we keep talking about the geopolitical premium and the OPEC premium kind of built into it. And there doesn't seem to be that one built to the upside as much. But the downside, when we talk about ceasefire talks, when it's a little bit more plausible, that's when you see 5-6% moves in oil to the downside, which really speaks to that volatility point that you were mentioning, Anna. I'm curious to see how much of oil is actually tradable on the U.S. election. I'm not even sure if it is.
Yeah, we're going to have a really interesting conversation, though, about the way that the different candidates differ on their stance around energy markets. Now, one sector, of course, that follows what happens with oil prices very closely, aviation, Guy.
Yeah, here in Europe we hedge it a lot. Certainly the airlines here in Europe make sure that they are much more hedged on the oil fronts than their US counterparts. But we've got some news out this morning, got some news out from Wizz, but the main area of news coming this morning is from Ryanair, cutting capacity next year in terms of cutting the number of passengers and things it will carry next year by around 5 million. This is basically down to the fact that they use Boeing aircraft, and there aren't any Boeing aircraft, and there's a strike taking place. But that strike may come to an end tonight. The union has endorsed the latest deal. It looks like it is going to be a very close vote, but it looks like increasingly there is some fatigue. What is interesting here is I was just talking to Neil Sorohan on the way out. He is the CFO at Ryanair. He says that even if the vote is clear this evening, i.e. tomorrow morning we'll get the result, you probably won't see Boeing back to full capacity until early on next year. This is going to be a story that is going to continue well into next year in terms of the impact it has, not only on the aviation sector, but also on the US economy. This is a big exporter, the biggest exporter for the US. So there's going to be an effect coming through for a while.
And we certainly saw that part of the conversation on Friday when we got the payrolls number, heavily affected by strikes and by hurricanes, of course. Really interesting to think about where this Boeing story goes. And you mentioned the union bosses backing it. I mean, they backed one before, didn't they? One of the offers before. But the language this time around does seem to be pretty strong. Union bosses saying in every negotiation and strike there is a point where, and suggesting, you know, this is the time to say yes to this one.
The fact that we're actually seeing Ryanair talk about such substantial cuts, specifically in the UK, is not a ripple effect that I necessarily saw coming.
That's not a Boeing effect, though.
I see.
That's an APD effect. So the UK has raised the tax on flying, and they are pushing back against that. Michael O'Leary, MOL, has been very vociferous in the language that he's been using around the fact that the UK has been raising taxes on flying. He wants the UK to lower those to stimulate demand. The UK is going in the exact opposite direction. He's saying that that will affect potentially the middle of the UK, potentially Scotland, in terms of the capacity they put on next year, which is going to be limited. So where they put that capacity is going to be really interesting, because they're going to have too many airports and not enough aircraft. So the UK could suffer as a result of that.
Assuming they get the ones from Boeing.
Well, yeah, they're going to get some, but they're not going to have as many as they thought. So they'll have more operating bases potentially they could go to. So where do you remove some of that limitation? OK, let's talk about what we've got coming up in the rest of the show. Very shortly, Frederick Repton, Senior Portfolio Manager at Neuberger Berman, is going to be joining us. We'll talk about the fixed income trade into the US election. Nancy Curtin, CIO at Tiedemann Global, is going to be joining us around the open. Plus, Anne-Sophie Corbeau, Global Research Scholar at the Centre for Global Energy Policy, the Central on Global Energy Policy, it says in front of me. I'm pretty sure that's correct. And former head of gas analysis at BP is going to be joining us, Kriti, a little bit later on.
Yeah, it's going to be a really interesting election conversation, I imagine, kind of throughout every conversation that we have throughout the program. There's plenty of other stuff happening this week as well, because, yes, the U.S. election is on Tuesday, but, of course, we may not get the results until as late as this weekend. So there is a little bit of other things to keep an eye on, including, by the way, plenty of central bank decisions around the world. The BOE, the Federal Reserve, is going to be hitting the wire as well. How much of the election narrative is going to be baked into that as opposed to the fundamentals? I imagine Chair Powell will get some questions on it. It's certainly going to be something we're going to be thinking about quite heavily. Plus, plenty of earnings results on both sides of the Atlantic. Novo Nordisk, as well as ARM and Qualcomm, will be, of course, something that we cover as well. Plus, China. This isn't something we talk about that often in terms of something to watch in an election week, but it very well could be, with the NPC convening today all week long.
Yeah, this takes all week, doesn't it? And the question that hangs over this is what resources are available? We've heard some of the policy direction, but there's not necessarily a great deal of clarity as to the actual amount of money that is on the table here for local government debt restructuring, for housing market, for bank capital, for supporting domestic demand. The last one, of course, crucial for many European businesses.
Absolutely, but it now looks like most of this is going to fall into next year. This isn't a this year story now, this is a next year story. And how long does it actually take to start having an impact as well, I think, is an open question as well. So there's a lot to be decided, but the impact of it could take quite some time, and it'll be interesting to see the outcome of the US election and how that ultimately determines how much stimulus the Chinese are prepared to put into their market. If Trump wins, are they going to see more stimulus being put in because they feel that they need to drive up demand domestically to counter some of the trade and tariffs that potentially they could be facing as a result of Trump presidency?
Yeah, absolutely. Their currency, one of those on the move this morning as we see some of those dollar bets being unwound. Interesting to watch those central banks, of course, as you say, Kriti, not just the Fed. More than a third of the global economy this week will give us their decisions around interest rates. 25 basis points cut seen, of course, at the Fed. So the question there will be what happens in December, whether we get any clues on that. The Bank of England is really interesting then after the budget, because after the budget, the market reacted aggressively to the OBR numbers out, predicting more inflation, suggesting we'll get fewer cuts from the Bank of England. We talked about that a lot last week. And Reeves out over the weekend talking about holding back, being tougher when it comes to public sector pay, and, you know, a sense that perhaps that's the message that the market would like to hear right now. Maybe that's why we're getting those kind of messages from number 11.
Well, that's the inflationary aspect of all of this. How big an impact will the pay rises that have been dished out thus far, how big an impact will they have? I'm really fascinated to compare and contrast the OBR forecast and the Bank of England forecast and see how different they are in terms of their outlooks, whether or not the concerns around the OBR forecast and some of the errors that have been made there are going to be consistent with what we're seeing from the Bank of England. I'm not saying the Bank of England is going to be putting errors in there, but I think you'll get a sense of how important those errors are in terms of the forecasting that we're going to be seeing.
We'll have to see how this all shakes out with the markets as well. Especially this week is crucial because last week we saw so much volatility in the gilt market and it was all over that. But you made a crucial point last week, which is that so much of how the gilt market now kind of acts after the budget will be as a function of what happens at the Federal Reserve. 12,000 in that payroll number. I mean, I think we all expected it would be an anomaly, but to 12,000 is wild.
Who knows? Honestly, I just think we knew with these numbers going to be all over the place. They are all over the place. Yeah. And I don't know what the revisions are going to look like. The revisions have been substantial recently. Talk about forecasting errors. Really difficult to judge at the moment what this data are telling us.
Yeah, once again, you've got a data print that you can sort of paint any story onto, I suppose, depending on how much emphasis you put on the strikes and the hurricanes and all of the one-off factors. Interesting that yields, treasuries are open now, aren't they? Since the top of this hour, they were closed through the Asia session, no trading in Tokyo. And we see those yields coming down a little, Critty, after we've talked about, a lot of yield rise as Trump trades essentially were priced into markets over recent weeks.
Yeah, it absolutely is. We'll have to see how that all shakes out right now. We're looking at 416 on the 2-year, 431 we'll call it on the 10-year at the moment. But a pretty kind of, it feels like almost steep decline that we're seeing in the yields picture. We'll see how that shakes out. A lot of that, by the way, in function perhaps to the polling that we got over the weekend.
Iowa certainly potentially having a big impact here. And maybe that is what's being reflected. Yeah, 4.3. That's the US 10-year right now, down 7 basis points this morning. That's a pretty decent move. What else do you need to know this Monday morning? Let me run through the details. The office of Israel's Prime Minister is being accused of leaking classified documents to foil a ceasefire in Gaza. A judge says 4 people, including a Netanyahu spokesperson, have been arrested and accused of removing sensitive IDF intelligence. Netanyahu's rejected the probe as a, quote, deep state witch hunt to discredit him. Spain's King Felipe was hit with mud and insults during a visit to the flood-hit Valencia region. The Prime Minister, Pedro Sanchez, was rushed away by security, but the King stayed to speak to a group of protesters. Anger is growing over the government's handling of the flash floods, which have now killed at least 211 people. Spain's government is deploying 10,000 military and security personnel to the region. And NVIDIA is set to replace Intel in the Dow Jones average before the US market open on Friday. The change reflects the boom in AI and a major shift in the chips industry. NVIDIA's market cap has grown to more than $3.3 trillion. I'm not a big fan of the average. Who cares?
It's been said. We've been there.
People who want exposure to NVIDIA through index care, suddenly they've just made the Dow far more relevant.
It's not an index, it's an average.
I can't have this argument with you right now.
Oh, yeah, we can do that in the break. I'm so glad we've added another reason to argue about the usefulness of the Dow. Coming up on the programme, Warren Buffett cuts his Apple stake further, while Berkshire Hathaway's cash pile continues to grow. We will dig into the details of the company's latest earnings. Plus, Ryanair is seeing a Boeing impact, as we've been discussing, while striking workers at the plane maker are set to vote on the latest offer from the embattled, from management. Up next, markets have a lot to ponder this week between US elections and central bank decisions. We will discuss the impact of all of that. How is the market positioned as we go into this incredibly consequential week? If you have any questions, if you want to be part of these conversations with our guests, then please do get in touch. IB plus BBTV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
November 5th, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7, live from the Battleground States and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Earnings season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onin, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Thursday, the Fed decides.
Is this a Fed just dealing with debt and deficit?
It's about the election. It's about the Fed, especially at a time where you have those yields creeping higher.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We now see the risks to achieving our employment and inflation goals as roughly in balance.
We've got a statement, a decision, and a news conference.
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
Welcome back to the opening trade, 7:18 this Monday morning here in London. Now, with the polls giving no clear indication of who will win the US election tomorrow, some investors are pairing the so-called Trump trades. Let's see what evidence we have of that. Bloomberg's Valerie Teitel is here to explain. Valerie, good morning.
Anna, we're getting a glimpse of a kind of price action maybe we can expect on election night. We're seeing quite a reversal in those favored Trump trades. We're seeing U.S. 10-year yields with a big rally this morning, nearly 8 basis points. The Bloomberg Dollar Index is soft, down half of 1%. And we're seeing underperformance in small caps. These are all things that were favored under the Trump win that we saw priced in the latest weeks. We're seeing that a bit reversed. I want to delve in deeper to the currency picture, though, because we've seen those currencies that are more exposed to tariffs being the ones on the board this morning. Dollar Mex, the Mexican peso, has been strengthening versus the dollar that is known as an economy that is very much exposed to these Trump tariffs. And dollar CNH. CNH is strengthening by 0.5% to the U.S. dollar. It doesn't seem like a lot, but it is a managed currency. So this is its 5th biggest move in the last 12 months. So keep an eye how that trades. I also want to note just how the betting markets have flipped into favor of Harris. We did have that poll out from Iowa on Saturday, and it seems since then Harris has taken over Trump in the betting markets. Anna.
Thank you very much. Thanks, Valerie. Valerie Teitel with the latest on the Trump trades.
So what is happening this morning, I think, is a really interesting question. Are we seeing the 10-year reacting to what we got on Friday night? Nobody could really figure out what was happening with the payroll number. A lot of volatility around that. Or is it a reversal of the Trump trade? I don't know. It's really hard to call. Probably a little bit of everything into the mix this morning. Frederick Repton, Senior Portfolio Manager at Neuberger Berman, joining us around the table this morning. What do you think?
Well, interestingly enough, yields sold off into the close in the U.S. on Friday. So part of what we're seeing is just a reversal of the price action that we had on Friday that, to your point, was hard to explain. Right? Was it due to the fact that the unemployment rate actually looked pretty good, whereas the payrolls were weak and market participants were preparing? Because let's remind ourselves, it's not only the U.S. election, there are so many other things going on this week. Today is 3-year supply from the U.S., on election day is 10s, and the day after election is 30s. And we're also getting 10-year supply from the UK on election day, which will be very interesting to see how market participants take that. So there's a lot to discount here for market participants. But if you look at the Wellington Open, it's quite clear. Polls have tightened, to Valerie's point, betting markets have tightened, polls have tightened. It's really hard to tell. Right? It's on a knife edge. It's really hard to tell what's going on.
How much money do you think is on the table right now? Is money waiting to get invested after the election? How clear an indication do you think we need to see in terms of the outcome of the election before people actually start making serious investments around what the next 4 years is ultimately going to look like?
That's a really interesting point. And so if you look at the price action, you would suggest, well, maybe you don't need that much, right? But it also depends on positioning. However, if we take a step back and we say, well, in 2020 it took us 4 days to know exactly who was going to take it, we think it will take something like 2 or a little bit longer. But in terms of the different reactions of the asset classes, FX moves first. I think we saw that, to your point, in Wellington Open. FX can move first. Why is that? Because in FX, it matters more about who's going to take the presidency rather than the whole suite of government. And so, of course, if you have a Trump victory, then you have certain FX trades that would perform. But on the other hand, if you would have Harris victory, you have other ones. And particularly, the dollar would sell off in that scenario. And that's what we've been seeing on the Wellington Open, of course, as odds been tightening.
You mentioned the various currencies. Which one is top of mind for you? I think the easy ones we pick are, of course, the Mexican peso, the Chinese yuan, the Canadian dollar. Are there other ones, specifically in Europe, that are feeling that?
Well, of course. Like the euro in particular, right? The euro is probably the one where you can have the largest volume, and so it's going to be a decent mover. But if we look at it from a different perspective, so Trump victory, right? Small and open economies, the economies where import plus export over GDP is a high percentage, they would struggle in all likelihood under Trump, assuming he puts in the tariffs that he's been talking about, which is 60% on China and 10% on the rest of the world. So the Scandinavian currencies and also the Eastern European currencies. So you have Poland, Hungary, Czech Republic, probably more so Poland, would struggle in that scenario. That's roughly the playbook that we saw in 18 and 19, if we remember the weakness that actually pushed the ECB to go into negative rates as well as doing extensive QE. On the other hand, of course, if Harris wins, you're likely to see volatility coming down and risk premium being lowered. And so in that scenario, also if it's a split government, the Fed may not have to keep monetary policy as restrictive. And so in that case, we think carry would come into play. So to your point, Mexican peso, there's also risk premium with regards to trade tensions and the upcoming renegotiation of the USMCA there, but also the Brazilian real could be very attractive, right? These currencies are the ones that have been selling off significantly and offer a lot of carry.
The renegotiation of the USMCA is fascinating because Trump, of course, created that renegotiation from the NAFTA as well. Talk to us a little bit about parity and the likelihood of parity when it comes to euro-dollar in a Trump 2.0. Is that something we have to revisit?
I do think so, eventually, right? And of course, there's a lot of caveats here. But of course, in a Trump victory, assuming that it becomes a sweep, then of course he's got a lot of executive power also on the fiscal side and on the trade side. And so you have a double whammy for Europe, where the US economy is performing really well, and we could talk about UX exceptionalism well. And of course in Europe we have our own issues, as we know, with France. It looks like Italian growth is now slowing down a little bit. Spain is the shining light in Europe, but all the other economies are struggling. And if growth then slows down, you get issues also on the budget side, right? France would be in trouble. Even Germany, assuming that the debt brake stays, it would be challenging. And it may take quite some time before the fiscal buffers then start moving forward for growth for Europe.
So that's the European story, and the election in focus very much this week. We also have the Fed, of course, and we have the Bank of England with the rate decision and some other rate decisions happening. Focusing in on the Bank of England because of the gilt market moves that we saw last week. We've had this news over the weekend. Rachel Reeves saying there's going to be more discipline around public sector pay, which is an interesting line to drop into the conversation at this point. But what we really, I suppose, want to hear as well is what the Bank of England thinks will happen from here, given what we heard from the OBR. The OBR now assumes there will be fewer cuts from the BOE because of inflation.
Yeah, so really good point, right? And so let's remind ourselves that the OBR forecasts are not the same as the Bank of England forecasts. They have independent forecasts. And so one of the things that we'll be looking into is the multiplier that the OBR has, which adds 0.65 percentage points to 25-26 growth. Is that really the same for the Bank of England? Had it not been for the budget, we would have thought the Bank of England would be reasonably pleased with what they've achieved here. Services inflation is coming down. It's at 4.9% now, lowest for quite some time. Headline CPI is below target. Core has been lowered. So this is good progress. And I think
that was the thing we heard most recently from Bailey, was about more cuts.
Indeed.
Not fewer.
Well, we do think the forecasts are going to be conducive for a slightly lower path for rates, which stands, of course, in contrast to what we've been seeing in terms of market reaction here. And so it's going to be a critical week. And also that supply that we're seeing the day after election, very important. But we had expected the government to come out and give us some tidbits in terms of fiscal sustainability here and responsiveness.
Yes, absolutely. We got a bit of that at the weekend. Interesting, the timing of this week as well, the fact that we're going to get Bank of England and then Fed, as opposed to the usual order of things. Frederick, thank you very much. Frederick Repton, Senior Portfolio Manager at Neuberger Berman, with us this morning to preview a really busy week ahead. Coming up, Berkshire Hathaway's cash pile reaches a new record as Warren Buffett continued to refrain from major acquisitions. We'll get the latest on the world's most famous investor next. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer, only on Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Our first job is to intimately understand and anticipate the consumer's needs.
It's an incredibly fun job, for sure.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
Competition's moving faster. The world is moving faster. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this fall, only on Bloomberg. Brought to you by Workday.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
30 minutes until the start of equity trading here in Europe, 30 minutes to the start of the opening trade. The fireworks come in many ways tomorrow. It is the 5th of November. It is the US election. It is election eve today. US futures at the moment not giving us a clear indication. The actions in the bond market this morning, European futures this morning, not giving us a clear indication. I think probably the equity market may sit on its hands for the next few days. The bond market, though, is doing something interesting this morning. It's being led out of the United States, as you can see. You've got European bond markets moving a little bit this morning, but the US 10-year, which has just opened because Japan has been closed today, is basically reversing the move we saw late Friday. So we are seeing a big bid into the US bond market this morning. And we're basically kind of where we were pre-payrolls, which is really interesting, Critty. The market seems to be basically now ignoring that number and looking ahead to the election.
Yeah, we got to keep an eye on the ripple effect, though. When you look at a bond market move like that, does it show up in the currency picture, which we're already seeing that dollar weakness story? Does it show up in the oil picture as well? Remember, the inflation trade is still very much on, linking commodities to the bond market. Let's go to that commodity story now. Oil advancing this morning after OPEC Plus agreed to push back its December production increase by 1 month as tensions escalated again in the Middle East. Bloomberg's Jumana Bersachi joins us now from the world's largest energy event, ADIPEC. Jumana, what did we learn from the OPEC Plus decision? Walk us through the thinking there.
Yeah, well, Guy just talked about fireworks on Bonfire Day tomorrow, November the 5th. It's certainly been quite a few fireworks at the start of this ADIPEC conference. With that decision that came through late last night from OPEC Plus to delay the decision to put back 180,000 barrels per day from December onwards just by 1 month. So enough of a technical decision here to provide a little bit of support to the market. But as we have been talking about the last couple of months, plenty of concern from industry leaders, from OPEC Plus about the state of global demand here, particularly some of the signs coming through from China, in addition to the growth of non-OPEC Plus supply. We had a nice chart on the terminal just a couple of weeks ago showing that the growth in U.S. production has basically fully compensated for the reduction in production that has come through from OPEC. And so that has to be really playing on the group's demand forecast and supply forecast when they look out into the future ahead. But today specifically, we are seeing about not just on back of OPEC Plus decision, geopolitical considerations back at the forefront again. Over the course of the weekend, we got some commentary from Iranian leadership, the Ayatollah suggesting that Iran would actually consider a response to the Israeli missile attack that happened a week ago. Initially, right after the attack, they were sort of moderated. They didn't really say a lot the first couple of days, muted in their response. But that changed, it seems, over the course of the weekend, perhaps because some of the hardliners within the leadership of Iran are now pushing for a more forceful response. So keep an eye as well on the geopolitical backdrop as we head into what could be a very important conference for the energy complex.
Jumana, you're in the perfect place then to understand how those in the energy markets are going into the US election, how they're feeling about Chinese demand, what they make of the latest moves from OPEC Plus. What are you hearing there at ADIPEC?
Yeah, well, certainly U.S. elections is a big elephant in the room. We just had the opening panel over here. A couple of questions were put forward about how the region would respond to either Harris or Trump win. They dodged the questions, I've got to say, pretty diplomatically. But certainly there is concern about how much production is still yet to come in the U.S. And not just production, it's also technologies, the advanced technologies. Shale drilling has really transformed the space over the last couple of years. But I thought it was also interesting to see how some of the themes have evolved from a couple of years ago. A few years ago, we were talking about the energy trilemma, that is gaining access to energy that is affordable, sustainable, but also equitable. That was the big theme the last couple of years. Now, there's talk about the rise of the global south and the energy demands that those necessitate. Also, a very big theme this year has been the rise of data centers and what that means in terms of the demand for energy going forwards. And just to give you some numbers that came out from that opening speech by His Excellency Sultan Al-Jaber, he's saying over the next 6 years, data centers will more than double, requiring at least 150 gigawatts of installed capacity by 2030 and double that again by 2040. Their premise is that you need to be investing in all forms of energy. Hydrocarbons, per the official commentary, will continue to be part of solution, but then so will renewables and so will nuclear, which is a part of energy that the UAE themselves have been investing heavily in as well. But data centers and AI, obviously, as AI is everywhere, a big theme this year at the ADIPEC conference.
Yep, continues to be a topic of conversation in many geographies. Thanks so much, Bloomberg's Jumana Basetchi with the latest from ADIPEC. We have another conversation on energy policy, but through the lens of the US election coming up later in the programme. We'll speak to Anne-Sophie Corbeau, global research scholar at the Columbia Center on Global Energy Policy and, crucially, former head of gas analysis at BP.
OK, let's turn to another company that's firmly in focus this morning. Berkshire Hathaway's cash pile reached a record $325 billion in the third quarter. The conglomerate also cut its stake in Apple again, this time by around a quarter. For more, let's bring in Bloomberg's Charlie Wells. Buffett's selling Apple, but why?
I mean, look, so there's kind of two ways you could read this. You could read this the, like, interesting, spicy way, which is that maybe Buffett has some questions about Apple. He's never been a really big tech guy. Apple has had, you know, a slightly difficult year. They've had some slowdowns in China, of course. The flip side of this, and I think probably the more realistic read, is that their equity exposure on Apple was huge. And so they had to kind of trim that down a little.
This is a portfolio effect story.
This is a portfolio effect story, and also a tax story as well. I think there are concerns from Buffett about tax raises in the future, so selling now could potentially head off some of those hits.
Well, walk us through some of the other bets, perhaps, that Warren Buffett has been making. He's a value investor, which originally, when he took this Apple stake, people were like, wait, what's going on? But he kind of made the case that Apple is a value stock. If not Apple, then what?
Yeah, I think interesting, Apple, like a value investment, also a consumer company as well, right? I think Buffett loves a consumer company, and that iPhone there really is the consumer there play. I think, interestingly enough, you know, we've been seeing over the course of this year and in that third quarter, also him cutting some Bank of America stakes as well. So that was one that really played off well for Berkshire, but that they have been exiting. And now, of course, that they're under that 10% ownership of the bank, they don't have to report their moves quite so frequently. So that should benefit Berkshire as well.
And what do we read into the fact that they can't seem to find places to park the cash right now, or they just don't want to put that money to work?
Yeah, so they were net sellers of equity, and they parked those proceeds into short-term T-bills. And there's this sense that there's just nothing out there to buy. But, you know, Buffett himself said at the annual meeting earlier this year that that's fine. He's okay to wait. They want to look for, you know, low-risk investments that could also make them a lot of money. They don't see a lot of those out there right now. I think something striking about this third quarter, Anna, as well, is that usually in this kind of environment, Berkshire will repurchase their shares. But they didn't do that this quarter, and that's the first time.
This is the biggest and most interesting kind of tell on what his thinking looks like at the moment. If you think your own stock potentially is overvalued, it's gone up actually in the interim period, but if you think your own stock is overvalued, that tells you so much about his perception of what he thinks the wider stock market is. If you can't even buy your own stock, why are you going to buy anybody else's?
No, that's a good point. I mean, everything's too expensive. And, you know, unlike a lot of other financial firms, that permanent capital means they can just sit around and wait.
Can we talk about the other factor here, which is that Berkshire Hathaway is a major insurer and that we aren't actually seeing that much strength in their insurance business, despite, I should say, strikes, hurricanes that, of course, hit the payrolls numbers. How's it hitting Berkshire?
Yeah, Kriti, it's so important that you brought that up, because actually in the third quarter, their earnings from insurance underwriting were down 70%. And you've got to think about hurricanes here, right? Hurricane Helene hit in the third quarter, and that was a headwind for them. The company also said that Hurricane Milton, which clocked over into that fourth quarter, that's going to have a hit going forward. Yeah.
No, it's fascinating. I mean, we talk about the insurance business. Berkshire does so many different things. They're an investor, they're an insurer, they are a real estate. They have a real estate company, Geico. Not to mention, we could go on and on. Bloomberg's Charlie Wells, of course, standing by with all of the insight there. Again, it's fascinating to me, at least what Berkshire picks, because his bets on Newmont, his bets on gold are also something that come up fairly often. So if you're talking about this risk-off strategy and going to gold, the Newmont bid is also one to keep an eye on.
I'm in danger of mixing up the time frames here, I'm sure, but really interesting to see whether, you know, he's got a lot of cash there, and he's sitting on a lot of cash. I mean, we've got a big event taking place this week, the election. I wonder if he's leaving himself in a position to take action based on what he thinks the next 5 years of US politics are going to look like.
He is looking for better valuations, though. Ultimately, he wants to see a better entry point, and clearly he is not finding that at the moment. He's selling out of a number of major positions, which I think is interesting. He's not buying back his own stock. He's sitting on a lot of cash, despite the fact that cash is potentially going to be yielding less and less going forward from here as well. So it's going to be interesting to see what is the trigger, as you say, for Buffett to get back involved. how big a valuation drop do we need to see in order for him to take action?
Clarity enough, or does everything just have to be cheaper?
Well, the other thing we have to keep an eye on is we talk about Apple and how kind of big of a deal it was that they even invested in Apple in the first place. I'd be curious to see when he says NVIDIA is then a value stock, because he has had kind of a love-hate relationship with Intel as well as a major kind of bet on chips. If you're saying that chips are the new oil hedge or a value pick, when does it show up in the likes of NVIDIA, which, by the way, is now a Dow component, or will be in a week?
She likes to mention that just before a break, just when we don't have time to explore it in any great detail. Guy, maybe that's
Nobody
good.
Cares.
Maybe no one wants to hear that conversation. Coming up on the programme, we take a look at Ryanair after the airline cut its passenger growth target amid Boeing jet delays. A very clear link between the two there. We will focus in on what Ryanair has said this morning. That's next. And other stocks to watch. This is Bloomberg.
I prided myself, probably wrongly, having worked in many countries, been brought up as a child in the Middle East and in the Far East, having a mother who was not British, she was Hungarian, she was a survivor from Auschwitz, and I was the son of a Holocaust survivor, and being involved with lots of people, I thought to myself, I know a lot about diversity, and I know about inclusion and not being included. But actually, when I came out, I realized that my level of understanding was not very high. And actually, I could see both the support and the rejection of being different, and what you had to do to live a life where you were different. And I'm immensely pleased that I was outed when I was 60, just under 60. Because had I not been outed, I probably would have said I could stay in the closet and still believe that I knew everything, which I didn't. And that was a very important moment for me.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
$15 minutes to the opening trade here in Europe. It is going to be an incredibly busy week. We've got so much on deck, so much potential for volatility this week. The election absolutely front and centre as well. But there's plenty of other things going on as well. So let's find out what's catching Kriti's eye this morning. Over to you.
Well, of course, everything U.S. election related is going to be catching my eye. But I think what's really crucial here is how the markets are interpreting this ahead of the U.S. election. Of course, you look at some of the asset prices that are moving this morning, the dollar, Bitcoin, maybe even Treasury Treasury yields, if you're willing to go there, you would say that perhaps there is a little bit of concern around the Iowa poll. But take a step back here. This is a really interesting benchmark that I like to look at. These are the Goldman election baskets, basically looking at, of course, what a Republican policy basket looks like and a Democratic policy basket. The Democratic one in the white line, the blue line is, of course, going to be the Republican one. This is crucial in that right now what you are actually seeing is outperformance when it comes to the stock market in the Republican basket. That's this blue line right here. It is starting to turn, but it is outperforming. And it's not specific to a Trump trade. It's really talking about a red sweep. And that's where the market is looking like, at least from a stock market perspective, really placing their odds. Go back in history, though, and you can see how volatile this term has been. You can actually see this idea that back in the pivot points of this chart was the Trump assassination attempt, a boost for the Republican kind of bets there. You can also see this move down here from when Kamala Harris took over from Joe Biden in terms of Democratic national ticket, is what I'm going to try to say, a bump there for the Democratic basket, all the way into the debate that you saw over a month ago already again. But then a real pivot point, a real turnaround, as again, Anna Guy, that comes down not just to who's in the Oval Office, but who makes up Congress. And that's where that red sweep bet is really showing up.
Let us move this conversation on then, Chrissy, and with that in mind, put that in a wider market context. Let's talk about the markets in 3 minutes. Our Markets Live executive editor, Mark Cudmore, with us with thoughts ahead of the US election and beyond. Mark, good morning. So, Chrissy, they're talking about how we're seeing evidence in markets of changing expectations around whether we get a Trump presidency and also whether we get some kind of red sweep in Washington. Do you see those trades evidenced in the market? I mean, the dollar seems like the obvious one.
Yeah, very much so. That's the dynamic here, though. I think it reflects a lot more about kind of position pairing because of the uncertainty rather than a real change of expectations. Talking to endless traders over this weekend, I was away on holiday last week. I've come back and tried to poll as many people as possible what their kind of expectation is. Most people are positioned for a Trump victory, but very tentatively positioned for it. So there tends to be a bias in the market, and we've seen that as positioning in the last few weeks, that Trump is likely to win. But people acknowledge that polls seem to be second-guessing themselves. There's much more questioning of whether they've potentially overcompensated or undercompensated for problems in getting the correct polling sample in the last two elections. And because of that, people do not have high risk exposure. They do not want high risk exposure going to the election. So I think the dynamic that we've seen over the last couple of sessions is more about just paring back a bit of risk rather than suddenly swiveling to think that Harris has a much greater chance.
When do we start to see the big direction? What will it take? How high is the bar? When are these investors going to be looking to deploy money into the market? I'm really curious about how they see this week evolving.
I think that for all the hedge fund guys, they're going to be acting about lunchtime Wednesday. By about 9:30 p.m. Eastern time, 10:30 a.m. Hong Kong, Singapore time, we'll get enough input from key swing states to know whether the polling adjustments have undercorrected, overcorrected, or whether they're in line. And that means the people with the most accurate models by around that time on Wednesday should have, that's 9:30 p.m. Eastern time Tuesday, 10:30 a.m. Wednesday in Hong Kong, will know roughly whether their models are correct or they can adjust them and have a good confidence in the result. And there's an expectation from many people in the market that unless it is truly very close, that we'll know which way the result's going to be by lunchtime Wednesday in Asia. That does not mean the official result gets announced then. Remember, 4 years ago, we all knew what was going to happen again by about Wednesday afternoon in Asia, but the official result didn't come through for a few days later. So I think from that moment onwards, we'll start seeing traders react. I think that the conviction is around Trump trades, and that's because Trump is a change of the status quo, much more so than Kamala Harris, who is obviously vice president of the current administration. So that's where the much more aggressive action will happen, that if Trump wins, people really, really want to buy the dollar. That is seen as the cleanest trade apart from crypto. I think dollar yen, dollar MEX, dollar CNH will react really, really aggressively on Wednesday if Trump looks like he's winning, which we should know either way by Wednesday lunchtime.
And dollar CAD, of course, is also another one we're going to keep our eye on. Bloomberg Markets Live executive editor Mark Cudmore joining us this morning. Get more up-to-date analysis from him and the team. Just type in MLIV Go on your Bloomberg terminal. Let's go from the macro to the micro. Get our stocks to watch from Joe Easton. Joe.
Morning, Critty. So Ryanair is downgrading its forecast for passenger growth for the year ahead, citing these strikes over at Boeing and the impact on the deliveries. Here's the key quote from the statement here, saying the outlook is highly dependent on Boeing ending the strike sooner than later, and also production ramping up more quickly than is currently priced in, according to the company there. Now, the other thing to note is Ryanair has already been hit this year by a decline in fares. The CEO has warned of a reduction in airline fares, and that has seen the stock dropping. It was trading close to €22 earlier in the year and then went below 14, now at about 18. And as we will also be aware of, is the rising oil price hitting the costs in terms of reducing those margins further. That could also be an impact for the company. But for the moment, it is these Boeing strikes that are hitting the company's passenger numbers. In terms of oil, though, we will bear in mind we have seen oil rising overnight, given the outlook over in the Middle East and also the supply cut potential for OPEC as well. So we could see a feed through into the airline stocks today and also into the energy stocks as well. There's the move in the crude prices on the screen. Then if we take a look at the oil market in terms of the stocks, we can see that these share prices have actually been underperforming over the past year to date, given analysts downgrading their forecast for oil prices, but that could potentially see a bit of a retracement of that move today. Then in terms of chip makers, we've got our eye on ST Micro, one of Europe's largest chip companies, has its only downgrade to sell. This is over at Morgan Stanley. Now, Morgan Stanley is citing weakness in the auto sector, so chips supplied into the auto space, with a huge price target downgrade going from €35 down to €20 on this stock, saying that automotive growth is the key challenge for that company. As we can see, only one sell at the moment, 17 buys on that one. That could potentially be a weak spot for the chips today. Then in terms of your other analyst ratings, there's a couple in the UK to bring you this morning. So Stanchart comes down to neutral at Goldman. That's after a big rally following results last week. Likewise, NatWest, this one though, raised to outperform following their results, which were pretty much better than expected. And we also had the UK budget out of the way as a kind of clearing event for that one. And finally, Frasers in retail raised to outperform. We had some headlines around Boohoo on that one last week. All of those in the UK could be in focus this morning.
Thank you, Joe. Our equities reporter, Joe Easton, with some of the stocks in focus this morning. We'll add to that list the Burberry share price, and with it, the Moncler share price. We're seeing other media specifically around the luxury goods sector, reporting that there could be some interest from Moncler in Burberry if the two of them got together to create some sort of outdoor specialist. There's not Bloomberg reporting, but we're seeing it being picked up by a number of brokers as something that might move these shares.
So everybody's been waiting to see what's going to happen with Burberry. Would it be a takeout target at some point? Is there going to be some M&A around this stock? But it's interesting. So you have Burberry, Moncler. Who just took a stake in Moncler out of interest? I just wonder if we can draw a line between Bernard Arnault and Burberry at some point.
I don't know. I feel like the messaging is so different, though, from Bernard Arnault versus what Burberry's trying to do. Isn't Burberry trying to reach a more mass audience, a la American? Is that really Bernard Arnault's style? I don't know.
I don't know. At some price, maybe.
Maybe, yeah.
But it'd be interesting. Trench coats, Moncler coats.
Yeah,
I guess there's some logic that
the
would
outerwear
fit together
story, isn't it? Another stock we'll keep in focus. Then we have Schneider Electric in focus, replacing their CEO, and there's been the suggestion this morning that could go weaker at the start of trade as well. They've said in a statement that the board decided to appoint company veteran Olivier Blum, who's been with the business for decades, to replace Peter Herwick at the company. So a company that's very much at the focus of a lot of things that are changing in the global economy right now, and there with the new CEO.
It feels like the board doesn't feel that he was going fast enough, and that's why Blum's been brought in. Basically, there's a sense that maybe this is a company, particularly with the AI trade that is so strong around this company at the moment, that there's a need to accelerate that strategy and push harder. And there's key shortages within the electrical grid space at the moment. Schneider's right at the heart of this story as well.
And plus the fact they were hit by a penalty. The French Competition Authority hit them with a penalty, €207 million, and so that's seen as something that perhaps weighs on the business. But But we go into a busy week then with lots of investors telling us they're sort of lightening up on positioning because it's too much of a knife-edge call around the US election. I think the thing we've been exploring with guests that's really interesting this morning is, sure, what they expect to happen, but also the timing of when they expect things to happen. When will we know what? Yeah. And Mark giving us his thoughts. He thinks lunchtime Asia, so what's that, 5 a.m. London time, maybe Wednesday. Will we know enough? Will investors know enough to start placing those trades?
Will they know enough, or are they just going to go long vol until the weekend, basically? And I'm curious, in the absence of that kind of knowledge out of the U.S., does the China news then drive some of the news flow as well and maybe magnify it?
How much news are we going to get out of China, I think, is an open question, though. This is an event that goes on all week, the NPC, so we'll watch that very, very carefully. Number of stocks we've been flagging into the open. We'll deal with the details of those. The opening trade is coming up. Got around 5 minutes to go. This is what futures are looking like this morning. Fairly flat, but we'll get some details on the single stocks in a moment. This is Bloomberg.
Politics to the world of business. Joe Matthew and Keely Lyons deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, or you support, it's often done in the name of good, have hurt the lower 20%. They're dying younger. Their income didn't go up for 20 years. They're the ones who have more crime-ridden neighborhoods. Their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
November 5th, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended Balance of Power leading into full team coverage at 7, live from the Battleground States and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Earnings season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer 5 below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
Monday morning, good morning. Couple of minutes to go until the opening trade here in Europe. Let's look at the legacy from Friday. European stocks, the white line, basically climbing into the close. Little fade just as we come through into the close here in Europe. Post payrolls, though, it's interesting. We get an afternoon fade in the US. US markets finished just higher, but there was a definite fade that needs to be priced in this morning. Maybe that's why we're seeing what we're seeing in futures, Critic.
Well, the risk-off sentiment is quite clear from the bond market to the equity market. You're certainly seeing that here in Europe as well. This idea here that CAC 40 futures are down about about 0.3%. It is your underperformer in the futures trade this morning, Anna. But the FTSE 100 also taking a beat lower, down about 0.2%. A similar story over in your stocks 50 futures. I think in anticipation of the U.S. election, it might be a micro day today.
Yeah, it might be. We'll certainly keep an eye on the energy sector. We have oil prices going higher today. But in terms of the individual stocks, let's have a look at some of the ones that Joe was talking about and throw in some others. Ryanair in focus, of course. We've heard from them the extent of the impact of the Boeing delivery delays. They've cut their passenger estimates for 2026. So that's going to be in focus for the aviation sector. We will also keep an eye on Burberry. Media within the luxury space talking about whether there might be the possibility of a Moncler offer coming through here. So we'll watch the Moncler share price. We'll watch the Burberry share price to see if there is any sense that these two businesses could get together to form some kind of outerwear business. Schneider Electric also in focus. Now, is this just about a different roadmap for the business, or is it to do with the price fixing that they were accused of? They've said they might appeal that particular decision, but the business was fined. And in the wake of that, just days later, they decided to change their CEO. We'll keep those in focus then, Guy.
Absolutely. Let's fold all of that into the market open. Here we go. It is time for the opening trade this Monday morning. It's Monday. We wait for Tuesday. We really wait for Wednesday, probably for clarity, maybe some clarity on the US election. So I don't expect we're going to see a significant shift in the outlook for Europe this morning. There is so much still to price in this week. Monday morning feels a little early to get involved, and as a result of which you're not really seeing much sense of direction, certainly at an index level. The FTSE 100 barely budging. The Stock 600 is down by less than 1/10 of 1%. The IBEX is down by 1/10 of 1%. We wait for the CAC. We wait for the DAX. We wait for the SMI this morning. The DAX down 1/10 of 1%. The CAC, as mentioned, maybe a little bit of softness there versus its peers, down by 0.3 of 1%. But there doesn't seem to, at an index level at least this morning, Critty, to be a clear sense. Below the surface, maybe some single stocks.
A sector story for sure is emerging, and a lot of it's coming from this outperformance that you're seeing in the energy names, Anna. This idea from an index contribution, Shell, Total, BP, right at the top of the pack, right alongside the likes of Anglo-American, by the way. To the downside, though, it looks like some of those healthcare pharmaceutical stocks that have been the outperformers lately are actually dragging the index down. The likes of Novo Nordisk, for example, among others. But right now, energy commodities very much in focus.
Yeah, energy, yes, absolutely. And Ryanair in focus. And, you know, there are a couple of reasons why things might be negative for the aviation sector. Not all of the airlines are negative today, but we do have Ryanair down by 1.4%. Some of the other travel and leisure-related stocks also following it down. Of course, we've had this update on what impact the Boeing delays will have here, but we also have the oil price moving a little bit higher, and sometimes that can be something that has some sort of impact. But that is one area of weakness. Personal consumer, discretionary, grocery stores, that's another area of weakness this morning. But some of that's a reversal from Friday. Reckitt Benckiser was a really strong performer on Friday. Today it's down by 1%. And seems to be pulling that sector a little bit lower.
It does seem to be the energy stocks, though, as Critty mentions, that is interesting. It'll be interesting to see whether this continues. The election could have a major impact on this space. And it was interesting that the US majors actually reported softer numbers. There's been this big kind of concern around the discount that European majors trade to their US peers. I wonder kind of what impact the US election could have on all of that. In terms of other areas that we are watching, it's interesting to see real estate softening up a little bit this morning. In terms of some of the other names, are we seeing a movement in Burberry yet?
Good
I throw the hospital pass to Anna.
Stand by. I don't think so. No, I don't think we've got that one open just yet. Not trading yet. So we watch with interest there. And Moncler, of course, the other side of that that news story.
Vestas is up, which is interesting. Which I think the offshore wind, we're going to talk about this a little bit later on. Vestas is going to be potentially one of those stocks that could be firmly in focus.
Yeah.
Because Trump has indicated very strongly that he's not in favour of offshore wind.
Yeah, it's certainly something that has been, and you've seen this shown up in the likes of some of the renewable stocks. But he is in favor of solar, which is interesting. So if you really go into the nitty-gritty of some of the renewable story, there seems to be this kind of election bet emerging between solar versus wind. And again, something that we will be discussing throughout the rest of the show. But again, it comes right back to, in the meantime, while we await those election results, we are going to kind of see what what investors are supposed to do. And in that meantime, we've got the perfect guest.
Yeah, let's have that conversation. Nancy Curtin joins us, CIO at Alti Tiedemann Global. Nancy, so nice to have you here with us.
Lovely to be here.
In such a consequential week.
It's a big week ahead.
It is a big week ahead. How do you set up for this big week ahead? We were just talking to one of our guests in the last hour who was talking about the number of people, the number of investors who are sort of reducing their exposure to the extent that that is at all possible to the results of the US election. How are you approaching this week?
So first of all, we say to our clients, you need to be long-term investors. We would not position ahead of this type of event, although it is going to have an impact on markets. And frankly, it's impossible to call. This is a photo finish, as we know, and it's not just about who wins the presidency. It's also about what happens in Congress as well. And I would say those are really very hard to call at the moment. So trying to position ahead feels a bit like fool's errand, but it's not what we do. We stay with a client's strategic asset allocation. And frankly, both candidates are pro-growth. So let's just put that in context as we look ahead to 2025.
Okay, so can you see a way that either of these candidates can be good for risk assets?
Well, look, Kamala Harris is more of the same. Is that a bad thing? I mean, the U.S. economy seems to be doing pretty well. Take out the funky little jobs number last week, but, we had some hurricanes and some other things affecting that. But that seems to be pretty good. I would like that one. That's not going to be bad at all. And of course, Trump, I think most people think he will try to extend the tax cuts and, lower corporate tax rates, which might be a bit of a heroin boost near term to the market. But let's face it, we also have to keep an eye on the long end of the bond market in the United States. The fiscal situation is rather challenging. And so Harris stands for less of fiscal imprudence, so to speak. So, I think neither of them are particularly bad. Both are pro-growth. And I wouldn't say that only Trump is going to be good for the markets. Don't forget, the status quo is not so bad at the moment.
It's not so bad at the moment, but you mentioned that pro-growth policy, and critics of that argument would say that a lot of that comes right down to tax cuts and this idea that Trump is talking about these major tax cuts, which would then, to balance the fiscal issues, be offset by the tariff story. The tax cuts or the tax increases under Kamala Harris are, by a lot of Wall Street and a lot of corporate players, thought of as anti-growth. What would you say to that?
Well, first of all, are the tariff increases really going to fund those tax cuts? Sure. I mean, I think that's a bit voodoo economics. But anyway, I think what we have to recognize is dependent upon the composition of Congress, right? And even it looks at the moment like the Republicans will take the Senate. House still remains a bit of a big question mark. But it's not clear to us that either are going to have a significant majority. And remember, Congress doesn't always just vote along partisan lines. And so without a significant majority, maybe some of these things that we talked about, other than the tariffs, which can happen by presidential decree, may not get through to the extent to the rate, et cetera. Remember, there have been a lot of campaign promises over the last couple of weeks. They continue to multiply.
So let's talk about, aside from the presidency, let's talk about the Congress and the split there as well. What would be the first agenda item, do you think, on the congressional space? We're here in Europe. We talk a lot about that defense spending story. Come January 20th, which, by the way, is 10 days after we hit the budget, what's the first thing on Congress's agenda?
I think Congress has to look at the fiscal rectitude of the United States, or lack thereof. Remember, even putting aside what Harris and Trump could put into place, we've got fiscal deficits of more than 6% as far as the eye can see. You've got an aging demographic in the United States, increasing costs for Social Security and health care. Not to mention, you saw that interest cost number, $1 trillion in the deficit that was announced at the end of September. So I think Congress recognizes both sides that this is a problem and they need to deal with it.
So you made the key point when you came on here that you are, of course, a long-term investor, but between the kind of inauguration of the president and of course, the congressional kind of buildup that follows, there's a meeting in December when it comes to kind of appropriations and where some of that congressional budget spending goes. And I'm curious, as we kind of wait for that lame duck period, how much of that might change things for an investor that may be more short-term?
I think that's very hard to call. It's going to be a barn fight. The whole debt deficit situation is a barn hard fight. And as I said, not all of Congress votes along partisan lines. So I think we have to wait and see how that turns out. It's going to be a lot more protracted, I think, than people think. But the key thing for us is to see what kind of fiscal rectitude, as opposed to just spending, gets applied. And by the way, the so-called bond market vigilantes, wherever they've been, are likely to come out if there's a lot of spending increases and we don't get past the debt ceiling, which will come again, as you kind of alluded to, in January. So these are risks ahead. But broadly, in our view, we think growth in the United States is good. We are overweight equities. We think that's still the place to be. There's a lot of more attractively priced stocks, not just in the U.S. large cap that we positioned in, but also diversification. Key message for clients, make sure you're diversified. And we've got other things in the portfolio that serve as a ballast as well to equities.
So the U.S. continues to outperform the rest of the world. Is that true for the next 4 years?
I don't think so. So, first of all, I mean, the U.S., there's a lot of strength and resilience there, a lot of good things happening, really.
Yeah.
The consumer's pretty strong, sits on a huge amount of home equity wealth, etc. But I think what's really interesting, we're in a global synchronized easing cycle. Let's not forget that. Bank of England likely to cut on Thursday. We've got ECB will cut probably in December. We've got no lack than 10 emerging market economies that have cut interest rates. We've got fiscal and monetary stimulus coming from China. May not be enough. I don't know. We have to wait and see how that turns out. But the point is, global synchronized easing cycles should help global growth, and that should help the global
And the Fed's
economy.
included in that.
What's that?
The Fed's included
And the
in
Fed, of course, is good. We do think the Fed will probably cut this Thursday.
Okay. And then?
That remains. I think they will be data dependent, and they will come out this Thursday, which we expect probably will cut, and talk about the fact that we will continue to watch the data ahead. Remember, they're looking at the neutral rate. Now, whether the neutral rate is 2.9 or 3.2 or where remains to be seen, we're on a policy normalization path. Because as inflation's come down, real rates have gone up, which is a form of effective tightening. So we do think they need to bring rates down.
And what do you look at in Europe then, Nancy? We've talked a lot about the United States, and clearly a lot of the vulnerability around the election, if there is some, might fall elsewhere rather than on the United States. So are there stocks and sectors that you're actively avoiding right now with the election in mind, or no? Long-term investors don't need to think that way?
Long-term investors, you know, emphasizing companies with great moats and great cash flow, that is the way to do it longer term. But I do think that Europe needs a growth strategy. Draghi talked about that from a macro perspective. Europe really does need a boost. But at the end of the day, Europe has always been a stock picker's market, and there are some great companies in Europe. There are not so good companies as well, like every other market. And so it's about really finding those quality companies, good competitive moats, etc.
You're confident you can find them when Warren Buffett says he can't?
Well, Warren Buffett got a little long on his skis there in his Apple holding. But, you know, at the end of the day, we could easily have some turmoil here. We could have some volatility in markets. You know, before last week, we were up, 6 weeks in a row. This is not normal.
You're happy with valuations, though, where they are at the moment?
Happy. Now, the U.S. is expensive, right? I mean, let's not pretend it's not expensive. But I think a couple of things. You know, the so-called Magnificent Seven traded 30 times earnings on average. The rest of the market, 16.9. 15% discount to its long-term average. So let's just bifurcate what's going on here. And the Magnificent Seven, that makes them vulnerable to disappointment. And we saw some disappointments in the recent earnings. The rest of the stock markets in the world, not so expensive. Mid-cap, actually, we think is attractively priced in the States. So you've got to pick your spots. But no, the U.S. market as a whole is expensive. But remember, profitability in the last decade and return on equity has dramatically increased in the States. I'm not going to bang the table here and say we pay anything, but I think that's important to consider as well.
Really nice to see you, Nancy. Thanks for dropping by to see us. Nancy Curtin, CIO at Alti Tiedemann Global. Thank you very much. OK, the Core 6 looks like this morning. Schneider's certainly firmly in focus. Changing of CEOs at Schneider, generating a 1% move to the downside. But that looks pretty much in line with some of the other stocks we're seeing across Europe as well. So you've got Novo, which reports numbers later on this week, soft as well. In fact, everything is soft. Luxury actually looks like it's holding up, despite actually what is happening in China and maybe the anticipation we don't get that much stimulus delivered this week.
Yeah, we'll certainly keep an eye on all those developments out of China this week. Let's focus in on some of the other stocks that are on the move this morning and picking up on some of the luxury clothing themes, perhaps. Here's Joe Easton.
So staying in luxury, we are actually seeing Burberry, the best performing stock in Europe today on the stock 600, up around 4.5% at the moment, was up around 7% at the open. Now, there is a report in the financial and luxury blogging website called a Miss Tweed, which I wasn't aware of before today. I'm told I should be aware of that website, but that is reporting that potentially Moncler is looking at the UK company Burberry Moncler over in Italy. Now, remember, LVMH's boss recently invested in Moncler, and the report says that he would be in favour of such a deal. It is getting some attention this morning. We're seeing again, as I say, the best performer in Europe at the moment. In terms of going the other way, though, Ryanair is coming down now. They've downgraded their guidance for passenger growth. That's actually falling more than it was at the open, now down 3% for Ryanair. Now, the interesting thing to note is that this downgrade to passenger growth could potentially actually be supportive of pricing, according to analysts. So that actually might take the sting out of that move. But at the moment, we are seeing a pretty steep decline, down 3% for Ryanair at the moment. The other thing for the airlines, as we mentioned earlier, though, is the oil price that is rising, potentially adding to those losses for Ryanair. And then here we've got the move higher in Shell and Total, with crude futures up around 2% overnight. So all of that playing into the same kind of theme at the moment. Then in terms of Schneider, Guy was running through that one a moment ago. A surprise change in CEO. Now, the CEO has only been in the role for around 18 months. So that is a bit of a shock for the market, potentially related to the strategy, but also some of those legal things that were mentioned earlier in the show as well. So that one coming down very slightly this morning. And then over in mining, we've got some deal news on Anglo offloading a third of a company over in Australia, according to a statement. It's worth around $1 billion, so it's pretty sizable, selling that for the company listed in London. We're seeing that stock gaining 1.5% at the moment for that one. Then in terms of the morning calls, some really interesting ones, and the Morgan Stanley downgrade is having an effect on ST Micro. They're the only broker recommending selling ST Micro, and the price target change was what stood out. They were at 35 euros on Friday, they're now at 20, so even more downside expected for a stock that has declined a lot due to the declining automotive demand, and that is what they're citing for that move. And then finally, Anna did mention Reckitt earlier, so we're going to look at that one because they've got a downgrade today. This one is over at Bernstein. Now, you remember on Friday, Reckitt had a big rally following news on the baby formula litigation, some positive update. But analysts at Bernstein are saying that that move is now overdone, so they recommend you come down on your holding in that one. And Reckitt falling 1.2% today in London.
Joe, thank you very much. Joe Easton from our equities team with some of the stocks that are on the move and some of the sectors. And my eye goes this morning to the technology sector, which is by far and away the worst performing sector here in Europe today. And that downgrade that Joe was talking about to one particular stock, ST Micro, could be part of the reason, but it's not limited to that. We see others within the space under pressure, not by much, but down 1% or 2%. As we go into this consequential week, consequential for so many reasons, the US election first among them, interest rate decisions, but also some of the earnings stories that we're going to get out of tech. How will the sector continue to defend the sort of price to perfection valuations?
The ST Micro story is fascinating as well, just given that it had like a 35% drop or something. I think was it 2 weeks ago? I think over in the U.S. So there is that volatility story, which is exactly what tech is not supposed to be or has not traditionally been going into election week. It's been that safe haven, and right now it just isn't.
Is it a value trade? Is it that kind of a trade still? It's interesting to see the volatility seems to be increasing around this space at the moment, which I think is interesting. So BE Semi's down 2.2, STM's down 1.85, ASMI down 1.58. These are they're not huge moves, but they are decent moves for a sector that has been really positive for quite some time. But what you're also, I think, beginning to really see is the differentiation within this space.
Yes, is those companies that are really exposed to AI and those companies that are just really exposed to the troubles in the auto sector, you know, and those two are very different business cases, very different stories, and we'll see those continue to play out in the tech space.
You got Volvo Cars this morning, I think, reporting some really weak numbers out of China once again. Again, that connection between those two, I think, absolutely fascinating.
Yeah. It absolutely is. I should mention, since you mentioned Volvo Cars, we should mention that the entire Stockholm, the Swedish index, by the way, is outperforming the rest of Europe. I'm not super sure what's driving it at the moment. It seems like a mix of factors. You've got the likes of Swedbank among like the Volvo and others trading higher, but again, outperforming the rest of the market by quite a little bit. We're going to dive into some of the other equity stories we've got our eye on in just a few minutes. Coming up on the program, Ryanair cutting its passenger outlook, and it's blaming Boeing. We're going to bring you some of our interview with CFO Neil Sorahan. That coming up next. This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
"21 minutes into the session, this is what European stocks look like. We are going nowhere in a hurry. There's a few anomalies here and there in terms of the single stock stories that we're watching, but basically I think this is a macro story, an election story, a later on this week story. But there are, as I say, some single stocks that are definitely worth focusing on this morning. Ryanair is one of those. Europe's largest low-cost carrier. Shares down this morning. The carrier cutting its passenger growth target for next year. The group's CFO, Neil Sorohan, speaking to Tom McKenzie a little earlier on. This is what he had to say about the outlook.
We were due to get 11 aircraft in the quarter between September and December. We've received 2 of those. I don't think we'll see any more aircraft this side of January or February. We look like we could be left short 10 aircraft, possibly more, into peak summer of 2025. We're now planning on the basis, as you said, of 210 million passengers instead of 215. We had the situation this summer and last summer where we were overcrewed, we were overscheduled, and we just don't want to be there again. So even if we do get some more aircraft, we'll use those as operational spares. So I'm hopeful rather than confident that I'll see those aircraft coming in. And as I said, we're now planning on the lower growth.
So you're planning, to be clear, you're planning on 10 fewer aircraft than you'd expected for that peak summer season next year. What does it mean for fares and pricing? Because fares have come down, what, 7% in the most recent quarter.
Yeah,
do you see further softness in fares to bring customers in?
In fairness, I think the declines are moderating. Bookings are strong into Q3. We think fares will be still modestly down. We're still more cautious on Q3, but I think it's in a better place than it was. We had the impact in Q1 of the absence of Easter. The consumers have been dealing with higher interest rates for longer. They're starting to unwind in Europe now at this point in time. Consumers seems to be a bit more confident. Capacity is definitely constrained. We just talked about Boeing there. Airbus are having problems getting aircraft out the door as well with the Pratt & Whitney engine issue. We're seeing consolidation playing out with ITA and Lufthansa, and TAP is going to go up for sale. So I think capacity is going to be constrained for some time, which would indicate that potentially more risk to the upside than the downside on pricing.
CFO at Ryanair, Neil Soran, talking to Tom McKenzie a little bit earlier on this morning after they posted numbers and downgraded the outlook for next year. Let's get a sense of kind of how the various pieces of this story fit together. Global aviation reporter Sid Phillip joining us around the table. Sid, Ryanair's blaming Boeing effectively. They're not getting the aircraft they want, therefore they are not going to be able to carry the passengers that they expected to be able to carry next year. Is that reasonable? Is Ryanair's finger pointing at Boeing justified this morning?
It is to a large extent because Boeing is the only sole aircraft supplier to Ryanair. Ryanair is a all 737 operator, and so for them to be able to sort of offer the capacity they need to offer, they need to get the planes that they've ordered, and that's not really coming in at the moment because of Boeing's various issues.
In terms of therefore the supply-demand dynamic. At the moment, what they're basically saying is we're not going to get the aircraft that we want, but fares are soft. So I would have thought that if we're not going to get the aircraft that we want, the fares would be firmer because there wouldn't be the capacity. The capacity is not there to kind of reduce fares. So explain the issue with we're not getting the aircraft we want, but fares are still soft. That doesn't seem to fit together logically to me.
It doesn't. And also, I mean, remember, you're going to a slow season right now because, I mean, winter is typically a slower season. So airlines have to typically spur fares in order to get people on there. So they need to offer discounts, they need to sort of cut fares. And, I mean, Ryanair has seen a slow summer this year. I mean, the summer has been much worse than they had seen previously, and that's because airlines are struggling to see people have struggled with the whole cost of living, and they've basically decided not to go on holiday instead of paying astronomical fares. And so the airlines have seen that, and they've had to cut fares accordingly. At the same time, Ryanair gets its sort of they sort of spur demand. They offer services to places that other airlines don't really fly to, and they sort of get demand that way. So for them, it is a bit of push and pull, but analysts are hoping that given the fact that there's fewer aircraft, yields will be higher.
That was going to be my question, actually. If they do cut those flights, who's benefiting, if anyone?
It will be the airlines will benefit from it. If there's fewer flights, there will be much higher fares, and that's sort of the demand and supply equation, and that's what analysts are hoping for. That while Ryanair sort of cuts back its passenger forecast, they will be able to sort of increase fares and be able to sort of get more profitability.
Steve, what do we make of the comments around the budget? I mean, O'Leary never holds back on these things. We called it idiotic, I think. It doesn't like the increase in passenger duty, which you can understand, but then when you look at the size of that increase, maybe not that big on some of the low-cost fares?
Given the fact that low-cost carriers tend to offer like rock-bottom fares, it could be the impact could be much higher on Ryanair versus British Airways or others who have much higher fares. And so this is a £2 per passenger on short-haul fares, and that can potentially put off someone who is looking to buy tickets for a family of 3 or 4.
30 seconds. Are Boeing workers going back to work tomorrow?
That's the billion-dollar question. I mean, everyone wants to know what happens next.
Yeah.
The unions recommended the workers take the deal because of the fact that they said that there may be a worse deal at the end of this. So they asked the workers to take it, 38%. So let's see what happens tonight.
OK, Sid, we'll watch. We'll have that result kind of first thing tomorrow morning. We'll be able to price that in as well. Plenty more coming up. European equities kind of marking time at the moment ahead of the US election.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race. And Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
its own bank,
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
The top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, or you support, it's often done in the name of good, have hurt the lower 20%. They're dying younger, their income didn't go up for 20 years. They're the ones who have more crime-ridden neighborhoods, their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything. November 5th, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7, live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is the opening trade. We're about 30 minutes into today's session. Seeing some green on the screen when it comes to the equity market. Also seeing green on the screen when it comes to the commodity space. And this is interesting here. We're, of course, digesting two very different lines of news over the weekend. The idea that Iran has now formally said that it is going to talk about a more complex attack on Israel. That, of course, boosting prices, in addition to the fact that OPEC Plus has said they are not going to be increasing their production, at least in the near term. So we're keeping an eye on that. Both of that creating a little bit of a tailwind into the oil story. Brent crude at just shy of a 75 handle, NYMEX just shy of a 72 handle there. I want to take a deeper look into energy policy, this time through the lens of the upcoming U.S. election. How could the potential policy pivots from Kamala Harris or Donald Trump impact Europe? As part of a broader series that we're doing, of course. We're joined now by Anne-Sophie Corbeau, global research scholar at the Columbia Center on Global Energy Policy and former head of gas analysis over at BP. Anne-Sophie, a pleasure to have you on the program. Thank you so much for joining us. Let's start with the oil story here, and then I want to get your views on natural gas as well. We are talking a lot about oil in particular, some of the moves that we're seeing in this market really being cushioned by the fact that so much of the excess supply in this market is being provided by the United States, which has now grown to become the #1 producer of the world, or exporter of the world as well. Talk to us a little bit about how that may or may not continue under a new president.
I think, in fact, this is very interesting because oil and gas are going to be mostly shaped by market forces. And I don't think whether this is Mr. Trump or Mrs. Harris who is becoming president is going to have a major impact on oil and gas supply. It may be different indeed when we are talking about U.S. demand for oil and U.S. demand for natural gas, because Mrs. Harris may have a more strict environmental policy, which would lead to a decline in U.S. oil demand and U.S. gas demand eventually. But in terms of supply, I don't think there is going to be that much of a difference, maybe with one exception, which is on methane emission, where I do expect Mrs. Harris to be a little bit more strict because, you know, the U.S. has entered into the global methane pledge in 2021, and this is very much something that Mrs. Harris is seen as continuing. But when we are looking at the situation in the Middle East right now, I mean, things are evolving very rapidly. So whoever is going to be president may have a totally different situation in January when they are entering into office. And this is very important to keep in mind. 2 months is a very long time in geopolitics.
It absolutely is. And Anne-Sophie, we're going to talk a little bit more about the geopolitics in just a moment, but I want to really zero in on that point you made about the Nat Gas story, simply because you made a key point that Kamala Harris, candidate Harris, may actually be following in line with some of the policies of Joe Biden, but that does include some of the concerns around pipelines, fracking, and of course the exports to Europe. And that's where a lot of my interest lies when it comes to a European audience, Anne-Sophie, this idea that so much of the export picture of the United States LNG in the last 2 years since the onset of the war in Ukraine has been well received by Europe in the absence of getting that supply from Russia. And I'm curious, does that continue if some of Biden's policies are continued under Harris?
Okay, so let's put things back in context. The US is currently the largest LNG exporter, ahead of Qatar and Australia. It is going to remain so, and it is actually going to double LNG exports based on the facilities which are currently under construction. This is a fact. This is happening right now. Plaquemine, for example, in the United States, this is a new LNG facility, is starting. At the end of the year, we are going to have Corpus Christi. Golden Pass is potentially delayed to 2026, but we have a lot of LNG which is coming to the market. This is a fact. Now, what Mr. Biden has done, and which is referred as the LNG pause, is basically saying any additional project which is currently being reviewed by the Department of Energy, we stop because we need to do a full reassessment. Actually, I am pretty much in agreement with the fact that the Department of Energy needed to do a reassessment, especially on what is going to be the impact of this huge amount of LNG export on the domestic gas market, because the last thing that we want is to have US domestic gas prices rising, and I think this is also something that a US president wouldn't want to see happening. Also, we have a totally new framework with the fact that we have new regulation in terms of methane here in Europe, which is also going to be relevant for US LNG exports. So was the Department of Energy right in terms of doing this pause? Yes. Was it correct to make that as a big political statement and use that for the forthcoming elections? Probably not. But make no mistake, there is a lot of LNG which is coming to the market, not only from the US, but also from Qatar and from a lot of additional countries. By my calculation, we have about slightly less than 300 billion cubic meters of LNG capacity, which is coming to the market between 2024 and 2030. This is unprecedented. Now, whether US LNG comes to Europe, this depends on the prices. Because what happened in 2022 was economics 101. Prices were high, LNG came to Europe.
Okay. It sounds like what you're suggesting is that it's going to become a buyer's market within the gas space, which would be very good news for Europe. We now have, obviously, the gasification plants in place, maybe to actually take advantage of it. Is the US going to be a reliable partner, though, when it comes to gas supply? The Trump administration, where it's come into play, will be using all levers at its disposal, maybe to get the policy it wants to see out of Europe. Is gas going to be part of the mix?
Potentially, yes, but do remember that a lot of LNG is actually contracted by a lot of companies. They can be from Europe, they can be from Asia, they can be international companies. So this LNG is simply off-taken at the exit of the LNG plant, and then the off-takers are totally free to send it wherever they want. So again, this is economics 101. If the prices in Europe are indeed higher, then of course LNG off-takers are going to send it to Europe. If the prices are higher in Asia, then they are going to send it to Asia. So the beauty of the US LNG is indeed this flexibility. Actually, if I want to go back to history, when the US and the European Commission had this agreement that a lot of LNG would be sent to Europe in order to help the European Commission and the European Union because of the drop in Russian gas supplies, then actually it was just realizing that, yes, the LNG will go there, but the president doesn't have any power to dictate where LNG cargoes will go. It's not in his power. The power of the administration is to give the authorization or not to send to send the LNG to non-free trade agreement countries, and all European countries are free trade agreement countries. The only thing which may be controversial in Trump's point of view are the methane rules. I don't think he's going to be very happy with that. And indeed, that may be a problem eventually for Europe, but that would be after a Trump administration, because if Mr. Trump is saying don't care about methane, then there is no way that the US LNG is going to be ready in time for when the new rules are really kicking in 2027 and then especially in 2030. But that would be actually detrimental for US LNG exporters.
Yes. So, Anne-Sophie, you sound quite convinced that a Trump administration will not use LNG supplies as a tool of foreign policy. Is that's your advice to Europe?
Yes and no, because at the same time, I think Europe will be under pressure to sign long-term agreements. Now, in 2022, because I am from the Columbia University, but I am also based in Europe, I was receiving a lot of calls from people who wanted to build new US LNG export terminals and were wondering why are European users not signing some long-term contracts with US LNG plants. And the truth is, European off-takers, they are very hesitant because of the net zero commitments in Europe. And this is something that Trump doesn't like. I mean, he doesn't like, climate commitments. He doesn't like climate change because he thinks this is a hoax. So I think he would be putting pressure on individual countries, as he did during his previous presidency. Why don't you sign long-term contracts with the new projects that we are going to basically authorize? There are a lot of US LNG projects which are waiting for commercial agreements in order to take FID, and it would probably put individual pressure, probably on Germany, but also maybe on some countries in Eastern Europe, etc.
Okay, so that sounds quite transactional, something that maybe we've seen in the past and might see again. Talk to us about the policy, the big picture policy around climate change, Anne-Sophie, and what you would expect a Trump administration to mean for that, because some people have pointed to the Inflation Reduction Act and the subsidies that are available to cleaner energy and said, well, actually, these are having a big positive impact in some red states, and as a result, Trump won't roll those back. Would that be your assumption?
Yes, partially. I agree that, well, first of all, maybe to put something in context, there is a presidential election and there is also what is happening with the Congress. A president is limited by who is in power at the Congress. If the Republicans are in power at the Congress, and on top of that we have Trump as a president, then he has much more power than if we have a divided Congress, for example. In terms of the Inflation Reduction Act, which is a law, it will be very difficult to repeal if he doesn't have control of the Congress. But also, as you mentioned, a lot of what Biden has done is actually benefiting some red states. So some senators have said very clearly, well, we don't want that to disappear because this is actually helping us a lot. So I think there will be probably some, it will make more difficult to spend what has not been spent yet. It will make, some consumer tax credit, maybe on EVs especially, more difficult to get. Yeah. There is also the hydrogen tax credits, which have to be finalized at the end of the year. We have been waiting for them already for more than 1 year. And I think in terms of everything which is about capture, carbon capture and storage, that will remain because Democrats are in favor, but the Republicans are as well, and the oil and gas industry is very much in favor of that. However, everything which is about 45V, which is benefiting renewable hydrogen, well, we may see some strange rules at the end of the year in terms of a Trump presidency.
Well, Anne-Sophie, a final question to you then when it comes to some of the other pieces of legislation that the Biden administration has put forward. I really want to come back to the nat gas pipeline story because this has been a major point of contention in the state of New York, for example, specifically around that pipeline infrastructure that's going to get built and then potentially help the United States export even more nat gas than they could. But those permits, as you rightly point out, have been paused. And I'm curious how much of that, if Kamala Harris is elected to the Oval Office, stays in play.
My thinking around the additional LNG export is that she is going to authorize, but potentially with strings attached. You have to go back 1 year ago, and what actually led to the pause was this report, which was preprint at that point, from Mr. Howard, that, US LNG is actually worse than coal. And this was a red light for a Biden administration, for a Democrat administration, because until now, the thinking had been that US LNG was actually beneficial for the climate because it was displacing coal. So that report, because of the methane emission, was suddenly changing the whole picture. And when I'm saying strings attached, I think that there would be potentially more constraints in terms of the methane emission. So yes, you can export LNG, but the gas has to be cleaner, and on top of that, your facility has to be also lower emission. And we are seeing that already happening. When you are looking at some of the projects, some of them are planning to use cleaner electricity, others are planning to use CCS at the liquefaction, and some people are also starting to talk about certified natural gas.
Anne-Sophie, thank you very much for joining us. Good to get your perspective. Anne-Sophie Corbeau, global research scholar at the Columbia Centre on Global Energy Policy. We thank you for your time. 8:44 here in London. Coming up, with the US-China trade war still in full swing, who would Beijing prefer to be in the White House? More on that next. We'll leave you with a reminder of what both Trump and Harris have had to say on trade relations between the two.
Tariff. 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 I am a tariff man. To me, the most beautiful word in the dictionary is tariff.
The Trump administration resulted in a trade deficit, one of the highest we've ever seen in the history of America. He invited trade wars.
I want to cut taxes on Americans while putting tariffs on China and foreign countries.
Focusing on relationships with our allies, focusing on investing in American-based technology.
Build your plant in the United States and you don't have any tariffs.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out. Which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Tuesday, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended Balance of Power leading into full team coverage at 7, live from the Battleground States and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
Welcome back to the opening trade. 48 minutes into the session, around just over 24 hours until the start of the US election process. I know it's been underway. People have been voting beforehand via the postal votes, but in-person voting kicks off kind of this time tomorrow, in a few hours' time. It's going to be an exciting 24, 48 hours. US markets are barely budging at the moment. European markets barely budging. The FTSE's outperforming a little bit right now. Shell, Astra and HSBC plus BP doing the heavy lifting. China relations obviously are going to be pivotal in all of this. Relations between China and the United States have faced multiple challenges in recent years. Both the Republicans and the Democrats, though, are signalling that they are going to take a tough stance towards Beijing. Our chief North Asia correspondent, Stephen Engel, looks at how the US election is being viewed in China's corridors of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate, because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods, and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that United States influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Engel, Bloomberg News.
Okay, it's going to be an interesting few days for China. It's going to be watching what is happening with the election. It is also going to be watching as well what is going to be happening with the NPC.
Yeah.
Which of those two factors are going to have a bigger impact on Chinese markets?
Yes,
I wonder.
In the short and in the long term, we asked that question. Really interesting, though, the analysis there from Stephen Engel, and sort of taking us back a little to the conversation we had around energy markets, that it's sometimes difficult to assess what Trump will be like in reality on any particular policy platform, because you have to separate some of the rhetoric from the transactional nature of the politics and the way it plays out, or it has played out previously.
Yeah, and I think it's also fascinating that that package made a really key point that also our energy guest made as well, which is that policy might not actually change at all. So the status quo, which has already been an increased tariff picture, it may just be the status quo. How much more tariffs can you really add without congressional approval?
We don't know what the makeup of Congress is going to look like. We don't know what the White House is going to look like. We don't know at this point. And China doesn't know either. It can make calculations. But the other factors that are all in the mix here are what is happening with Ukraine, what is happening with North Korean troops, what impact is China having on that, how is that going to affect relations with you? There's so many other complicating factors in the mix here. The US election is just one other wild card.
Absolutely, and we will see how investors globally play all of those angles then on the election. As Kamala Harris and Donald Trump make their final case to voters, the finance industry is gaming out the implications of a historically close race that could dramatically swing policy. Many trading desks are being staffed through the night. Joining us now to discuss Bloomberg's markets reporter Valerie Teitel with details. So how have investors been preparing then, Val? We've talked about this for a while. Some investors today saying they're trying to pare back exposure to the extent that's possible.
Look, for many funds out there, this has been a weeks-long, maybe months-long preparation of preparing models, just how the market reaction could be, and even running simulations with political consultants on, at what point could we get a big swing towards Harris and then a big swing back to Trump? Because that may be, for many out there, those dislocations may be where the value lies. Even some traders saying they're not really watching the presidential race. They're more focused on Congress, and their trading book is more attuned to swings Congress with the Republican sweep versus a divided Congress. But even if funds aren't positioned for an outcome, they're very much gearing to trade it, because remember, we could get a lot of information out during Asia markets, and Asia markets are known not to pick up on all the nuances of the U.S. political story. So there could be a lot of opportunity to put in trades if traders out there are nimble and they're getting ready for that kind of game plan.
How well staffed will the U.S. desks be?
A good point. We've been hearing from many saying that they prepare to do all-nighters, even some traders talking about how they're going to be taking cat naps on couches. J.P. Morgan plans to increase staffing in Europe and Asia in case there is a big surge in volume and the U.S. desks need to be supported in other areas. Goldman is said to have hundreds of sales and trading teams on site in New York throughout the night. There's even one major central bank or one major investment bank saying that they're halting any technology updates during this week because they don't want any trading glitches happening during these volatile sessions.
It's going to be a really fascinating one, and also where are those glitches potentially happening in the currency market, the bond market. Remember what did take several, I think, current kind of limit up, limit downs when it comes to stock market trading the day after the election. At least that was the case in 2020. We're going to keep an eye on that, plus all the slew of earnings this week, and of course central bank decisions around the world. All of that is going to be covered throughout the week, but of course the U.S. election is going to be front of mind across the markets and across the policy. I'm sure plenty of European nations, government officials and investors alike paying attention to it. Of course, it's European stocks pairing those early gains. That does it for the opening trade. This is Bloomberg.
earnings season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer, only on Bloomberg.
With just one day until the U.S. election, polls signal a close race as the two candidates rally last-minute support in the battleground states. Now, dollar falls the most since late August, while Treasury yields drop as some investors pair the so-called Trump trades. Plus, oil rises after OPEC Plus members agreed to delay a production hike, as Iran is also reporting to be planning a strong and complex counterattack on Israel. So, happy election week. It's a big one show in town this week. I know there's a Fed, I know there's a BOE, but actually it's all about the U.S. election. So let's take a look at the European markets map. Now, we have seen a little bit of readjusting, certainly to that Trump trade. Again, the dollar actually falling. So we look at some of the companies that are most sensitive to dollar strength or weakness in the U.S. You can see for the moment the FTSE gaining some 0.5%. The DAX are down, and then everything else is in a little bit of a wait-and-see situation. Now, the dollar falling, again, walking back on some of the bets that Donald Trump wins the U.S. presidential election after weekend polls seem to be suggesting. They're volatile, and it's a very close margin that Kamala Harris is doing better in certain swing states. We do have a couple of other things that we watch out for. The 10-year Treasury yield 4.3029, euro dollar 108.94, and then Brent crude. There's a lot going on in the Middle East as well. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the dollar slipping with polls giving no clear indication of who will win the U.S. election tomorrow. Now, this comes as investors are pairing so-called Trump trade. To talk about the markets and the U.S. election, we're joined by Eric Nielsen, Group Chief Economics Advisor at UBS, and Ross Matheson, Bloomberg's EMEA News Director. So thank you both for joining us. Ross, when you look at some of the latest polls, I mean, there's a slight advantage for Kamala Harris, but actually it could be very thin margin and anything could happen, really.
It is still very, very close. I mean, there was one poll which looks to be a bit of an outlier, showing some gains by Harris in Iowa, which would be very interesting, obviously, given the history there with the Democrats in Iowa. But overall, the polls are still pointing to something that's incredibly close within the margin of error. So they're essentially neck and neck going into Election Day. And with a reminder that quite a few people have voted already. We've seen a lot of pre-voting that's occurred. So many people people have locked in their votes already, well before polling day. So it'll be interesting to see how that plays out just in the final 24 hours. But either way, incredibly close. And what is the thing that's going to shift the needle on election day? Are people just being coy about who they want to vote for? Have they decided? Will they decide in the minute? And what's the thing they're going to vote on? Is it personality or is it policy?
Yeah, and Roz, I guess the million-dollar question is actually this could be very contested. We could see people in the street. We could have, no real, a certainty for the next 40 days.
Well, that's right. So if it's a big win, say, for Kamala Harris, you can imagine that Donald Trump will say that was caused by the vote being rigged. If it's very close, he'll say similar. And you can see the narrative that's coming already on the Republican side, which is pushing these polls that show Donald Trump well in front. The idea is that he's got a significant lead, that he is the preferred president at this point in time, and that helps shape the narrative for after the election. If he were to lose the vote in the end to Kamala Harris, is to say, see, hang on, he was in front before, suddenly he lost the election, something's gone wrong here, and that sets us up for quite a period potentially of contest, illegally, otherwise in the courts, elsewhere. Who knows what's going to happen? And that's what makes this election again so uncertain.
Okay, and Eric, I misspoke. You're of course advisor to the other red bank, UniCredit, not UBS. When you look at how markets are positioning themselves, they're unwinding at the margin a little bit of a Trump win, but it's impossible to say, really.
Yeah, it feels that way. I think exactly as you said before, when we were in Washington at the IMF meetings, I was surprised that somehow markets persuaded itself that Trump was well ahead. And as you said, there was no indication that this was true. So I think what is seeing now is a little bit of that sort of realization that, we got ahead of ourselves, and you're sort of getting nervous about it. So as you said, we don't know. Nobody knows today, I think you can say. So, but the market had priced itself suddenly as it was a quite clear victory for Trump, which seems crazy.
But Eric, also no one really knows what a Trump presidency second time around could mean for the world economy, or do we?
Oh, we do. Very bad. Very
so extra
bad.
Inflation, tariffs.
Yeah. This idea that he sort of walks away from his pledges of tariffs, for example, and this sort of, it is an illusion, right? It's wishful thinking. We saw it before. He's been saying it again and again. Maggie Haberman at the New York Times, who have followed him more than anybody, has said this is crazy. And you can start with what we also saw, which is G7 in a world now that is so fragmented, where G7 is the one sort of a body where liberal democracies can work together. It was basically dysfunctional last time. It will be again. So very, very troublesome if he wins.
Rosin, you were alluding to the fact that actually we don't really know what the voters are voting on. But it's the economy. The economy is good, but they don't feel it in their pockets. What's been the most surprising thing in this campaign so far? There's been many celebrity endorsements.
Well, that's right, but the celebrity endorsements have been pulling the voters in who already know who they want to vote for, in a way. Elon Musk, that's very much speaking to the respective choir in the Trump camp. Some of the celebrity endorsements that have come for Kamala Harris, it's who gets the ones in the middle. It's almost like two chickens and a bunch of feed in the middle. And the feed is the thing you really need, right? And who's going to get that? In a way, I shouldn't be surprised, but I am surprised by the lack of policy in this election, just how much it has become about personality and individual personality. And again, the question of, what are you if you're a Democrat anymore? What are you if you're a Republican anymore? What's the identity in all of that? It's simply about the personalities of the two people who are contesting this election, and not alone around policy. And that's maybe why voters are really waiting to the last minute or undecided, because if you're a voter in the end, what are you going to vote for? It's the economy and how you're going to feel in your own family, your own job, your own security, your income, and so on. And if you don't know that, you don't know, again, domestically, at least economically speaking, what does a Trump presidency mean for you? What does a Kamala Harris presidency mean for you? And you don't understand where they lie on policy domestically. It's really hard to choose. And so I find it quite surprising. It's all just about the power of their personality.
But Roz, what I hear more and more, or at least for certain people on the Republican side, is I wish I could vote for someone with Kamala Harris's personality, but Donald Trump's policies. So would he even be good for business?
Well, it's interesting. We saw this at the FII, a conference that we were involved in Saudi Arabia last week. A lot of the big banking CEOs, finance chiefs who were speaking there were saying they believe that Donald Trump would be good for the economy and good for business particularly, like get out of the way, allow business to crack on and do what it needs to do. And so a sense that economically they do see him as being better for their business than Kamala Harris. But again, what you don't want to have potentially is Donald Trump's erratic behaviour when it comes to foreign policy, in particular, just deciding one day to pick a fight with China, the next day pick a fight with another country and then change his mind the day after about that fight. So it's very difficult from a global perspective to operate with the US president who changes his mind every 5 minutes. So perhaps you want the coherence, maybe the kind of pragmatism of Kamala Harris, but there does seem to be some popularity around his policies for business.
Eric, I mean, you said Donald Trump is bad for all economies, but actually does Europe have more to lose than the domestic economy or even than China?
Yeah, I mean, it's so let me start by saying I take a little bit sharper view on this. I mean, I think it is businesses can believe whatever they want. Deregulation is not number one issue in America. I mean, every business like deregulation. A lot of it is environmental stuff. Do we really want to deregulate a lot of the environmental legislation in America? I have my reservations on this one. And in terms of tax cuts, there is no economic evidence that you get a big boost for the type of tax cuts that he talks about. And tariffs we have talked about, we know it's bad for growth for America, for American consumers, right? And then we haven't even talked about what would Europe do, what would China do if or when he does his tax increases. The idea that he sort of comes out and we all call him up from Europe or China and say, oh, you know what, let's make a deal. We buy a lot of whatever, Tesla cars made in America. It's an illusion, right? We have never seen this type of policy approach without the other side doing something similar. It's so the risk of a trade war and this kind of an accelerating kind of a nationalization of policies increases significantly. So I'm deeply frustrated with the titans of American industry and finance who say it doesn't matter. How in the world can they have this conclusion? I have my suspicion, but I mean, papers have written about this, but it's not real.
Eric, point taken. We'll get back to that a little bit, in a little short while. Eric Nielsen from UniCredit, Ross Matheson, Bloomberg's EMEA News Director. Now, coming up, we take a look at what the outcome of the U.S. election could mean for Europe's economy, and we delve into a little bit more what Eric was saying. That's next, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, or you support, it's often done in the name of good, have hurt the lower 20%. They're dying younger. Their income didn't go up for 20 years. They're the ones who have more crime-ridden neighborhoods. Their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything. Thursday, the Fed decides.
Is this a Fed just dealing with debt and deficit?
It's about the election. It's about the Fed, especially at a time where you have those yields creeping higher.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We now see the risks to achieving our employment and inflation goals as roughly in balance.
We've got a statement, a decision, and a news conference.
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
Welcome back, everybody. Now let's take a closer look at how the U.S. election is being viewed here in Europe. Still with us, Eric Nielsen, Group Chief Economics Advisor at UniCredit. Eric, thank you so much for sticking around. When you look at some of the concerns or the question marks that many European leaders have over Donald Trump, is there any way of Trump-proofing the European economy now?
No. I mean, Europe is in a difficult space already, and not only because of America, but because the model of exports doesn't work in this post-globalization world. So in Europe, we have to get domestic demand going, right? So that's the beginning of it. But getting somebody in the U.S., if Trump, God forbid, becomes president and does tariffs, which I'm convinced that he will at least try to do or begin to do, is bad for Europe, right? I mean, it just makes our life more complicated. I mean, the optimists say that is the spark that won't get Europe to get its act together, right?
But led by whom? I mean, this is a question. You know, Olaf Scholz is very weak, and I don't know whether he'll last for that much longer, and whether that's linked to the economy.
That's right.
But also, it's the same in France and other major countries.
Yeah, I think that's right, exactly. So it's too optimistic to believe right now. I mean, we have a new commission and a good commission as far as I can judge, but sort of big steps forward for Europe always starts with Germany and France. And we have weak leadership both places. So it feels unfortunately too optimistic to hope that a lot will happen. There'll be something on the sides, but it's difficult.
What, Eric, do you think needs to happen in Europe for this catalyst? I mean, if we see, for example, a coalition in Germany not surviving, does that have wider implications for the bloc?
Yeah, I mean, and there are certainly a lot of rumors now after Friday's surprise by Finance Minister Lindner. So maybe we get elections in March or they're about 6 months earlier than otherwise. And if the opinion polls are broadly right, you get Merz as the next chancellor, most likely, according to the opinion polls. We don't know exactly what he stands for on this, but generally speaking, I think it's realistic to think about progress on the internal market, capital markets union, banking union, sort of thing. The stuff that is not strictly budgetary, right? They're worried about the budget, too worried in Germany about the budget, and get that wrong, in my opinion. But the private sector can do a lot. And deregulation in Europe would be a very good thing. And I think that shift in German politics, according to the opinion polls, would go in that direction. And Macron would follow, and the government would almost certainly follow. So there are areas where we could see progress.
I mean, do you see what's the right way of dealing with China, given still the need of having such a large partner, but having to be very careful about what kind of partner they are?
Yeah, like most economists, I'm a strong believer in free markets and not industrial policies and all the rest of it. The reality is that China has been subsidizing through various ways tremendously, sort of about 10 key industries. The EV is your perfect, but solar panels, you have it across the board. And I think there is a time when you have to say we cannot see our industries closed down and be giving away. So I think I would hope that one doesn't go down too far the tariffs route. But if that's sort of what has to be done, in that space, I think there is no choice, even though I really dislike it. I would have hoped that one could sit down with the Chinese and talk about it. But again, we know what the Chinese problem is. It is lack of demand, domestic demand. Yeah. This is the issue, and they are in a very serious bind because of deflation. This is the pushing on the string is what they've been doing on the monetary policy side. This is not going to resolve the deflation problem. And it's a very indebted economy, so it's very dangerous, right? So hopefully somebody can explain to them. Actually, I'm sure that the Chinese economic leadership understands. Yeah. The question is probably the top, where everything has to be signed off, I suspect, but I'm not a China expert.
Eric, I mean, the other thing is that we're seeing like a big trend in European countries and the UK of taxes rising. I mean, is this just a consequence? You have high level of debt, but this is also a consequence of the high spending that happened in COVID. Yeah. Is this just the way that most European countries will have to go? Yeah, I think we have to accept it. I mean, and you mentioned the UK. I mean, last week's budget here, I don't share the wide criticism of the government's tax hikes. This country is about 7-8 percentage points of GDP below, say, Germany in terms of taxation of the overall economy. And the Brits demand the same type of public services, of education, healthcare, pensions, defense, and whatever. How will they fund it? But in addition, we have the climate change, we have the need for further defense and other things. And I think the reality is that we will have to pay higher taxes or a bigger tax base. I mean, this is a complex issue. But to think that we can find efficiency gains only, or we can borrow all the money, it's not realistic. So we are going in that direction. Will the UK plan lead to higher growth? I mean, if you have growth, it just makes everything better, of course. Yeah, I think it will. I mean, I think it's in investments. I mean, if you're investing in NHS, the healthcare system here, and you can shorten the waiting list, and you can get people back to work to a larger extent. The number of people who are out of work because of long-term sickness in this country is huge, right? So fundamentally, good public investment will enhance long-term growth. I mean, that is economics 101. Now, how you implement it and the reforms that's needed and stuff is also important, and we don't really know what they do there yet. But without the money, I don't believe you can do it. Eric, thank you so much, as always, for joining us. Eric Nielsen, Group Chief Economics Advisor at UniCredit. Coming up, oil prices rise after OPEC Plus delays an output hike and Iran ramps up its rhetoric. More on this next, and this is Bloomberg.
Earnings. I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. November 5th, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7, live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
earnings season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg.
Well, oil advanced after OPEC Plus agreed to push back its December production increase by 1 month, and tensions escalated again in the Middle East. Now, for more, Bloomberg's Jumana Bersace joins us from the world's largest energy event, ADIPEC, in Abu Dhabi. Jumana, good morning. So what else did we learn from the OPEC Plus decision?
Yeah, well, it's a good place to be at the largest energy conference on the back of this decision out of OPEC+. It was taken late last night, Francine, and there had been lots of questions as to whether or not they were going to go ahead with this projected increase of production in December. They were due to put back 180,000 barrels per day, but it turns out they've decided to postpone that decision just by 1 month, perhaps buying a little bit more time. So what we're seeing this morning is a bit of support coming through to the oil market, but again, the longer-term questions that have been surrounding OPEC+ decision-making are still there. We talk about some of the demand concerns. I heard your conversation just now with Eric Nielsen talking about the deflationary pressures coming through from China. In addition, you have to think about the big increase in non-OPEC plus supply and the fact that U.S. production has continued to go up even under a Biden administration. One of the big themes here, of course, is what happens post-U.S. elections with that oil production coming out of the U.S. and not just U.S., further supply coming from the likes of Brazil, Guyana as well. So these are longer-term questions that OPEC plus have to grapple with. In the short term, though, we are seeing a bit of support. Plus, add to that some of the geopolitical considerations with Iran over the weekend, saying that they may also have to respond to the Israel attack on their infrastructure from a week ago.
So, Jumana, what else are we hearing from ADIPEC?
So big themes, and you know what, Francine, you're not going to be surprised to hear this, but AI has also come up as a big theme this year at ADIPEC. Some of the other major topics have been about the growth of energy demands coming out of the global south, emerging market economies, the transformation of the energy grid with the big transformation that's going on in wind and solar energy. But AI has been a dominant theme, and I just want to pick up on some of the comments given by Dr. Sultan Al-Jaber, who is the managing director and CEO of ADNOC this morning, and he was saying over the next 6 years, data centers will more than double, requiring at least 150 gigawatts of installed capacity by 2030, and even double that again by 2040. And so you have all of the biggest industry leaders from around the world, policymakers as well, thinking about the outlook for the energy complex looking ahead. And yes, we can talk about short-term hydrocarbon drivers, but more medium-term, long-term, there is a huge energy demand shock coming, and that is in the form of population growth, but also this explosion in data centers as well that is going to really ask for a lot of energy. Where the energy source is going to come from is a big question for the next decade.
Jumana, thanks so much. Jumana Bersace there at ADIPEC. Coming up, our interview with former British ambassador to the U.S., Nigel Sheinwald, on the eve of the U.S. election. That's coming up shortly, and this is Bloomberg.
is the Vivian Tom clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that just empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London. These are your top stories. With just one day until the U.S. election, polls signal a close race as the two candidates rally last-minute support in the battleground states. Now, the dollar falls the most since late August, while Treasury yields drop as some investors pair the so-called Trump trades. Plus, oil rises after OPEC Plus members agreed to delay a production hike, and as Iran is reported to be planning a strong and complex counterattack on Israel. Now, U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in opinion polls ahead of Election Day tomorrow. New surveys have them neck and neck nationally and across the battleground states that will decide the outcome. So let's get more from our Bloomberg senior writer, Stephanie Baker. Stephanie, thank you so much for joining us. When you look at the key takeaways, first, do you believe the polls, and how close are they?
Right. So if you believe all the polls, this is neck and neck, a dead heat. There are two theories of the case. One is that the polls are undercounting women voters and how angry they are with the Dobbs abortion decision and that they're going to come out in record numbers for Harris. The other theory is that actually Republicans are coming out in really strong numbers, that Trump has gotten historic support amongst male voters, increased support amongst black male voters, and that he could, win the day. So it's really hard to tell. There has been a lot of discussion that the polls are noisy because there are a lot of right-wing leaning polls in the mix that are relying on faulty data. So it's going to be really hard to tell. I will be looking at Georgia and North Carolina, the first East Coast states to be reporting. There'll be about 16 East Coast states closing at 7 p.m. Eastern time, midnight in London. And Georgia and North Carolina are, they count votes quickly, so I'll be looking at those polls and what they're indicating.
But Stephanie, this could be a very contested election, and it could take, so you're looking for these two swing states to kind of give us an indication, but it could take, I guess, many even weeks to find out who is president.
It really depends on how close this is. Yeah, if it is very close, we could be in for a long haul. Pennsylvania looks very close. There are already lawsuits over some registrations there. So it depends. If it's neck and neck and we're down to a few thousand votes, this could last for quite a while. What's clear is that I think the House race will take a lot longer to settle, as will the Senate. But I think that this could be a quicker result depending on the margin of error.
Stephanie, thank you so much. Stephanie Baker there, our Bloomberg senior writer with the latest on the U.S. Now let's get more on the U.S. election and bring in Nigel Sheinwald, former British ambassador to the U.S. from 2007 until 2012, for the perspective of how foreign countries are looking at this. Ambassador Sheinwald, thank you for joining us. When you look at Europe, when you look at China, who has the most to gain and win from a Trump presidency?
Well, I'm not sure that anyone has a huge amount to gain internationally from the Trump presidency, apart from maybe Russia. I'm sure that Vladimir Putin and Benjamin Netanyahu, perhaps in Israel, would be the two obvious ones who would see a Trump victory as to their personal and national advantage. But I think more generally around the world, perhaps even in China, there'll be concern about a second Trump term, because of the uncertainty and because of what he said on the campaign trail about his policies if he comes in. And I think it's very unwise for people to assume that there will be something of the Trump 1 effect of grown-ups in the room reining back some of Trump's instincts, although I don't think that happened as much as people now claim. Nevertheless, it seems unlikely to happen in a second term, where we'll have Trump unbound, a more vindictive approach, and packing the administration, and maybe jobs in the armed services and elsewhere, with people loyal to him, perhaps without the seniority and experience. So I think there's worry and anxiety around the world, particularly probably in Europe, where there's a direct challenge to NATO and a direct challenge to the support which Europeans have given to Ukraine.
President Trump has talked about tariffs even at 1,000%. He talks about borders. Are you most worried about security and what he would mean for NATO, as you mentioned, but especially for Ukraine?
I think that's probably the issue which is most on people's minds, is the possible disruption, undermining of NATO. Even if the United States stays in NATO, a United States which is not prepared to support and defend its allies, and which is undermining the sovereignty and the independence of Ukraine, is going to put it at loggerheads with its European allies, just at the point where the Europeans at last are starting to spend more money in defense. And even in Ukraine, the balance between the US and Europe in terms of military and other assistance is much more 50-50, or maybe even more overall, the Europeans putting in more. So the idea that Europe is still freeloading in the way that perhaps it was decades ago, I don't think is right today. But I think it's a more general thing. I think when you look at British and European positions on the big issues, on the Middle East, on climate, even on handling China, I think that there is just too much of a gap with Trump. We don't know what Harris's policies would in the end turn out to be. She hasn't been a particularly well-known figure internationally in the 4 years of the Biden presidency. That's not to her discredit, but she's been focused elsewhere. So we don't know exactly where it'll be, but it feels as though she would be a more conventionally supportive and internationalist president. I'm sure there will be nuances, for example, on the Middle East, which might bring her actually closer to European positions. But I think Europeans would be happier to have that level of uncertainty with her, generally speaking, than the huge uncertainties and likely divisions and conflicts with the Trump second term.
But, Ambassador, again, it does feel that even under Joe Biden, allies have had to fend more from themselves when it comes to national security, to international matters, and foreign affairs. So is there a fact that no matter who wins actually the White House, the Europe just needs to be stronger, and the UK needs to be stronger?
Absolutely, I agree completely with that. I think it's starting. I think it started after the Russian invasion of Crimea in 2014. It didn't start with Trump. The UK has been advocating for a long time for ourselves and for Europeans to step up our defence spending. And generally speaking, we are. The European Commission. The UK is not any longer part of the European Union, but the European Commission is putting a lot of emphasis on defence in the 5-year term, which it's just just embarking on. So I think that left to its own devices, Europe will continue down a more responsible path. And the question is whether it's given the time to develop its defense and security capabilities over the years ahead, or whether an incoming president precipitates a real crisis, which would endanger the security of the continent, but also give Russia a much stronger hand in dealing with the problems of the day. But I agree completely. I mean, Europe needs to change. The UK needs to continue really seriously on its path of increasing defence expenditure and being very serious on issues of international security. But I think the UK has a reputation for that. I think the problem is more on the European continent at the moment.
So, Ambassador, what's the right way in dealing with China in all of this turmoil? How should Europe look at China in, trying to maybe break away from the U.S. or fully align with the U.S. on what the right way, for example, on tariffs is?
I think that Europe has already moved, just as opinion in the United States on both sides has moved in the last 5 or 10 years to a much more hard-headed position, much more conscious of the national security, technological, commercial threats than perhaps was the case 10, 15 years ago. So I think that is happening. I think that Europe will always want a safety net in the relationship with China, in much the same way as I think the Biden administration is trying to achieve. The sense of avoiding unnecessary crises and conflicts, better understanding each other's bottom lines, seems to me to be an essential accompaniment to a tougher position on trade and technology, which the US has taken, and where Europe has overall followed. And I think a UK government, will be a partner for the United States, provided that it doesn't go recklessly into a conflict situation with China. So I think the goalposts have moved. There's been a shift in European as well as in American thinking on China, but we won't want to move to a position of complete confrontation. Nor do I actually think that Trump will. I think that Trump, wants to go hard on the trade side, and our worry on the trade side will be that excessive tariffs will trigger a much wider international trade war, which will be disadvantageous just as much for European and American citizens as it would be for anyone else in the world.
Is there anything that we're underestimating that Donald Trump would be good for Europe?
Well, I think his instinct for deals and for peacemaking can sometime, could conceivably come off. I don't think it did come off particularly in the first term. The initiative with North Korea did not work out because I think the Trump administration were too naive in their approach there. The Abraham Accords with Israel were potentially very, very valuable and far-reaching, but of course they missed out on the Palestinian track, which has now come to the fore and is indispensable if there's going to be a new alignment in the Middle East, which I'm sure the UK and Europeans would ultimately support. But no, I don't think that there is too much other than believing that he might pull a rabbit out of the hat in terms of a desire for negotiation and a degree of creativity which is needed if you're going to be an effective negotiator.
Thank you so much, Nigel Scheinfeld, there, the former British ambassador to the U.S. Now, coming up, Ryanair cuts its passenger outlook and it's blaming Boeing. We'll have plenty more on corporate stories. Of course, it's going to be a big week, not only for central banks, but politics with the U.S. election tomorrow. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
We were due to get 11 aircraft in the quarter between September and December. We've received 2 of those. I don't think we'll see any more aircraft this side of January or February. We look like we could be left short 10 aircraft, possibly more, into peak summer.
Well, that was the Ryanair Chief Financial Officer, Neil Sorahan, speaking to us earlier about the impact of Boeing delivery delays. Now, Ryanair is set to cut its passenger growth target for next year. The low-cost airline is blaming Boeing's ongoing strike and production issues. Now, in a moment, we'll also talk Berkshire Hathaway with Charlie Wiles. But first, let's get more on Ryanair with Bloomberg's global aviation reporter, Sid Phillips. So thank you both for joining us. Sid, what is Ryanair saying about growth?
So Ryanair is saying that they can't really grow as fast as they expected to grow next summer because essentially they aren't getting enough planes from Boeing. And Boeing's sort of struggling with production because ever since the strike, which is now, hopefully we're going to see a vote on that today, but since the strike, they haven't been able to produce any 737 MAX jets, and that is really crucial to Boeing's growth, to Ryanair's growth plans.
So what are the trends, I guess, on prices?
Mirinda ít đường hả?
$1 billion in the third quarter. Now, the conglomerate also cut its stake in Apple again, this time by about a quarter. Now, for more, let's bring in Bloomberg's Charlie Wells. Charlie, thank you for joining us. So when you look at Warren Buffett, he still hasn't anywhere to deploy his cash pile. He's just sitting on it.
I mean,
not literally.
It feels like it. I mean, $325 billion. You could buy most companies with that amount of money. But Berkshire Hathaway isn't even repurchasing their own shares. They didn't do that in the third quarter. They haven't not done that since 2018. And I think this just speaks to Buffett's view of valuations probably being too high, not only of his own company stock, but also in the S&P 500, right? Up 20% this year.
I mean, has he talked about a catalyst for either buying or selling off?
You know, he's patient, right? He talked in May about how, you know, they are happy to sit on the sidelines until they can find an investment that is low risk, but can also make them a lot of money. And I think the thing that differentiates Berkshire Hathaway is that permanent capital. So compared to a lot of other financial firms, they can really just wait this out.
Should we read something into the fact that they can keep on selling also Apple shares?
That was a really grabby point from their third quarter earnings report, that they had reduced their stake in Apple by 25%. And I think, you know, you could see this potentially as, you know, a little bit of caution on behalf of or by Berkshire, given Apple's been slowing down a little bit, particularly in China. But really, you know, their position there had just ballooned over the years. This feels like a trim and also an attempt to probably keep some potential tax hits at bay.
He hasn't talked about the U.S. election, right? He's one of the few billionaires that kind of stayed on the sidelines?
He stayed on the sidelines. You know, he has previously endorsed candidates, and I think something notable is that he's been quieter this election, and I think that's something that, you know, others have commented on other billionaires, but it seems like he's really kind of trying to stay mum there.
All right, thank you both for joining us. Of course, that was Charlie Wells and Sid Phillip talking about some of the big corporate stories that we're watching out for today. Now, coming up, traders prepare for a long night ahead of tomorrow's U.S. presidential election. We'll preview what investors should look out for. That's next, and this is Bloomberg.
The top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, or you support, it's often done in the name of good, have hurt the lower 20%. They're dying younger, their income didn't go up for 20 years. They're the ones who have more crime-ridden neighborhoods, their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
November 5th, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7, live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Traders and investors are bracing themselves to handle overnight volume and volatility after tomorrow's U.S. presidential election. Many trading desks are being staffed through the night. Joining us now to discuss Bloomberg's markets reporter Valerie Teitel. So, Valerie, it's very clear there was a Trump trade, and now it's being unwound a little bit. And there's a lot of, head scratching and saying, why were the markets